China is that in particular. So each of these countries will be impacted in different ways. But yeah, and that's what we got to keep in mind when we come to sort of country selection and how these businesses will be impacted.
Okay. Harold, really appreciate your time. Thank you so much, and may this conflict end soon.
Let's hope so. Thank you very much.
For all reasons, excluding not just the markets. But yeah, very well put by Harold van der Linden. I think the key point is don't expect the bounce back to lead markets back to levels that they were, because growth is impacted. Harold, can't put it any better.
Any better? I think, what we started off saying, that if the RBI entry in terms of intervention for the rupee would have come in, if the rupee had come to these levels without RBI intervention, markets would have read it well. But I think the markets read it really well, because you're back at 94 to the dollar.
Yeah. Well, maybe it's a good message to the speculative elements that Tiger Abhi Zinda hai. But with that, it's a wrap on this leg of India Market Open. From Hiral, me and the team that put this show together, thanks so much for tuning in. Ask Profit is up next.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this.
welcome to NDTV Profit. My name is Varsha. Well, Central Mine Planning and Design Institute is in focus on the back of company listing on exchanges today. Well, company offers consultancy and support services and also offers services across the entire spectrum of coal and mineral exploration and mine planning and design. But to speak more about it and what are the growth targets that the company has set for itself for next 2 to 3 years, I'm here joined by Mr. Chaudhary Shivraj Singh, who is Chairman and Managing Director at company. We have Mukesh Agrawal, Director Finance of Coal India, and Ashish Kumar, who is Director Business Development at Coal India. Well, welcome gentlemen, and pleasure to have you at NDTV Profit, and congratulations for your listing. Well, Mr. Singh, coming to you first, now that whole India will participate in your growth story, what are the target sets when it comes to central mine planning, considering your 2-year revenue CAGR of around 23%?
Thank you, Varsha-ji, and thanks to all your viewers, and thanks to all the investors who have posed their confidence on the growth story of CMPDI. CMPDI in the past 3 years has grown in revenue and profit at about 20% CAGR. And we are targeting to maintain this in next 3 years as well. So as we have already been telling about our growth story, which has the opportunity areas in exploration in not only in coal sector, outside coal also, and in downstream services of mine planning to finally closure of mine and rehabilitation of the mined out land. So that is how we are targeting that we will be maintaining our profit and EBITDA margins.
Understood. Got that point. Mr. Agrawal, coming to you on this, if you see the IPO is 100% offer for sale and the proceeds will entirely go to Coal India, how does Coal India intend to deploy these proceeds? Will be for debt reduction or capex or diversification, if any?
Yeah, madam. Actually, if you see, Coal India is always, from last 2-3 years, are deploying more than 16,000 crore rupees in the capex. And Coal India has made a roadmap of around 1 lakh crore rupees capex plan for the next 5 years, in which it works out to around 20,000 crore rupees capex will be there every year, and in which we had taken 4 streams for the gasified coal to gas, and renewable energy, thermal energy, and the critical mineral. So all these proceeds which we are getting from the IPO and the internal accruals will be deployed for the capex.
Understood. And Mr. Singh, how do you plan to structurally diversify company's revenue away from Coal India over the next 5 to 7 years, considering more than 66% of your revenue comes from Coal India?
Yes, so we have brought down our revenue depending only on the anchor customer from more than 80% to 66%. And again, as we are going with Coal India into minerals as well as going on our own to minerals, especially critical minerals and REEs. So that provides a lot of opportunity for us, and I am very much confident that the Coal India and government part, which is at about 90% at present, will come down to 70%, and will be having 30% of outside Coal India and government.
Well, that was the recent listing of Central Mining, largely a day which has been dominated on the downside, and hence stocks down 4%. And even the 40% EBITDA profile not yet enthusing investors, at least at this point of time. Hello and welcome. You're watching Ask Profit. My name is Puneet Zaveri. With me is Somit Sarkar, and we'll try and solve all your stock-related queries in the next 1 hour. So if you haven't already, do start sending them on the numbers that are flashing on the top of the screen. You can also call us. That number of the landline number is also on the top of the screen as well. Before we go to our guest, take your stock-related queries. A very, very quick check of the markets. The Gift Nifty did indicate a downtake of almost 250 points, and the market continues to be in that mode today, very close to a 22,500 mark. It's not in terms of giving any support at this point of time, so we'll continue to monitor those levels. But the heat map shows you the pressure that is on the banking index, led by some measures by the RBI. and hence all those banking index, HDFC, ICICI, all down. Kotak Mahindra Bank, Shriram Finance, Axis Bank, the top 3 losers for the Nifty 50. Bajaj Finance is also some of the other ones. So is SBI in the top 10 losers for the Nifty 50 at this point of time. The sectoral heat map also will reflect this pressure that's visible on the banking index and the other indexes as well. So you're seeing PSU Bank, Nifty Bank, as well as the private bank index and financial services, which are bearing the brunt of most of those losses. But realty continues to be down in trade today. India Defence down 1.4% as well. But very quickly look at the advance decline ratio. And it's not going to be a very pretty picture as well, because we're seeing a sea of green across spaces, across stock as well. So the advance decline ratio also will reflect that pain in the broader markets, and almost a 1:5 in terms of advances for now. It's almost 5 stocks declining for one that's advancing, and the BSE 500 also very quickly shows you that perspective. Now, individual stocks like KNR Construction buzzing on the back of our order win today, but IRB Infra also got a huge order win a few days ago, and that momentum has continued. NALCO continue to be in the uptrend today, but City Union Bank, Minda Corp, Delta Corp all down in trade today as well. But let me welcome in Saurabh Jain, Equity Head Research at SMC Global Securities, on the fundamental side of the show. Kunal Rambia, Fund Manager and Trading Strategist at The Streets, now joining on the technical. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first query from Mohit from Ludhiana. He is holding shares of NMDC at just 19 rupees per share. He's holding roughly around for those 500 shares. And his question is, shall I book those profits on that investment, or continue to hold for the next 3 to 5 years? Saurabh, welcome to the show. What would be your recommendation?
Hi, good morning. Thank you for having me on the show. See, we are quite bullish on the metal and mineral resources. NMD is one of the good pick out of the metal bag, and we see the prices are likely to move up, which will inch up the earnings and the margins for the company, and it is good to hold for the next 3 to 5 years.
From Andhra Pradesh is holding 233 shares of Ease My Trip, bought at a price of 21 rupees. He wants to know what's the long-term outlook on this counter, and should he buy on this on the dips that we are looking at currently. Saurabh, any view on Ease My Trip? Is currently sitting on a big loss here.
See, I think the management has gone wrong on various its strategies, and there were some corporate governance issues were also there, and the stocks have been languishing and underperforming for the last so many quarters. Now it has reduced to, I guess, in a small cap category, or maybe micro cap category. There is no point in sticking with this stock. In my opinion, it is better to get out.
Better to get out of Ease My Trip is what Saurabh recommends. But the next question is coming in from Sanjay from Bengaluru. He wants to average IRFC as well as Texmaco Rail. So he holds both of these counters. He's not mentioned his buy price, but Kunal, welcome to the show. Would that be your recommendation? Would you recommend Sanjay to average both of these counters at this point of time?
Good morning. So if I look at IRFC, again, this counter is absolutely underperforming, and we saw the highs of around 225, 230 somewhere in July. Counter is now trading at 90, and in spite of such a massive correction, there is no sign of bottom formation so far. So I'll suggest to stay away from these counters. I'm not saying to sell, but right now, wait for the consolidation to happen. V-shaped recovery is anyway rolled out. So once we see some kind of consolidation, we can take a call on averaging out. So for now, just wait on the position which you're holding rather than averaging at this level.
Kunal, the next query is for you, and it's from Balaji from Chennai. He wants to know, can he buy Sundaram Finance at current levels for the next 3 to 6 months? Any target that you could suggest, Kunal?
So on the Sundaram Finance chart, again, since I guess Jan 2024, this counter is sideways consolidating. Recently, it has come down from 5,600 to 4,400. This is a massive correction. Now it is reaching near the previous bottom of 4,300. So yes, if the counter consolidates near the present level, one can think of initiating a buy with the stop loss of 4,300. But at this point in time, where the counter is trading 3.5% lower even in today's trade, avoid buying at this level, but watch out for the levels of 4,300 as a strong support.
Got the view, Kunal. But the first call for today, dialing in from Hyderabad, Chandu has a stock query for us. Chandu, good morning. Welcome to the show. What's your query?
Very good morning. Very good morning to all. Yeah, my query related to Shriram Finance. I have like 500 quantity at average price of 678.
Okay.
I'm a long-term investor, but it went to around 60%. I got it, but I'm unable to book profits and all. But I wanted to hold a long-term view. Will I book and I move to some other stock, or it's going down now?
Got it. Well, Chandu, this is a very pertinent query. Consistently this particular counter. But Saurabh, what do you make of what's happening with the CV financiers? Right, we're seeing pressure on Chola, seeing pressure on HDB Financial as well. Is there any structural play for the CV makers, or is it that the larger, broader market correction is hampering all these stocks? And what would you recommend Chandu to do?
I think it is the mix of both. It is the broader market corrections which are, getting down stocks even from the stronger baskets also. And there is also a concern for the market that maybe going forward because of the higher crude prices, which may impact the industry and all, may taper down the demand going forward. So for that matter, I think there is a bit of pressure. But in case with respect to the Shriram Finance, I think they have done a recent deal, and the outlook for the next 3-5 years look quite optimistic. Since he has talked about next 3, 4, 5 years, then I'll suggest him to take a longer term view and keep holding your stock. Otherwise, I think in the short term, many investors have lost money in the short term. So I think there is no point in looking at the current market scenario. Stick with your investment with the next 3, 4, 5 years.
Okay, the next query is coming in from Kotresh. He wants to know whether can he buy Lodha developers at the current market price. Any targets that you could suggest on this, Kunal?
So it's a linear decline. In fact, in the last 1 month, this counter has come down from 1100 to 680, and still there is no respite on it. So avoid buying such counters. I'm not denying the support which we might see near 550, 560 levels, but why to catch the falling knife, right? So wait for some kind of consolidation and think of initiating a buy at that point in time rather than just catching the falling knife.
Got the view, Kunal. The next question, that's coming in now. It's from our viewer Udit from Mumbai. Udit, good morning. Welcome to the show. What's your query?
Good morning, gents. My query is on EPAC Prefab. I've been continuously following your narratives about these shares, and I know the fundamentals are strong, but over the last couple of weeks, this is sort of going down. And is it worthwhile to catch the falling knife now, or wait for these things to go down and then try to average it out?
Got it, Udit. So your pertinent query is on EPAC Prefab. Is that correct? And you're asking if it's pertinent to average down at this point of time within this particular counter. Would that be correct?
That is the correct reasoning, Puneet.
Okay, but Udit, your buying price at 109. I can see that the 52-week low is also what's hit today. So how did you buy it at 109? I think the IPO price was also over 190 to 200 rupees, right?
No, I got that wrong. I think I'm falling on a loss, Puneet. That figure which I told to NDTV Profit is wrong. I'm on a loss now.
Okay, you're in a loss. So what would be the average price you're holding this counter at, EPAC Prefab, right now?
200.
200. Okay, got it. Saurabh, this counter post quarter 3 results has continued to be weak, right? Should Udit continue to hold, maybe wait for quarter 4 results to just get some perspective from the management? Would that be your view?
I think yes, he may choose to wait for the March quarter earnings. It is a recent earnings, and the confidence usually comes after 3, 4, 5 quarters when we see the results after the listing and the kind of the management commentary, whether the management commentary is matching up with the result coming out or not. In this case, I think it is too early to make a comment. I think it will be wise to wait for the March quarter earnings.
The next query is coming in from Murthy from Vishakhapatnam. He's holding 50 shares of Amara Raja, bought at a price of 1,150. He wants to know the long-term view. Should he average or exit? Saurabh, any view on Amara Raja?
I think while the space is good, but I think in the short term, what is happening with the commodity, I think commodity started running even before this war broke out. And I think this is the material cost which may be disturbing all these companies. In the short term, I think the pain should be there. I think the earnings and the margins will continue to bleed. So in my opinion, I think it is better to get out in case you get any opportunity.
Got the view, Saurabh. But the next question that's coming in, it's from Rajesh Maheshwari from Indore. He is a regular viewer. Asking on a counter that has been beaten down, bruised, name it, it's Ola Electric. He's holding roughly 1,400 shares, bought at 49 rupees per share. He's asking, in the present scenario, does it make sense to stay invested or exit out of this counter or move on? Saurabh, let me come back to you because the financial year is almost ended and it seems to be like at least a 30 to 40% volume decline is expected in FY26 for the company. Is this the bottom? Would you suggest continue holding since he's bought it at 49? What would be your view?
I think in the market, the stock price generally goes up when there is an enthusiasm, and enthusiasm comes from the earnings. When the earnings are seeing erosion, how the stock price can go up. I think there is no point in chipping. Otherwise, also there have been quite issues with their management and their guidance also. So market has no confidence in this company, and that is why we are seeing the stock price cooling off in the last so many quarters. I think, in my opinion, it is better to get out.
Next is a caller query coming in from Bangalore. Mohammed, you can go ahead and ask your query.
Hi, good morning to you all.
Good morning, Mohammed.
I have Azad Engineering, bought it at the rate of 1,551 average price, around 50 stocks. I want to know what is the short-term view on this and what should be the stop loss?
Kunal, short-term view on Azad Engineering, any stop loss if you could suggest?
Absolutely. In fact, this counter is consolidating in a broader range. The support on the chart, which I can see, is around 1385, and at the same time, resistance is at around 1900 levels. I think last week only it hit the exact support level of 1360. So consider that to be a good stop loss. 1360 can be a good stop loss. One can think of, in fact, buying this counter because the risk reward ratio is favorable and that support is not broken since 1.5 years. So yes, it can be bought, and if our viewer is already holding, I think 1360 can be the good stop loss, and the targets can be around 1800 levels. Now, this is again on a weekly chart, so it's a positional target.
Positional target from Kunal coming in on Azad Engineering. But next question is coming from Tulsi from Hyderabad. Again, a question that we've been getting quite a bit on HDFC Bank. Now, Saurabh, she's asking if it's the right time to buy into this counter. Now, you've seen the RBI measures have an impact on the stock, so it's trading at levels that we've not seen for the last few years. Are you in the camp that suggests buying HDFC Bank in one go in a staggered manner? What would be your recommendation?
I think at this point in time, I would not be a contrarian with respect to the market. I would suggest, I think it is better to let it go. Do not chip into the HDFC Bank. Maybe there are some issues which investors are not being privy to. I think instead of chipping into HDFC Bank, I think ICICI Bank looks much promising in the private sector space.
Okay. The next query is from Venkat Ramanan from Bangalore. He's a senior citizen. He is invested in multiple banks: Bank of India, Equitas Small Finance Bank, Yes Bank, and IndusInd Bank. Currently, he is sitting on a loss of around 10 to 15% in each of them. He wants to know which of these can he add, exit, or hold. Saurabh, any view on Bank of India, Equitas Bank, Yes Bank, and IndusInd Bank? Which should he hold, which should he exit, which should he average?
In my opinion, I think he should exit Equitas, IndusInd, and the other name you said is?
Yes Bank, IndusInd Bank, Bank of India, and Equitas Small Finance.
Apart from Bank of India, I think you can sell all the remaining three. And if you would like to be in this space, I would suggest you to go with the maybe Indian Bank and ICICI Bank.
Got that view. So Saurabh's definitely not liking a lot of those banking names this morning at this point of time, barring something like ICICI. And got that view, Saurabh. But the next question coming in from Zakir from Dubai. He's holding shares of transformers and rectifiers bought at roughly around 280 rupees per share. He wants to hold for the next 6 to 12 months. Kunal, would you recommend that? Any targets that you can give for Zakir?
So on the transformers and rectifiers chart, if I look at the weekly chart, this counter is consolidating well between 230 levels to 330 levels. But on the daily chart, yes, it is now again, breaking this small minor consolidation. So the good support, which I just mentioned, is 230. I think that can be the level to watch out for. If he gets the opportunity to buy near those levels, he can think of averaging out also. And again, the positional targets on that can be 325 to 330. But at this point in time, which is at 259, I think we should wait for the price to come near those extreme levels to have the favorable risk reward ratio.
Okay. The next query is coming in from Mahesh from Andhra Pradesh. He's holding 67 shares of Tata Tech, bought at an average price of 727. Should he continue to hold this counter for long term? Saurabh, any view?
See, we have a very negative view on the IT sector, and with respect to the Tata Tech, the company has seriously disappointed over the last many quarters. I think that is why the stock has been languishing. There's no point in sticking with it. I'll suggest an exit.
Got that view, Saurabh. But the next question on ADF Foods. Now, Sonu Kumar from Haryana actually bought it at 182, currently sitting on a loss. Kunal, what would be your recommendation on this particular stock? Should he continue to hold? And I know you're against averaging, but what would be your view?
See, now counter has come down from 350 to as low as 150. And if I look at the January 2023 lows, December 2022 lows, those were around 140, where the counter consolidated for quite a long period of time. So yes, now it is reaching near that support level. Advisable to hold on for now with the stop loss of 140. And again, as I mentioned earlier, if counter consolidates near this level of 140 to 160, one can think of initiating a buy, but wait for a while. I think this support level should be held. Looking at the volume activity, it's a bright possibility.
Very interesting, Kunal. But viewers, Saurabh as well as Kunal, time now for the rapid fire round in this edition of Fast Profit. Request you to keep your answers on buy, sell, and hold. The first question coming in from Meher. She wants to know about IRCTC now that the stock has hit a 52-week low. Kunal, what would be your view?
Avoid it.
Rani from Tripur wants to know whether should she buy Nalco for the next 2 months. Kunal, any view?
Again, avoid it.
BHEL bought at 272. Saurabh by Ramesh. What should he do with his 485 shares at the current juncture?
Keep on holding.
Anil Singh wants to know whether is it a good time to buy PCBL Chemical. Saurabh, any view?
Avoid.
Hindustan Copper bought at roughly 470 by Sunil. A view, Kunal, on this counter?
Support is 450, hold with the stop loss.
Murli Mohan from Kerala has bought 2,000 shares of Suzlon at an average price of 60 rupees. Can he buy more for the next 6 months, Kunal?
Consolidation phase, support is 39. Think of buying with that stop loss.
Kamlesh is holding 500 shares of Samman Capital at 155. Saurabh is asking, in view of the acquisition by another company, what should he do with this counter?
Hold.
Abhirup is holding 235 shares of Bank of Maharashtra at an average price of 64 rupees. Can he continue to hold this counter for the next 5 years, Saurabh?
Hold.
Between SBI as well as Canara Bank, Saurabh, since we are wrapping up the banking discussion with you, what would be your view for Kaushik? Is this good to buy now?
I think go with the both.
Siva from Amravati is holding 2,000 shares of IRFC, bought at an average price of 200 rupees. Should he sell or wait for the next 6 months, Kunal?
Exit.
We got the fundamental view on HDFC Bank, Kunal, but on the technicals, this is a good time to buy, is what Akhilesh is asking.
Absolutely, I'm very comfortable with the present level. The consolidation breakout is 775. Look at the buying above that level.
Sunita from Hyderabad wants to know whether is it a right price to buy Sirma SGS for long term, Saurabh?
Yes, you can buy it.
Colgate, Saurabh bought at 2213 by Sudhir. What should he do with his 195 shares now?
Keep on holding.
Chandra from Bangalore is holding the shares of DCX system. Should he hold it for short term, Kunal?
Exit.
The next question, that's coming in, it's from, let me pull up this counter. It's on Suzlon actually, bought by Murli Manohan. He's holding 2,000 shares at 60. What would be your view, Saurabh?
Hold for the next 3 years.
Okay, Alkesh Devidan is holding shares of ICICI Bank at an average price of 1,366. Should he buy more at the current level or any other price that you would suggest, Kunal?
Absolutely, buy with the stop loss of 1,200.
BEL bought at 408. Saurabh, what should Mr. Sharma do with this counter now?
Hold for long term.
Got it. Well, that's the end of the rapid fire as well as the first first round of the rapid fire as well. But viewers, stay tuned. Kunal, we'll let you go on that note. Thanks so much for joining in. Saurabh, stay with us. A lot more stock-related query, viewers, on the other side of this very short break.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries. You can also call us, talk to us directly for those stock-related queries with us, with our guests as well. Before we move on to those, a very quick check of the BSE FNO setup for today, because we continue to see pressure on the markets. The Sensex also shows you that at this point of time in terms of stocks, because that has been the key aspect, right? A lot of those stocks in the banking space continuing to be under pressure. Axis, Kotak, Bajaj Finance, Finserv, SBI, top 5 in that space down in trade today. Even in the gainers, very, very minuscule to forward trend. So continuing to be under pressure for now, down 1.4%. Apart from that, also, you are seeing the BankX also continuing to be in a similar trajectory for now. And the banking index, basis of what you're seeing on the Sensex heat map also continues to be under pressure today. So continuing to see those stocks which will be hampered, and the banking names and the Nifty Bank will be something to watch throughout the day. In terms of long build-up, you're seeing Nalco as well as SAIL continuing to show momentum today. Short covering seen across Hindalco and Coal India. Now, Coal India, you also had one of its subsidiary lists today, so potentially could be a trend, but only up 1.4%. In terms of long unwindings, though, you're seeing Syngene feature on that list. So is L&T Finance. While a build-up of shorts seen yet again, and no surprises here in terms of the banking names. So continue to track all of these names, but let me welcome Ajit Mishra, SVP Research at Religare Broking on the technical side now, and Saurabh continues to stay with us. Ajit, very good morning. Thanks so much for joining in. Before I come to you, let me just go across, take the next stock-related query. It's coming in on Indigo from Nitish. Now, he wants to know a short-term outlook and if it's the right time to enter. Ajit, given the volatility, is it visible on the charts as well? What would be your recommendation?
Yeah, good morning, Puneet. So yes, the stock has corrected considerably from the record highs. We are currently hovering around the key support area of the long-term moving averages on the weekly chart, which placed around 3940, 3950 zone. But still, the crude is still a headache, not only for the airlines, but for the other related stock sectors like, paints and tires and all. So that is what reflecting that every recovery or rebound attempt is usually attracting selling pressure, and the stock is still hovering below its short-term averages. So in my opinion, if the view is short-term, one should refrain from any aggressive buying in the related sectors. And for Indigo specifically, wait for a decisive break or a recovery above 4300 mark for any fresh buy.
Okay. The next is a caller query coming in from Bareilly. Arvind, you can go ahead and ask your query.
गुड मॉर्निंग सर मार्केट की हालत तो बहुत बुरी है। मेरा क्वेरी था, मेरे पोर्टफोलियो में एक शेयर है शक्ति पंप करके, मैंने 557 के रेट पे ले रखा है सर। अभी मेरे पोर्टफोलियो में 15% गिरा हुआ है, तो मैं इसको एवरेज करना चाह रहा था। क्या और भी गिरावट देखने को मिल सकती है जिस हिसाब से मार्केट है, और आप लोगों के और भी मैं शो देख रहा था, तो कहीं पे ऐसा तो लगता ही नहीं है कि मार्केट यहाँ से रुकने वाला है। तो
अच्छा, आप ये शेयर लॉन्ग टर्म के लिए होल्ड कर सकते हैं बराबर?
लॉन्ग टर्म देखिए सर ना, कि अगर लॉन्ग टर्म बोलते हैं ना, तो मुझे अपने गुरुजी की याद आ जाती है। उन्होंने मेरे को जो उन्होंने स्टॉक मार्केट सिखाया था, उन्होंने कहा मार्केट में कोई श्योर थिंग नहीं होती है, इवन एज एन कॉन्डम भी अनसेफ रहता है। तो उसी हिसाब से मार्केट की हालत है, अर्निंग्स तो आएंगी नहीं कंपनियों की।
ठीक है सर, बट आप लंबे टाइम के लिए होल्ड कर सकते हैं कि नहीं, वो बताइए।
तो मैं मैक्सिमम 3 साल के लिए।
3 साल के लिए, ठीक है। सौरभ, एनी व्यू ऑन शक्ति पंप? शुड ही एवरेज एट द करंट लेवल एंड होल्ड फॉर द नेक्स्ट 3 years?
देखिए, मार्केट में जैसे आपने बताया अनिश्चितता बनी हुई है, सेलिंग बनी हुई है, स्टॉक्स काफी गिर रहे हैं, और खासकर वहां पर ज्यादा सेलिंग आ रही है जहां पर अर्निंग इरोजन हो रहा है। शक्ति पंप के केस में वैल्यूएशन भी ज्यादा था और अर्निंग इरोजन भी हो रहा है। अगर आप लास्ट के कुछ क्वार्टर देखेंगे तो नतीजे अच्छे नहीं आ रहे हैं, डी ग्रोथ हो रहा है, तो मेरी सलाह से आप निकल जाए इसमें से।
Got that view, Saurabh. So an exit is what Saurabh recommends at this point of time. The next one, Saurabh, also coming back to you, is on ITC. Our viewer Jayesh actually holds 10,000 shares, bought at 350. So currently sitting on a considerable loss. Seems to be that he might have bought post what we see in terms of the cigarette price hike. Now, what should he do with this Saurabh? Because he is, of course, holding a considerable number of shares. Would you recommend him to average down now, or what would be your view?
First of all, I think the recent hike was enormous. I think there has been a hike of I think in the range of 20 to 40% in the case of cigarettes, which is not well taken by the markets. And in fact, in the days to come, we'll see how when the March quarter earnings will come, how it has impacted the company's volumes on the cigarette side. In my opinion, I think the market has taken cognizance of the fact, and that is why the stock has been hammered down since that hike has come. So in my opinion, I think there is no point in getting average of such a huge quantity. Rather, I would suggest him to better, I think, reduce his position and maybe look for the space in the metal and banking sector.
The next query is coming in from Anuj from Delhi. He's holding 1,000 shares of Suryodaya Small Finance Bank at an average price of 121. Any outlook on this, Ajit, Suryodaya Small Finance Bank?
So, Sumit, this stock is still lingering with a negative bias for almost several months now, though there were multiple attempts of recovery, rebound in between. The stock inched toward 150 mark, but it couldn't sustain. The good part is that he have bought it at recent levels. So my recommendation would be to exit and sit on the sidelines, let the stock stabilize above, let's say 145 mark or a dip towards 100, not in between.
Got that view, Ajit. But the next question, it's coming in on KIMS, Krishna Institute of Medical Science, and our viewer Suresh Nair from Hyderabad is actually a long-term investor. He's holding shares at 702, so currently sitting on the loss. Ajit, how do you view KIMS? It's also done a recent 1,500 crore QIP to reduce debt, but seems to be that Suresh might have bought it at a little elevated level. What would your recommendation be to him?
So Puneet, if you see that at the early of this calendar year, the stock rebounded very swiftly, means from roughly around 560 to 760. It was very close to the record highs. But after that, we are again seeing that the stock is witnessing pressure in line with what we are seeing across the board, and especially in the healthcare basket as well, which were holding strongly earlier. But across the board now, we have started seeing correction, be it Apollo, Astra DM and all. Comparatively, it still looks better if we compare it with the other spaces wherein the damage is average 40 to 50% from the record highs. So I believe that there could be a possibly consolidation around the current area. Maybe 580, 600 could be the zone where the stock might stabilize before the next leg of the up move. So fresh adding or adding to your existing position is not recommended, but yeah, you can continue to hold your longs with 580 as a closing stop.
Divya Divya has bought 150 shares of Swiggy at an average price of 396. She wants to know whether should she hold this counter for the next 3 to 6 months. Currently, she's sitting at a heavy loss here. Ajit, any view on Swiggy for the next 6 months?
So Sumit, the stock is trading at the record lows. Means earlier that in the month of May, around 297 was the previous record low, and we've decisively breached that mark, and it's gradually inching lower with every passing day. So there's no sign of recovery. I understand that she is sitting on losses, but since the market tone is negative and the stock is already at 52-week low record lows, the prudent approach is to look for exit opportunities. So in case if there will be any bounce, let's say towards 280 to 90 levels, you should consider exiting. In the interim, do maintain a stop at 250.
250 would be a stop is what Ajit is recommending. Down and out discounter yet again over the last few months. But Ajay is calling us actually now from Mumbai with a stock related query. Ajay, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. I wanted to know about Indigo Paints. Is it the right time to accumulate Indigo Paints, or should I wait for some more time?
And Ajay, do you have any other paint counter in your portfolio right now?
No, nothing in paints. Nothing in paints.
Nothing in paints. Got
nothing
it.
In paints.
Saurabh, we've seen price hikes actually, and we broke the story on NDTV Profit this morning by Berger Paints as well as Asian Paints. Indigo is differentiated in terms of the way they report numbers, also volume as well as value separate for all categories. So, would you recommend Ajay to buy into this counter now?
I think it will be a contrarian buy, but yes, after the news of price hike, I think by the Asian Paint and the other companies, I think some kind of a sanity should come into the prices. And on the valuations side also, since it is a smaller company and the valuations have also become more attractive now. So I think if you have a horizon of maybe more than 1 year or 2 years, then you can chip in.
Okay, the next query is coming in. From, he hasn't mentioned, the viewer hasn't mentioned his name, from Vedant, and he has bought few shares of IFL Finance at a price of 505 for the he wants to know whether should he continue to hold this counter for the next 2 to 3 years. Saurabh, any view on IFL Finance?
Not particularly on the IFL Finance, but yes, overall on the bank and NBFCs, we are positive, and for the next 2 to 3 years, it looks positive.
Looks positive for now, according to Saurabh. But taking across the next query now, Mr. Lobo actually is holding shares of REC. Now, we've discussed this, stock over the last few weeks between the merger between REC as well as PFC, but he holds roughly 10,000 shares and he's sitting at a profit of 1.9 lakh rupees as of now. Now, REC has come off quite a bit since this impending announcement. Saurabh, if he still wants to hold, would you recommend him to book profits for this one and maybe buy into PFC? Would that be a better play?
Yeah, of course, that would be a good play. And from both the stocks, from the valuation standpoints, looks attractive, and there is a good dividend yield play also. And the growth should be there for the next 3-5 years, close to 14-15% CAGR.
The next query is coming in from Akhilesh. He wants to know, whether is it a right time to enter Graphite India for the next 2 to 3 years. Saurabh, any view on Graphite?
Metal space is looking interesting, and it is more of a related play. So yes, he can chip in.
The next counter that's coming in is from K Guru from Chennai. He wants to buy into Power Grid and Coal India for the next 2 years. Saurabh, would you recommend that, buying the stock now?
I think you can chip into the Coal India, and with respect to the Power Grid, I would suggest better to look for NTPC.
Okay, the next is a caller query coming in from Bangalore. Venkate, you can go ahead and ask your query.
Yeah, very good morning, gentlemen. I've been a regular viewer of your show. You have been doing a very good job. And my query is regarding, Mahindra and Mahindra Finance. Okay. This stock I recently bought about 3-4 months back, and because it has been backed by Mahindra Automobiles, which I have been making a good money, I bought it. And my buy price is on an average 306.
So can you hold this counter for long term?
Yeah, I can hold it for long term, and I hold 250 numbers.
Okay.
Is it a good stock to hold for a long term, or I should get rid of it?
Okay. Saurabh, should he hold the M&M Finance for long term, or should he move to some other counter?
I think a lot of volatility is there in the. in the company's financials, and if you look in the last few months, the stock has been underperforming consistently. In my opinion, I think it is better to get out and switch to maybe in the banking side, maybe a stock like Indian Bank.
Indian Bank, got it. Well, the next one's on Geo Finance. Ajit, our viewer Ashish actually bought it at 304. What should he do with his 300 shares? Is it a good time to average down?
So Puneet, in case if the view is short term, definitely I would not recommend averaging down, considering the overall market tone and its volatile swings also that the stock has experienced in the past. As of now, indications are in the favor that this decline may further extend in case if it fails to hold this immediate swing low close to around 224, 223. So that then probably maybe around 220, 215 is something the stock might test. So since you have bought it at higher levels, my recommendation is to wait and let the stock stabilize. In the interim, 220 should be your closing stop loss. In case of rebound, the first hurdle could be close to around 245 to 46. So around that area, I should review his position.
Okay. Ashok Reddy from Vijayawada wants to know whether should he continue to hold Quest Corp and Sterling Wilson Solar for long term for the next 2 years. Saurabh, any view on both the counters, Quest Corp and Sterling Wilson?
Negative.
Okay.
Negative on either counters. Got it. Well, the next question coming in, it's a space that's doing well today, the sugar space. And Neha from Bangalore actually wants to know 1 to 3 month view on these stocks. Ajit, does today's rally show some legs, or is it too early to call out this momentum as of now? Would you recommend that to enter Dwarkesh or Dhampur Sugar at this point of time?
So Puneet, we all know that the recovery or the move in sugar space is largely cyclical, and in case if you end up holding these counters for longer duration without any stop losses, you might end up holding it for several years. So in my opinion, it's prudent to avoid any fresh position in these counters. In case if somebody is looking for only for sugar space, then Balrampur is a better candidate. Means if you see that the stock is still holding up with all the major averages and very close to the record highs also. So comparatively, it looks better structure. So with stop at 468, one can look for Balrampur as a candidate in this space.
Okay. A caller query coming in from Ludhiana. Suresh, you can go ahead and ask your query.
Hello.
Yes, Suresh.
Hello. Good morning, sir.
Good morning.
I am holding the IRCTC shares at the rate of 804 last from 1.5 years.
And you can continue to hold this counter for more than 1 year?
Yes, I can continue for more than 1 year. My question is whether averaging this stock can help me to exit in a decent price when there is a recovery in the market.
Okay. Saurabh, should Suresh average IRCTC at current levels or continue to hold or just exit?
I would not suggest certainly to average it down, and in my opinion, I think he has bought when there was a PSU rally going on and the valuations were high. And in fact, even after the correction, I think the stock is still hovering around 8 times to book value, which suggests that the stock is still not that cheap. So maybe a hold would be a good option for him.
Hold on IRCT is what Saurabh would recommend. The next counter is Nalco, and Vani actually holds shares at 165. Ajit, she's holding 400 shares, so she's almost doubled her money at this point of time. Would you recommend exiting, booking those profit and taking it home? Is that something that you would recommend, Ajit?
So metal as a pack, Puneet, largely, some of these stocks like National Aluminium, Jindal Steel, JSW Steel, they have done exceptionally well, VEDL including that list. And the good part is that National Aluminium is still holding the ground, means during the corrective phase, the decline is nominal, and we're largely seeing more of time-wise correction instead of price-wise correction. So at least, partial profit definitely can be considered in case if this stock is a considerable portion to his overall portfolio, and maintain a trailing stop at 340, which is the recent base now. So with that, she can continue. Next leg probably once, let's say, we cross 410, 420 levels, then probably around 480, 500 is something that the stock might inch towards in the coming months.
Arvind from Mumbai is holding 2,000 shares of Canara Bank, bought at an average price of 160. He wants to know whether the share prices could touch around 180 levels by next year. Saurabh, any view on this?
On the banking space, Canara Bank in particular, good on valuation, and the strength is there on the balance sheet. Good stock to hold for the next 3-5 years.
Got the view. Well, Satyan is asking the next question to us. He is, of course, a regular viewer. Now, he's asking on Sirma, but we've already answered that. So, Hyundai is the other one. Now, Saurabh, we seem to be seeing a very corrective phase on Hyundai, right? All the way up from 28 to 2,900. Stocks now hit 1,771 today. What would your view be? Is it largely that the sales growth not being adequate compared to some of its peers is now having a hampering, and the momentum forward also doesn't look that impressive? Is that your read also on the stock? Because seems to be a considerable pain in this stock, right, for the last at least the last month or so.
You're absolutely right. I think there is a peer pressure in terms of volume growth, what Hyundai is experiencing, and moreover, the growth per se for the industry is also tapering off now, and now the commodity cost is also rising, and the fuel cost is also likely to rise after some state elections. The way the crude is moving up, and so there is a added pressure on the automobile space. I think it is better to get out from Hyundai in case you get an opportunity, and maybe park your money in the metal and banking space.
Raj has bought 50 shares of Jindal Steel at a price of 1,350. He wants to know whether can he add more at current levels for the next 2 to 3 months. Ajit, any view on Jindal Steel?
So like Sumit, we were discussing about metal counters holding comparatively well, and Jindal Steel also has retraced from its record highs, but still we are holding above its major averages on the multiple time frames. So this gives us comfort that probably around this area, close to 1,080, is something that the stock might hold amid this corrective phase. So you can continue to hold, avoid averaging at current levels, and in the next leg, a decisive break above 1145 could trigger the next leg of the up move. So around that area, he may consider adding in case if he wish to. But at current levels, he can continue to hold with 1,080 as a stop.
1145, a key level to watch out for JSPL according to Ajit. But Saurabh and Ajit, as well as the viewers, time off for the second round of the rapid fire in this edition of Fast Profit. You guys know the drill. First one's coming in from Dennis from Kerala on Tata Motors commercial vehicle, Saurabh. Another counter that's now slipped below the 400 mark as well. Would you suggest buying now in this counter?
Avoid.
Neeraj is holding 50 shares of Dixon Tech, bought at a price of 10,200. Ajit, should he continue to hold this?
Yeah, hold with 9,200 as a stop.
ABFRL bought at roughly 254 by Lalita. What should he do with this counter, Saurabh?
Hold.
Ravi from Mumbai wants to know whether is it a right time to buy Max Healthcare for long term, Saurabh?
You can buy.
KPIT Tech bought by Siju at 655, Saurabh. He wants to know a 3-year view on the stock.
Negative.
Gunit from Mumbai wants to know the short-term view on Bajaj Finance, Ajit.
Short-term looks sideways, 770 stop.
Within the defense space, is it a right time to buy MTAR Tech, Saurabh?
Avoid, rather go for Bharat Electronics.
Sudhir is holding 195 shares of Colgate, bought a price of 2,213. Should he continue to hold this for long term, Saurabh?
Hold.
Edelweiss Financial, Ajit, we've not discussed this stock for a while, is what Shashi is asking. Should he buy into this counter now?
It do have support at 97, but wait for a sign of recovery. Buy only above 110.
Mahalakshmi is holding few shares of DLF, currently sitting on a loss. Should she continue to hold this counter for long term, Saurabh?
Exit.
Another huge performer, HUL, Saurabh. Our viewer wants to know if it's a good time to add now with almost zero returns for the last 5 years.
I think better go for Dabur or Marico.
Ramesh from Bangalore is holding 16 shares of Coforge, currently sitting on a loss. Should he continue to hold this, Ajit?
Just for a rebound with 1,050 as a stop loss and around 1,250, 1,300, review the position.
We discussed EPAC Prefab, Saurabh, but on Interarc as well, Anthony wants to know if it's a good time to buy for the long run.
Avoid.
Venkat Ramani wants to know whether should he buy Time Technoplast at the current level for long term, Saurabh?
Avoid.
Amara Raja, Ajit bought at roughly around 1,036. What should Dilip do with this counter now?
Trend still looks negative. Marginal support at 640. So use recovery around 710, 722. Reduce your position.
Arjun from Bangalore wants to know whether is it a right time to buy Force Motor, Saurabh?
You can buy.
ACC bought at roughly 2,600. Ajit, what should Priyanka do with this counter?
See, hold, but avoid averaging. Let the stock stabilize. So maybe close to around 1,200, we might find support.
And viewers, of course, standard disclaimer, the channel that you're watching is, of course, part of the Adani Group, and so is ACC, as we discussed right now. The next one that's coming in, it's on FIEM Industries. Saurabh, I think we've discussed this before, but would you continue to have a positive view on the stock?
Yes, it's a hold.
Manohar from Pondicherry is holding 5 shares of L&T, bought at a price of 3,800. Is it a right time to add more, Saurabh?
Avoid.
IDFC first, is it a good time to buy is what our viewer is asking, Saurabh. What would be your view?
Avoid, rather go for Bank of Maharashtra.
Raghav from Hyderabad is holding 40 shares of Varun Beverages, bought at a price of 420, currently sitting on a loss. Any short-term view on this, Ajit?
Use recovery to reduce 410, 420, strong resistance.
ITC Hotel bought at 194, Ajit by Suman. He's actually asking if he should sell it today and buy it again in a couple of days. What's the momentum in the near term?
Momentum definitely looks negative. He can do so.
Got it. Well, that's the end of the rapid fire. Ajit and Saurabh, as well as the viewers, thanks so much for sending in your queries, and thank you to Saurabh and Ajit for helping us solve all of this. And because we've solved a considerable number of 80 queries in this last 1 hour. A lot more stocks related queries at 2 p.m. for the afternoon edition of Ask Profit. But viewers, all the time on this edition of the show, thanks so much for watching. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? Outlook.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me.
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put focus on that one company that is on our radar today. We've seen broader market correction, but Nifty Realty as a space has been hit the hardest, and hence a company from that index, a company in the real estate space, and we're talking about Marathon Nextgen, a Mumbai-focused real estate developer, largely residential as well as commercial projects is what they operate, with the portfolio spanning across the affordable premium luxury as well as the commercial and the retail space. So you get the whole gambit with this particular company. Did turn net debt free as of Q3 of FY26 with a very interesting QIP that the company did of almost 900 crores raised back in June and July. That has had an impact on the shareholding of the company, and we'll get to that, one of the parameters, in just a bit. But a 5-year profit CAGR of almost 43% has been quite strong at this point of time, given the post-COVID rush as well as sustenance of the same as well. Profit have also expanded consistently post FY22, as I mentioned, and one of the biggest aspects was the merger of Marathon Nextgen Township, which is effective of FY25, and hence there's a lot more to talk to the company about this. When you look at the primary products portfolio of Marathon Nextgen, though, the residential as well as the development as well as the affordable and premium housing is what the company operates in. So that has been a space that they want to earn, and it's very evenly balanced. In terms of some of the key projects though, Monte South in Baikala, the next zone in Panvel, which is a big, huge township that the company is developing, as well as new homes in Bhandup are some of the exposure that the company has in the MMR region, and that's Mumbai Metropolitan Residential Region for those who are new to this space. So this has been where you've had a decent uptick essentially in land costs as well as the price per square feet, and all these companies benefit from that. Amongst the other key project has been the Nirvana collection that the company launched back in November of 2025 at Panvel, almost a 600 crore gross developmental value, which essentially means the development potential of that particular land parcel. Amongst the segments where I've spoken about, revenue has been 60% or majority of that coming in from the residential space. You've seen roughly realization of almost 18,000 rupees per square feet. But look at the revenue mix for commercial as well, because you see a higher realization there. So 40% coming in from this aspect. And while it's not as stable as a residential project might be, given that you could go out and sell out a number of projects within a particular span of time, you might have to deal with renters amongst others. The realization makes up for it at this point of time. Now, very importantly is, and as I spoke about, the diversification, right? Commercial segment drives the higher realization as well as margin stability. But when you look at the diversified product mix, because of the townships in Panvel as well as projects in Bhandup, the affordable residential portion has now come to almost 30%. Now that's the blue bar down at the bottom. you are seeing roughly 24% come from the mid-size residential, and the commercial, which we spoke about a higher realization, is almost 26% of the company's revenue, with almost 20% coming in from the luxury space, where the company actually started out in Lower Parel, where they have a major commercial mix. So hence the realization and the meat of the margins comes from those commercial businesses. But in terms of the affordable side and the residential township side that the company has done, it's coming in from this residential side, which is almost 60% of the revenue. Move on and look at the key rating parameters now, because we have been talking about how important it is for a company like Marathon to give us some perspective on the income statement, balance sheet and cash flow as well. Now, you would be seeing that volatility across years for some of the key real estate makers, and hence what I would urge you to look at is the historical time frame that we're presenting, because those 3 years give you that perspective much better than that individual time frame as well. We'll also look at return ratios at this point of time. Along with that, look at the shareholding, which I've mentioned would change a little bit post the QIP. Street cred has been something that you and me are well versed with in terms of valuations, as well as stock price that it has been impacted. Put some focus there as well as the operational metrics over the last 3 years, what have been the company's period at this point of time. The next part has been the first parameter that we look at, and that's income statement. Now, when you look at FY 24 to 25, you see that variance I was talking about, but the 3-year CAGR, both for revenue, its EBITDA as well as profitability, has been quite decent, especially on the bottom line. So a 70% CAGR from the FY23 levels. We have hence given this company a thumbs up at this point of time. But the Q3 also a very, very interesting time, because you saw that impact coming in for Q3. Labor code was a big impact. So you've seen profits dip by almost 33%, and so has the EBITDA, with a marginal growth in terms of revenue. So in Q3, the company's booking number was also in the lower side, and hence the margins hit the lowest, which it has been, but has been consistent at the 30% range, and hence a lot more to go for the company at this point of time. In terms of the balance sheet, that has been the other aspect. Share capital is largely reduced, but the increase of reserves from 762 crores all the way up to 1100 crores gives the confidence in terms of what the company's strategy has been in the long term, while the total equity has also seen a substantial increase because of the reserves at this point of time. We continue to monitor the company's borrowing, and they have gotten net debt free as of this. So you are seeing a 560 crore number as of FY25. That's literally become zero for the company because of the QIP, and this was something that they had spoken about over the last couple of quarters in conference calls. The net debt free was one of their agendas, and now has been achieved. Cash in bank has also remained quite stable at about 100 crores, and hence a thumbs up that we have given to Marathon Nextgen also on this particular parameter. So that's 2 in 2. Does the cash flow give us that perspective also is the other key aspect I want to focus on, because cash flow from operations as well as is one of the major drivers from profitability as well, and here is where the variance of the company is. So in FY25, because there was the negative CFO, and it's largely also basis of what the company has been investing, you see that operations to PAT number largely been missing from here. But the company has been, in terms of the net cash flow, got back to the positive net cash flow trajectory. But because there has been that variance, a lot of new projects coming in on stream in FY27 amongst others, hence we have given this a neutral rating for now. A lot more to watch out for essentially at this point of time for Marathon Nextgen within the cash flow side of things, and hence a neutral rating for now. Look at the return ratios though, and that gives you another perspective. It's better to look at a whole 3-year CAGR. 13 to 14% is a decent number for a real estate company, as well as amongst other sectors that we look at. Of course, a much better improvement from FY21 levels, but within this time frame, and hence given this neutral rating for now yet again, has been the other factor in terms of sustenance of that and improvement from this. ROE is the other factor, very decent, of between 16 to 18%, and hence while the ROC might be a little lower at this point of time, you would expect a lot of investment made in townships amongst others, and hence a neutral rating on the return parameters as well. Shareholding is the other key factor. We've consistently highlighted that because of the QIP, you will see a big difference between the promoter, the shareholding between March as well as December. But what's interesting is the increase in foreign investments as well as domestic investors substantially between those 3 quarters, and a lot of that QIP effect you see across the parameter now. A 24% shareholding from the public is also giving you that confidence that retail investors have bought into the story. So for that, as well as the promoter maintaining about a 50% share, we have given this company a thumbs up. Future debt raises will be something to watch out for, because one more raise of equity will dilute this number further, as well as for the existing shareholders as well. So continue to monitor shareholding, but for now, given the historical evidence that we have, we've given this a thumbs up. Look at the street cred though, and here is where we've been talking about the disappointment that across the space, because of the Israel-Iran war, has started to hamper the company's share price performance. Amongst other key factors, along with Nifty Realty, has been the other key impending impact of down almost 31%. 1 year return is down almost 21%, but the 5-year return for the company, though up 5x, still the near-term underperformance has been quite constrained. And now with FY26 almost over, with the company yet to report Q4, you've seen debt being pared down, and hence this could be a very interesting play going into FY27, and we'll quiz the management on that too. Valuations is the other factor. As for real estate, we try to look at the EV by EBITDA metric for these companies. You've seen roughly a 17 to 18% metric for a lot of these companies trading in that valuation. So Marathon, of course, Sri Lotus, a recent listing, while the Nifty Realty as a whole also trades at roughly around 20 times. So you're seeing Suntech also trading at almost 22 times EV by EBITDA. This one, of course, is something to watch out for. So it's not extremely expensive, and giving the correction gets you into a lucrative factor. Finally, in terms of operational metrics, that is the other factor. We've consistently highlighted that the area sold by the company has consistently increased. So has the booking value. Will remain stable in FY25, but is yet to jump in back again in FY26. Pardon me. And collection been quite decent as well. Given this a neutral rating for now, to get some more perspective from the management in terms of the booking values, that will be something to watch out for in FY26, because we have seen the 3-quarter numbers has been quite decent as well. But go back to look at some of the key parameters as well as which we've spoken about, highlighting that the financial performance gives some perspective for income statement, which is a thumbs up for now. We've also given a thumbs up on the balance sheet, while cash flow and return ratios gives you a neutral rating for now. In terms of what we've seen the company's shareholding post the QIP, there has been a change in structure, a thumbs up here as well. Street credit, like the other real estate companies, has been down, so we'll continue to monitor that. But valuations as well as operation metrics give you some more confidence at this point of time. So overall, when you pull up the ratings, the company is trading at 5 out of 8 of the ratings for KYC right here on NDTV Profit. But important to get some perspective now from management. Mayur Shah, the Vice Chairman of Marathon Nextgen Realty Limited, is now joining us to give us exactly that. Mr. Shah, a very good morning to you, sir. Thanks so much for joining in right here at NDTV Profit. My name is Puneet. Just the first question, right? Because we've seen Marathon transition continue to maintain in terms of the luxury space, and now going into affordable housing as well. Give us some perspective of the company's strategy to have and go into townships at this point of time, and in terms of how that would change your financials, if any perspective, to start us off.
Good morning. Marathon has always been looking at a very balanced portfolio in every cycle of the project cycle, particularly luxury, commercial, outskirt township, and affordable segment within Mumbai. So we've been balancing that portfolio for quite some time, and going further also we would like to balance it, because we are seeing a very strong push of infrastructure by the government in almost all the across Mumbai MMR, and we feel that luxury as well as affordable and outskirts, including commercial within city, is going to do very well in the next 3 to 5 years.
So how would you see the change? So because, we did pull out, Mr. Shah, the change between the metrics. So affordable continues to be at almost 30% of your portfolio. Residential is almost, the mid-size residential is almost 24%. Commercial is almost 26%. So how would that mix change with the townships coming in? Do you feel that the overall residential metrics close to 60% will increase slightly over the next few years?
Yes, but see, it depends on the cycle of the project also. Many times you have commercial projects start reflecting at the end of the project because it's all sold in a ready inventory kind of a thing. So we'll be starting building a new commercial inventory in the next year and next 2 to 3 years. So more or less this would balance will be similar to what you are seeing right now on the screen because of the affordable housing in the outskirts where our portfolio of Panvel is doing very well, and we really want to really increase that portfolio to some extent and also the Bhandup where we have SRA portfolio that also contributes towards affordable. These two affordable housing has a very ROI is very high, and the sales velocity is much better than the luxury, which we have seen over the period of the time. So, we keep tweaking this, balance between the portfolios which we have in our whole micro markets.
So, two key questions now, Mr. Shah, from what you said, that you will be looking to rebuild your commercial portfolio yet again in the next 2 to 3 years, because a lot of your legacy commercial portfolio in Lower Parel has been doing very well, that your average realization also quite high. Where can we expect in terms of this commercial properties to come in? Will that be largely in the outskirts as you mentioned, or will that be in these spaces where your realization has been quite high because it is a very competitive market there? So what would be the strategy be there for the commercial portfolio? Which kind of areas would you want to be targeting at this point of time?
So we will be targeting commercial portfolio. A major portfolio will be within the city.
Okay.
We are looking at a central Mumbai type of development, very similar to our Marathon Future X type of location. We are also having like Millennium project, which is on the Mulund, on the next to touching to the metro station. So that type of inventory where, within the city, a good office space, small business space are also in demand. And thirdly, in the outskirts, we are looking at Nextgen. We are doing close to 1 lakh square feet of retail space of the, completed, the phase 1 and phase 2 is already completed. Phase 3, we are looking at a large retail component in the 5 lakh square feet development. So we, office, retail kind of a combination, which would like to create for the next cycle.
And Mr. Shah, you also mentioned about how within your residential portfolio, your affordable portfolio also has a very high ROI. Your return on investment is quite high. The sales velocity is quite high. But what we've seen in the last 2 to 3 years has been that the luxury side of the portfolio for amongst the other listed real estate players also has been quite strong. The collections have been quite strong, has been quite robust as well. So when you talk about affordable over the next couple of years going through, is your strategy that you want to address areas where there is a higher potential of first-time buyers coming into areas where it's still untapped, because that's been something that the market hasn't yet rewarded yet in that sense, if you know what I mean, in terms of stock price performance, because the luxury one, much more stable in that sense. So could you give us some perspective for this rationale?
So luxury will continue. See, for our Monte South ongoing project, where we have already done Tower A and Tower B. Now we are already constructing in a very high speed the Tower C, which is 400 units. And we have a portfolio of a Tower D, another 1600 crore kind of inventory. So as and when we have scope available, we are again going to jump into a luxury residential. Even Tower C upper floor, between 35 to 64 floors are yet to be launched during this year. So you will see luxury on a similar pace coming into our portfolio of the realization.
Okay, got that view, Mr. Shah. So you also had raised the 900 crore QIP in the last year. Roughly 340 crores was for debt reduction, which is now hampered. And so many congratulations for that, because you wanted to pay that off very quickly. Talk to us about the rest of the amount. What was that was, of course, for newer investments into new properties. Has that already been done? So is that 900 crores already utilized?
Yeah, for the debt part, as you rightly pointed out, it is already been utilized. The balance we are infusing as per our QIP statement into our ongoing projects. But we have set aside 300 crore for the new acquisition, which result we have been negotiating with various projects of redevelopment, JD, and all those things in particularly South and Central Mumbai, and a high value kind of a realization should be more than 40,000 square feet on carpet. We are looking at only those market, and there you will see during this year we'll be announcing at least 3 to 4 very big projects to add into our GDV.
So, is there any target? Because the follow-up question, of course, would be on your return on capital employed, right? Because your ROEs are quite strong. Because you're holding so much cash in your portfolio right now in your company, you are seeing the 13 to 14% range largely maintained until last year. So, could we expect that deployment of 300 crores to happen in FY27, and hence any target ROC that you are maintaining over the next couple of years?
Yeah, see, thing is, the deployment of the funds are depending on the projects acquired, and then it goes through the cycle of approval and all. So we are very confident that within the next 1.5 years, we should be able to deploy the entire fund which we have now, as per the projects which are under negotiation. And definitely, you'll see those announcements. We are looking at least 4,000 crore of GDV to be newly added during this span of 12 to 18 months by way of these new acquisition projects.
So 4,000 crores gross development value over the next 12 to 18 months, got that view. How much of that would be coming in from your Panvel landscape as well? Because you've seen a new airport come in Mumbai, that's also coming in Navi Mumbai. And hence all those around areas, as well as CM Devendra Fadnavis talking about the Naina city coming in. So as a third Mumbai in that sense, you have almost 200 acres of land there. Could you give us some perspective of the development of the same, as well as a rough timeline of what could be the expectation, and how much of this 4,000 crores will include land parcels from there as well?
So, for the Panvel phase 3 of the next zone, roughly 600 crore has already been launched, and that is under progress. The Nirvana collection, which we already going through. For the Mumbai 3.0, there are very big plans of infrastructure development, particularly in our land bank, Panvel to Karjat rail connectivity, which is going on in a very high pace, and we expect that by 27 or latest by 28, we will have a local train going through Panvel to Karjat, and those stops of Chikle, Mope, all those where these are the land bank which we are having, will be really accessible for something similar happened between Kalyan and Ambernath, something like that. The development will take a very high pace. As on today, we are looking at some of the land bank coming into the development in 18 to 24 months by way of villa and plotted development. That is what we'll be focusing initially. But however, once this infra has been fully developed, like we have Sea Link already operational, airport Namia is already coming up full way, some connectivity between the two airport, high-speed rail is also coming up, and all these infra which is been planned in a big way, I think will really bring these lands into a development in a fast manner.
Got it. So a lot of those, public infrastructure connectivity projects is something that you will take advantage of. Got that point. Mr. Shah, the way you're talking, it just feels like you want to stay in MMR. So would that be a safe assessment that you're not looking to diversify out of this region for now, given the potential that you have also on realization and growth? Would that be a fair assessment?
Yes, very much. Because we at Marathon treat Mumbai as almost 19 to 20 different micro markets. And if you look at MMR's sale data, for the last year, almost 34% of all India sales happened in Mumbai MMR region. almost 1.6 lakh units are sold in Mumbai MMR. And if you look at even the inventory, is only 20 months inventory remaining. With huge infrastructure push, if you recollect today morning only, government has announced a very big push of transferring almost 80,000 acre to the MMRDA region to push 3 lakh crores of infra projects, where 300 kilometers of metro, multimodal, all entire coastal ring road, and all outskirts area to be very well within 45 to 50 minutes to the central Mumbai is something which has been the vision of the government. And with this in mind, I think nowhere in the world such kind of a huge infra push is happening. So we would really like to be taking advantage of all our land bank situated whether in Panvel, Dombivali, Bhandup. All these land bank will be much better utilized within the Mumbai. And we really feel Mumbai MMR is going to be growing faster than all other cities.
Well, Mr. Shah, we'll have to leave it at that. Thanks so much for joining in. A lot more questions on cash flow amongst others probably in our next chat. But hopefully, best of luck for your quarter 4 results. Look forward to our next conversation. But thank you for joining us today.
Thank you. Thank you very much for having me.
Well, that was Marathon Nextgen. A lot more, in the next 12 to 18 months, almost 4,000 crores of gross development value to watch out for. But viewers, that's the end of this time of KYC. Stay tuned. A lot more action on the other side right here on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello, welcome to watching Prime 5 with me, Raisha Saigal. What's Saturday? How to?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New Year.
Nifty continues to sulk on the last trading day of the financial year, hovering above 22,400 as weakness persists in the market. Crude surge and geopolitical uncertainty looms on the Lal Street, with all the sectors trading under pressure. Rupee opened the week in green, recovering sharply in early trade after regulatory intervention aimed at curbing banks' currency exposure. The turnaround follows a directive issued by the Reserve Bank of India, which placed a cap of $100 million on the net open position that banks can hold overnight. Sugar stocks surge as rising oil prices make ethanol more profitable. Global supply tightens and investors rush into a rare pocket of strength in a shaky market. Coal India subsidiary Central Mine Planning and Design Institute lists at a discount of 7% to its IPO price on the stock market. Now, the initial share sale was subscribed almost 1.05 times. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take you through the market. Extreme pressure being seen on the Indian markets, and that's on account of two factors connected to each other. First, of course, no sign of de-escalation of the Middle Eastern tension, and what that means for India is always crude oil prices, higher prices of that really putting pressure on the Indian market because it'll have a wider economic consequence. And that's where Brent crude holding at $115 per barrel is very bad news for India. And that's also putting pressure and also making the FIIs nervous. So therefore, that pressure really showing on Nifty 50, 22,500 odd levels, struggling to stay at above 22,500 levels, 1.3% down in trade. But if we really look at all the sectoral indices, barring a handful with minor greens like metal index as well as oil and gas, it's most of the sectors under extreme pressure and selling pressure. When we take a look at the banking sector, that's really underperforming the key index by a huge margin, over 2.5% down in trade. And remember, the banking space, the sector and the index is a quasi-investment into the economic prowess and strength of the country. And therefore, banks losing steam and underperforming is showing the worry that the market has. IT sector too is lower in trade. PSU banks take a bigger hit. Nifty Energy is in the green by a small margin. All right, let's take it straight across to Sonam Srivastav, who's the founder, CEO at Right Research, joining in. Sonam, a pleasure, having you on NDTV Profit. It is a very weak day in trade. Several uncertain factors as well as crude really showing that pressure on the Indian market. How does one really tread in this kind of market condition?
Yeah, I think it definitely is a tricky situation right now with the geopolitical crisis in place and no solution coming out as of now. And, I think escalating news of maybe boots on the ground from the US or closing of the Strait of Hormuz and the related, the other state as well. I think that is putting pressure. That's what has led to escalation in the Brent prices. And the only resolution here would be some sort of ceasefire that comes in place. And I think we can see that today. Therefore, you're seeing a movement in crude prices. Metals are also rising a little bit because of supply shock from Iran in the aluminium trade. So I think I would suggest that we have to be careful because this situation is highly volatile. But yeah, I think given the level of correction that we are in, right, we might be near to the bottom. And if you are looking to allocate. I think we're getting a lot of requests from clients to top up or requests from clients to invest more. So I think it could be a great time for people to actually buy for the longer term, right?
What are people buying, Sonam?
So see, it's an interesting market where you're seeing the flavor shift towards industrials, towards capital goods, automobiles, etc. So I think there are a few sectors that are in flavor right now. I think even in the financials, certain NBFCs are attractive. But like you said, the broader banking sector is seeing pressure, right? But yeah, I think the amount of fear that is there in the market right now is quite extreme. The sentiments have been hit quite a bit. But India's institutional flows, from the domestic market are robust. Valuations are very attractive right now. And yeah, I think it is actually the best time to invest for the longer term, right?
All right. So you're saying invest for the longer term, but Sonam, always the question is how much lower will it go, and am I really, taking that risk? But thank you so much for joining us with your insights on the market and investment strategy. All right, let's shift focus to one particular sector which has been fairly resilient to the war impact. And how does it really impact and also gain momentum when it comes to the green energy and other energy sectors, while we are grappling with the shortage of crude oil and other fuels from overseas? Let's take it across to our special guest exclusively joining on NDTV Profit to talk about this impact on the energy sector. We're talking about JSW Energy. Sharad Mahendra, who's the CEO of JSW Energy, joins us now on the show. Sharad, always a pleasure to speak to you and welcome you on NDTV Profit. My first question, even when the markets were showing extreme weakness, it was the energy sector, the green energy sector, which was showing a lot of resilience. As a sector leader, how do you see the entire energy space in power production really benefiting or being impacted by the current war situation?
Yeah, thank you, Nisha. In fact, yes, very pertinent. What the observation is absolutely correct. What we have seen, the different modes of generation in the country, we have seen a very huge capacity growth addition in 2025, which is the pre-crisis period in the green energy space, which was more than the demand. But definitely with this West Asia crisis which is coming, there are huge pressures, especially on the certain gas-based power generation is coming under pressure. And also knowing that solar capacity addition, which has been a significant addition last year, takes care of the power demand during the daytime, and intermittently the wind energy also takes care during the daytime. But definitely the round-the-clock reliable power supply around the clock, it is the thermal coal-based generation which is becoming the prime generating factor, especially when there is a significant reduction we are seeing in the gas-based power generation. Just to support this with number, if you see the pre-crisis, when we talk of, say, maybe January, February, the share of coal-based generation was almost 70% in the total power generation in the country. But gas-based generation, which was ranging between 15 to 18%, in the month of March, the gas-based generation has come below 5% power generation, and that too only to the regulated sectors. Share of coal-based generation from 70% has increased to 76%. And Government of India, also the Ministry of Power, has issued the emergency clause of ensuring that all coal-based generating power plants are available 100% and generate the power at maximum load factor. So these are the positives for the sector, especially keeping in mind the extreme weather conditions which we have started witnessing as compared to last year. I think the peak power demand is expected to reach about 270 gigawatt during this summer.
All right. In fact, extremes of that summer is also something we are bracing for. Sharad, a point very rightly mentioned, while we are energy deficient on different pockets. But you mentioned that coal-powered, that is thermal assets, are now coming to more utilization. And thank God to that whole debate about renewable versus thermal power. And thank God that we did not give up on our thermal power projects. This is where we require that the most. But what about the coal price increase also? And what is the impact of that? Because as all the energy resources really escalate in prices, of course, the mark is also translating to also the coal prices. And that could put an impact on the coal-based plants as well?
Yes, to limited extent. Yes, but just speaking in continuation to what you said very rightly, that definitely we maintained our coal-based power generation and not just focusing on the green energy, because the sustainability part, energy transition, continues to remain focus of the country to reach 500 gigawatt of green energy by 2030. But now with this crisis and the way the demand growth and the industrial growth the country is witnessing, one of the fastest growing economy in the world of this size, I think the energy security also, Government of India has clearly stated that energy security is the focus. That is the reason that in next 7 to 8 years, almost 100 gigawatt of coal-based capacity, new capacity additions are going to take place. So one is this, and definitely in terms of the demand when we are seeing, this will be taken care by the thermal capacity addition, which is going to take place to ensure the reliable power supply.
Right. So reliable power supply, and we are bracing up for that also in extreme summer. But Sharad, when we talk about your company, of course, we are ending one quarter, and the last quarter, there was a three-pronged strategy which really impacted your company, and you have been consistently growing in. You are also increasing your thermal power projects and capacity there and pushing the generation over there. The second, you have bolstered your overall portfolio with acquisitions as well. And new organic renewable energy setup capacity is also really adding to the momentum. How do you see this whole mix really panning out? And also, are the kind of deliverables that we saw in the last quarter gone by with a huge generation capacity really pushing in the sales, is that going to be maintained in this particular year, this particular quarter as well? Or was that the peak that we saw in the last quarter?
Yes, very correct. See, one is that definitely we are growing in across the segment, whether it is coal-based, whether it is wind, solar, or hydro. There is a significant change in our thermal capacity increase. Is that we have moved earlier, maybe till few years back, we were totally dependent on imported coal. What you asked some time back, the impact to our business on change in the dynamics in the international coal supply or prices, we are insulated to a large extent, because all is a long-term tied up power, and any impact on currency or any impact on the international coal price is a pass-through. So we remain insulated from that, and whatever capacity, our share, which used to be till few years back 100% dependence on coal, now our total thermal capacity, more than 65% is domestic coal-based capacity. And we have not seen any change in the domestic coal prices, because there is a huge availability in India of domestic coal. So that is a big positive, and two of our big plants are next to the coal mines. So that gives the advantage to us. And also in terms of generation growth, what you said, yes, the capacity is like we started the year, this year, the year which is ending now, we started the year with about 10.8 gigawatt of capacity. End of December, what we have announced of almost 13.3 to 13.4 gigawatt of operational capacity, a mix of this 100% from 10.8 to 13.3, 13.4 is all the green energy capacity which we have added and commissioned. And
Yes.
more is getting commissioned during this quarter.
Yes.
So this all will further add to the generation which you saw. And Q3 generation normally is not the best of the generation because the hydro is low. It is not the wind season.
Yes,
So
it's
going forward,
it's a
it's going to be
seasonally
further
weak one.
increasing. The generation growth will be further there significantly.
All right, Sharad, I got your point that, Q3 being seasonally weak still performed, so Q4 could be better than that, is what you're saying. But my final question and a quick answer to that, finance cost because of your expansion as well as also M&A has also increased on a YOY basis substantially. Also, your 3,000 crores preferential promoter approval has also come. So that is going to add to some strength when it comes to the equity side. How are you going to use this? Because your debt to EBITDA is at 4.9x. Are you comfortable with that?
See, when we talk of debt to EBITDA, normally removing the construction work in progress, which definitely is going to give the margins and the revenue going forward, I think 4.9 is a very reasonable debt to EBITDA ratio against an industry benchmark of 5.5. So I think we are comfortable. And when we are in a high growth phase, and this is a 3:1 debt equity annuity business, debt equity. So definitely we will be maintaining within the industry benchmarks and our guardrails in terms of the debt to EBITDA. And growth we will continue to maintain. And as and when required, we will be raising the equity, for which we already have the board approval. And of course, this preferential shares, this process has already been completed. Part of the money we have received and we will be receiving in due course as and when the company needs, but definitely maintaining the debt to EBITDA ratios for which the benchmarks are protected and maybe the rating agencies also are comfortable.
All right, Sharad, thanks so much for that clarity, because when expansion goes hand in hand with the key critical ratios as well, that needs to be maintained when it comes to net debt to EBITDA and net debt to equity as well. Thank you so much, Sharad, for giving us a lot of insights on the power sector and also the company's momentum towards greater generation of capacity. Thank you for joining us.
Thank you. Thank you very much.
All right, let's move on to another important news developments, and this comes in from the deal street. EPL and Indovida have struck a big ticket merger, and the deal created a scale packaging major. That is the aim, with a combined valuation of around $2 billion that we are talking about, bringing together the complementary product portfolios and also global manufacturing reach. In fact, I spoke to the management of EPL, Hemant Bakshi, the MD and global CEO of EPL, about the mega merger and also what it brings to the table for the company and value creation for the shareholders. Listen in. Hemant, what's the rationale of this big transaction? Because Indovida is not just into manufacturing of the packaging material, but also into trading of the raw material for manufacturing the packaging.
Yeah. So, Nisha, let me step back and talk to you about the rationale of this deal. So firstly, EPL is in a really good position right now. We've declared double-digit growth for the last 3 quarters consecutively. Our EBITDA has grown by 300 basis points. So we think we have strong foundations for the next phase of our journey. And what we have said, our vision is to create the emerging markets packaging leader for the consumer business. So that's what we want to build. And there are 3 important pillars to this strategy. The first is we want to go into more emerging markets. We then want to make sure that we can expand beyond tubes. Right now, our business for the last 40 years has been in tubes, but there's an opportunity beyond that. So we want to build new formats. And thirdly, we want to become innovation partners for the large and emerging brands in the emerging world. So those are our 3 key pillars. And now talking about the rationale of the deal, firstly, it gives us scale. Our revenue goes up from where we are to $1 billion, so it doubles. Our EBITDA doubles. And in addition to that, our valuation becomes $2 billion. Secondly, this is a growth accretive deal because this takes us to many more emerging markets. 90% of Indovida's business comes from emerging markets. Post the merger, 75% of our business will come from emerging markets. Here, the penetration is low, the growth opportunity is much higher. This deal is also margin accretive. As a result of this, both our EBIT and ROCE will improve. It's also good for our balance sheet because Indovida is totally debt-free. It's a net cash positive business. And after the merger, our debt to EBITDA ratio will drop to 0.25.
Right.
We've also identified significant revenue synergies in the range of about 35 to 50 million, which will come through expansion of our footprint, expansion of our formats. But I think what's also very interesting is that this comes at a very attractive valuation. The EPL business has been valued at 12.5 times EBITDA, which in share price terms would be 339 rupees. Our share price today is 205, so it's a 70% premium to that. We've also been valued at 55% premium to the Indovida business. So in some ways, this ticks all the boxes. It gets us into new markets. It allows us to go into a new format of rigid plastics, and it allows us to leverage the technologies which Indovida has to become an innovation partner. So that's really what we are doing here, Nisha. But to answer your specific question, Indovida as a business is only in packaging. It's part of the larger IVL group, which also manufactures the raw material. But Indovida, the company we are merging with, is only in packaging.
Right. Looking at the structure now, Hemant, Indorama Ventures will have a controlling stake and they'll be the co-promoters. So how will this really now, EPL as a business, work? Because the controlling majority has also shifted hands as part of this particular transaction. And you also said the parentage is into the raw material manufacturing as well.
Yeah. So as a result of this merger, once the approval comes through, IVL will have 51.8% share. Blackstone will be diluted to 16.6%, but both of them will continue to be joint promoters of this business. Rest of the stake will be with the public. So that's how the structure is. And in some ways, we believe this is very, very good for us. Blackstone has been pivotal in our journey. We've gained enormously by their thought leadership and access to the very extensive network they have. And they remain very engaged with the business, and we'll continue to benefit from that as we go forward. IVL has been a large business, and I have now worked with them for the last 5 months, and I've been really impressed by their business acumen and what they've done. In the last few years, they've executed 50 acquisitions and integration and integrated them successfully into their business. So that again is something which we will benefit from.
So in all, deal making that Hemant, I would see this as Blackstone's part exit at a much higher valuation that you command in the market, that is 70% higher. What is the rationale for ascribing such a premium in this transaction to the company?
Yeah, so the valuation has been done by independent experts. And I think they are valuing the strength of the EPL business. We've made a pivot recently towards beauty and cosmetics. So while oral remains very important, beauty and cosmetics has now become 40% of our business. This is a faster growing business and has much higher average selling price. And we are doing exceedingly well in this. Last quarter, we grew by 20%. We've been able to enter new markets. We entered Brazil about 3 years back, and the success in Brazil has been absolutely stunning. And more recently, we've gone into Thailand, which gives us access to Southeast Asia, which again is a fast-growing beauty and cosmetic market. So therefore, we've done geographical expansion, we've moved into new segments, and we continue to be seen as sustainability and innovation leaders in the market. So I believe this value has been ascribed because of the strength and robustness of our business model, which is showing significant growth.
Right. All right, so that was the management of EPL on that large transaction. Remember that Blackstone, which is the promoter of EPL, is now being diluted. It's going to be a co-promoter with Indorama Ventures. So the parentage of the company also changes with this particular transaction. With that, it's a wrap on this edition of Markets at 12. But keep it with NDTV Profit. Lots of news and views and market action on the other side. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's Saturday? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EV. Use tech that you can actually.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Somit Sarkar standing at the NDTV Profit market pit with all the action. Somit, good afternoon. You know, a slight bit of a recovery that we are seeing in terms of markets as well, but what is that setup looking like right now? Is sustainability the key?
The setup continues to remain weak. This is for the second consecutive session where we are seeing a downtick that has come into the markets. And in the last two trading sessions, we have declined by close to around 800 points that we have seen, at least for the benchmark. And the intraday support is something that we have seen around the 22,450 level, while the intraday resistance continues to be around the 22,700 mark when it comes to the benchmark index. And today the lowest level was, in fact, Nifty's lowest level that we have seen since April 2025. So 11-month low is what we have seen, at least for the benchmark coming in trade. And given the fact that today is the last trading day of the financial year, for the entire financial year, Nifty is trading or has reported its worst financial year drop that we have seen since FY20. That is the COVID year drop that we had seen. And Nifty is down nearly 4% in FY26. Now, if you look at the sectoral indices in trade today, it's the metal and the PSU index that have been gaining in trade, while on the flip side, banking index has been under pressure, largely led by PSU banks that we have seen in trade. And when it comes to the metal index, the gains are largely led by aluminium players. Hindalco, Nalco, all have been gaining in trade, and that's pretty much the market setup that we are looking at. Benchmark support seen at 22,450. Yes, we have seen some kind of recovery from that level, but resistance continues to be around the 22,700 level for the benchmark.
Okay, you know, I mean, that's what it looks like so far as we speak. But let's quickly look at the watch list. Now, heavyweight banks are under focus, and they've been seeing pressure on the back of RBI tightening the forex positions and capping the net off. Shriram Finance is down 17% in the last 1 month. Bajaj Finance, we've seen a large block that's happened. Auto OEMs are in focus as well, ahead of the auto sales numbers that will start trickling in day after tomorrow. Aluminium companies are in focus on the back of the price hikes that have come in as well. Moving from there on, if you see in terms of other names, you have Coal India. They've done a JV with DVC for power. Defense stocks, where DSA has approved a 2.38 lakh crore order. So some buzz happening there. IRB Infra is trading ex-record date in terms of the bonus. KNR Construction on the back of the order win. And you have Urban Company, which has now started InstaHelp, where they've crossed 1 million monthly bookings. IRB Infra is another one that we already spoken about. Sugar stocks are in focus, where Brazil has cut the exports and India benefits. Blue Star has said that the key supplier issues are resolved, but there could be concerns on the back of the impact of the war. So that's the watch list. But let's go to Somit Sarkar to take the rapid fire from here on with Gaurav Sharma of Globe Capital. Over to you, Somit.
Well, thank you, Gaurav, for joining us. Firstly, on Rapid Fire, it's IRB Infra. Now, the company has set its record date for bonus, but the interesting part here is also that the fact that in 2026, the promoter has bought nearly 2.1 crore shares from open market. Any view on IRB Infra, Gaurav?
Hi, Samad. Good afternoon. Thanks for having me today. A stereo up move witnessed today on back of a good amount of volume. 2300 is pretty much likely. 23 levels are likely.
Okay, KNR Construction is another interesting counter. Order win of close to 1,734 crore rupees from NHI. How's the chart looking like for KNR Constructions?
A reversal uptake pretty much imminent here. One can take a stop at 114 and look for targets close to 126.
And when it comes to Urban Company, they have announced that their Insta Help has crossed around 1 million mark, which means that the daily booking counter has moved to 27,500 as per analysts for the fourth quarter, as against 17,500 that we had seen in the previous quarter. A strong uptick that we are seeing on the Insta Help counter. But on charts, any view on Urban Company? I know it's a recent listing, but any targets?
Good volume back buying was witnessed earlier as well. That somewhat subtle, and today again an uptick. I see it heading towards 125, 130 levels in the immediate near term.
Okay, when it comes to aluminium names like Nalco, Vedanta, Hindalco, all have been gaining in trade, and this is largely because the two Middle Eastern aluminium producers were hit, and Middle East accounts for nearly 9% of the total production. And even in the Asian markets, if you look at all the aluminium producers have been gaining in trade, and similar is something that we are seeing when it comes to the Indian market. On charts, is it a right time to enter these counters?
Firstly, a disclaimer, we have recommended it to our clients so they may have a positions. We are bullish on all the three of them: Hindalco, National Aluminium, Vedanta, in that order.
Okay, when it comes to Coal India, the recent news is that they have formed a JV, but the stock has been on an uptrend. On a YTD basis, it has gained more than 15% on the back of rising prices and higher demand that is expected to come in the summer. But on charts, does Coal India look like an attractive buy?
Certainly, it is looking impressive. Existing shareholders can maintain their position. Fresh longs also suggested immediate target of 475. Thereafter, it will head towards 510, 525 levels.
Last couple of names will be on NBFC, both part of the Nifty 50. Firstly, Shriram Finance, down around 17% in the last 1 month. But in a recent conference, management has reiterated its guidance. They are seeing growth to be around 18 to 20%. They're expecting their cost of funds to come down. And also they're expecting the credit cost to be lower the next 2 years. That's on the fundamental side. But on the technical side, how's Shriram Finance on charts?
It is looking very impressive. Again, a disclaimer, we have a buy rating on this stock, so our clients may be having position in it. Any decline from the current level is a good attractive buying opportunity. Even at current level, it is very impressive. Hold and buy is the recommendation.
And lastly, when it comes to Bajaj Finance, even that counter is down around 17% in the last 1 month. On Friday, Society General sold off some of its stake in the counter. But the recent concern is largely coming in from the fact that it has a higher exposure towards unsecured MSME. And that is one of the concerns why Bajaj Finance is down, at least on the fundamental side. But on charts, Bajaj Finance, how's it looking?
It is looking good. It has reasonably retraced to almost 50% as per the Fibonacci theory. Another stress towards 750 is likely. If that happens, a very firm buying opportunity. Hold and add.
Back to you, Viral.
Okay, thank you so much for that. So far in terms of the watch list. But before we head across to the stocks which are trending on Google, let's quickly address the flashes at the bottom of your screens where the new ECMS scheme has been announced. The production target is pretty strong, where they've said that they've achieved production of 4.51 lakh crores under the ECMS scheme. But I would want to talk about the beneficiaries. First up, we have a Dixon Technologies, which is in focus. Now let's pull up that one and see what Dixon is doing in trade, because the quantum is something which is interesting for a Dixon. I think it's 1,000 odd crores that you're watching out for in terms of Dixon Technologies. Sirma Strategic Electronics, which is again Sirma. They will be investing around 588 crores for laminates as well as flexible PCBs. That's what you should be watching out for. IFB Industries is another one that will be in focus as well, because they have also committed close to 40 crores for parts of capital goods under the ECMS scheme so far. So overall, if you're looking at
close to 3 to 4 companies which are in focus. IFB, Sirma, Permanent Magnets is another one, which is a listed entity as well, which has been, which will be investing around 62 odd crores for relays. So far, 4 companies that are in focus on the back of the ECMS scheme. Very quickly, Gaurav, any views from a Dixon to a Sirma to IFB and Permanent Magnets, 4 stocks that we would want to talk about?
We will still refrain from taking position in Dixon. It will still take some longer time. But as far as Sirma is concerned, among the 3 mentioned stocks that we track, this stock looks attractive at the current juncture. I don't see much of a slide coming in. 750, 740 is a very important strong support zone. So any further decline would be a good adding up opportunity. Take a stop at 700 around that levels and go long for targets close to 850 and beyond.
Okay, so that's with regards to where the ECM scheme goes. But let's focus on stocks which are trending on Google currently quickly and see what trends are indicated from that end as well. If you see in terms of stocks that are trending, IRB Infra, HEG, interesting, CMPDI is the new listing, Acme Solar and Bharat Forge. A quick one in terms of IRB Infra as well as HEG, because HEG Graphite have been on an uptrend since the last couple of trading sessions. Gaurav, anything that you're witnessing right now in terms of strategy?
I think IRB is looking quite attractive at current juncture. 2300 is the immediate upside target. If that is taken out, this stock will quickly head towards 24 and much higher levels. Apart from this, even HEG that you had mentioned is also looking good. It has witnessed a dip. This is a good buying opportunity after a steep buying witness in the previous trading session. Therefore, this can also be considered as a trading position. Take a stop at 520 and look for targets close to 600 and beyond.
So that's with regards to stocks which are trending. But thank you so much, Gaurav, for joining in. Always a pleasure to speak to you. But moving on to our next story, which is trending, which is the Reserve Bank of India on Friday issued a directive asking banks to limit their net open positions in the onshore derivative market, deliverable market, to $100 million each. In fact, this move is aimed at curbing the depreciation of the Indian rupee. Bankers, however, are worried that this move will dent their Q4 profitability because this will actually hit their treasury income to some extent. They were talking about 3,500 to 4,000 odd crores, which is the overall impact to the treasury income of all of these banks put together. And apart from this, if you see in terms of the rupee movement as well, if you just pull up the intraday chart of INR, that will tell you we've bounced back to those levels of 94.69. The idea was to, get further easing to the tune of a rupee, but the bounce back has come back yet again. Piyush Shukla joins us to tell us what's happening. Piyush, over to you.
Yeah, thank you, Hiril. We have heard that banks have sought a 3-month timeline for this rule to be implemented. Most of these tenures of these securities is within the 1 to 3 month period, and that is why they're saying give us 3 months to wind down our positions. And also they have mentioned how this will dent their profitability. Bankers are asking the RBI, please, that you should make this directive applicable from a prospective basis, not a retrospective basis as well. They did meet with RBI official, the large bank treasury officials met with RBI on Saturday conveying some of these concerns. Now, we have learned from sources that large banks have upwards of $250 to $300 million of exposures in such market, and now they will have to wind down their positions before April 10 as per the RBI directive. Previously, the RBI had allowed banks to park 25% of their overall Tier 1 capital in such markets. RBI essentially introduced these directive to curb the rupee, which fell to the level of 94.84 on Friday. As Hiral mentioned, the rupee has recovered today. Back to you, Hiral.
Much for that, for getting us what it could mean. Let's get in Sachin Jasuja from Centricity Wealth Tech. Sachin, welcome to the show. My question to you is, we're talking about a hit to the bank's treasury income in the fourth quarter. How would you look at this kind of a move? Is this a short-term, problem, but longer term? Any dip in terms of any of these major banks could be a buying opportunity?
Yeah, from the only, if you talk about the treasury income perspective, I think then if the stocks are down, it creates a buying opportunity from that perspective. Because see, market will always look at that what kind of credit costs these companies are having, how they are growing in terms of credit growth, etc. And this is looks like, see, there has always been a free market in that sense, but RBI has to come up to bring these norms to curb the speculation specifically, right? So from that perspective, welcome move from RBI, and because it affects only one quarter treasury income, so I don't think that it impacts materially to their valuations, etc. So it creates a buying opportunity for most of the larger banks like ICICI, HDFC, or maybe SBI, who will be affected most, where they have got the exposure above $100 million.
Sugar stock is something that have been buzzing in trade. All the counters are up over 5% in trade. Let's get in Jasmeet to understand why we are seeing this kind of a move, Jasmeet.
Well, thank you for that, Soumit. Now, if you look at overall sugar as a sector, we see Brazil being the largest producer of sugar, and those Brazil companies are cutting down the production of sugar in the coming season of April. This is because they want to convert more of sugar into ethanol as the energy demand increases. So given the reduced demand for overall sugar and reduced production by Brazil, it would lead to Indian price rising in the future. So that's why the sugar is also buzzing in trade. Now something like Dwarkesh sugar is up 30% while Mawana sugar is up 8% in today's trade, given the increased demand for the sugar going ahead as Brazil will cut down the overall production in the coming season.
Right. Well, that's all you had to know about sugar. But Sachin, how are you looking at sugar counters? Any stock that looks attractive at the current valuations?
Sugar has been a cyclical, play always, but now, given that, ethanol has become a very critical play, and where the, blending has gone up, now it is 20%, maybe in coming years it will go up, even if we cap it here. So from both the perspective, now it is slightly diversified. So the play has become better as compared to the past, but still, I think the better play will be engineering companies who are playing with this ethanol play, the companies like Paraj Industries, rather than the pure play on sugar side.
So with regards to where sugar companies go, but let's talk about India's defense sector. A big boost coming in on the back of the 2.89 lakh crore outlay that has been approved by the DAC. Varsha standing by to tell us all the beneficiaries. Varsha, over to you.
Well, thank you so much for that. The 2.38 lakh crore approval, this spans across or covers Army, you have Air Force and Coast Guard. And also, if you see, a government has given 2 small contracts to missile systems and, of course, aircraft servicing with Boeing India Defence Limited. Talking about why is government spending this much or why the money is being spent, of course, because India wants stronger security, modern weapons and less dependence on imports. Talking about, where this money will be utilized or where this money will go, let's start with Army. Under Army, India will require air defense system to stop enemy missiles, then tank ammunition, then Dhanush guns, of course, the 300 units are being needed, then military communication systems and surveillance drones are some of the areas where money will be utilized when it comes to Army. Talking about Air Force, a 60 transport aircraft will be needed, that is 1 lakh crore project. Then you have S-400 missile systems for long range defense, you have combat drones. So these are the areas when it comes to Air Force where the money will be utilized. Talking about Coast Guard, air cushion vehicles is one of the area where money will be utilized. Lastly, if I were to talk about which companies will benefit, because that's what is investors interested into. You have Bharat Electronics Limited, which is present in electronics and radar system, will see benefit out of this. You have Bharat Dynamics Limited also, which is present in missiles, will see the growth prospect from here. Even L&T, if you see, will see benefit considering the defense systems that they have, and also Ashok Leyland, which manufactures your army vehicles, will also be in focus. So these are some of the companies which will benefit from 2.38 lakh crore approval by DAC.
Okay, thank you so much for that. In fact, a couple of your shipping companies also are in focus along with this, like a Garden Reach, which is seeing some smart moves in today's day of trade. Sachin, any view when it comes to the defense players, because the outlay is pretty strong? The only concern that everyone has is with regards to execution, because order books are absolutely mind-blowing. What would you advise investors to do?
I think absolutely, Hiral, you're right. Execution is the key in this segment. Though we have been improving in that front, but yes, going forward, what we see, the kind of new companies which have emerged in defense space, data patterns, even editor just discussed about Bharat Electronics, where there is a lot of push on the electronics, radar size, jamming. Right. So the new segments where the warfares now are quite designed first, into that segment that initially on the aerospace side, you have to be really strong on the radar and communication and electronics. So from that perspective, all these companies, Data Patterns, MTAR and BL will have a better edge as compared to the other defense companies.
Well, given the rising temperature, AC companies continue to remain in focus. Now, we spoke to the management of Blue Star to understand the inventory level and how the price hikes have been received by customers. Listen into what their management have to say.
Is there a worry on the market sentiment? I mean, thus far, at least the brokerage notes that have come out are saying that or investors who go and visit on-ground channel checks are saying that the consumer sentiment has not been hit very badly thus far. Do you differ there?
Invariably, it will happen. Today, they are not seeing the pressure, basically because inventory that was built at old prices are there. The price hike is to the tune of around 13%. See, 5% comes out of energy label change, around 8% due to input cost material, excluding plastic. And the styrene, polystyrene prices are going up now. So let us imagine that that is not necessary at this point of time. So the moment they see the prices are higher, and it all depends on when this Middle East crisis will end.
Mr. Tyagarajan, I just want to get a sense of the timelines, right? Because the last time we had spoken, you'd said, and this is before the conflict, so you had said that you were looking forward to a build-up of certain demand from the dealerships because prices were expected to go up. So I'm trying to understand the timeline of events from that point to this point. The prices have increased, and has it only been that 13%, or is that the latest round that is yet to take place?
No, December 2025, energy label change is going to commence from 1st January 2026. We are allowed to bill to the dealers, and the dealers can buy that product and sell till that inventory is lost. So therefore, the dealers end up buying. That price increase due to energy label change, like to like. Strictly speaking, let us say old 5-star is becoming a 3-star at this point of time, for argument's sake. The price remains the same only, but there is a new 5-star now with a higher energy efficiency, which will cost more.
So that's the management in terms of pay. Blue Star talking about how the summer could potentially be difficult as well. The stock down nearly 3.5%. Such in quick view when it comes to AC or cooling companies, because the summer has not started as much. The way everyone had intended it to be, but there is still hope.
Yes, there is hope. Last summer was not good, so it impacted almost all the companies like Blue Star, Voltas, PG Electroplast. But yes, there are hopes that this time it will be better. And, the companies are also changing their models, getting more energy efficient. And even though the inventory is taken care of, till now, that's what we hope. And going forward, the season should be good. But yes, still, I think what investor can do, that they can always go for the companies where the AC is a bigger play, but it's not the only play. Where the companies like EMS companies who are building up ACs also, washing machines also, and there are other electronic components also. So it gives a diversification from that perspective. So from that perspective, PG Electroplast, Dixon kind of play can be more resilient and diversified play rather than the pure play on the AC side.
Okay, so that's with regards to IAC manufacturers. But thank you, Sachin, so much for joining in. Always a pleasure to speak to you as well. But the key from here on is going to be, how is April expected to look like in terms of markets? How have they been historically? And, this time probably maybe slightly different. But let's understand the seasonality in the month of April. Somit is with us to take us through that. Somit, over to you.
Yes, April month has always been good for the markets. At least that is what the seasonality is indicating to us. Now, what we have done is we have analyzed the last 10 years of the of April month, and what we have seen is that Nifty has managed to close in green nearly 8 times in the month of April, and the average returns, if you look at, is positive 3.1% that we have seen for the benchmark. Now, positive returns of more than 3% is something that we have seen in 2018, 2020, 2023 and 2025. And the most interesting part here is the fact that the highest return that we have seen in the month of April is in 2018 and 2020, where index gained 6 to 15%. And in both these instances, in the month of March, we had seen a weak month and a weak closing. Even in this time, in the month of March, we are down around 9%. So we can expect similar trend that could happen in April 2026 as well. Now, if you look at the mid-cap and the small-cap index, both the indices have closed in green. 9 times is what mid-cap index has closed in green, while the small-cap index has closed in green 8 times, while the average returns are close to 4.8 to 5.6% for both the mid-cap and the small-cap indices. Now, if you look at the sectoral indices, it's the Nifty Auto Index which has closed in green maximum number of times, 9 out of 10, average returns 5.9%. And when it comes to FMCG, energy and bank, all these 3 indices have closed in green anywhere between 7 to 8 times, while the average returns are anywhere between 2.7 to 4.7% for these indices. Now, apart from that, the other indices, if you look at metal, pharma, real estate and IT. Now, out of this, IT is the worst performer, down, gained only 3 out of the last 10 Aprils, while the average returns is negative 0.4%, while the other indices have managed to close in green 7 times, while average returns are anywhere between 5.6 to 6.1%. Now comes the most interesting part. These are the stocks that have closed in green more than 8 times, and the average returns are also more than 8% that we have seen. JSW Steel, Aurobindo Pharma, SRF, Godrej Properties and M&M tops the list. These are the top 5 stocks that have given the highest return in the month of April, on an average anywhere between 9 to 12%. Another interesting counter which is not part of this list is Divi's Lab. Now, that is one stock that has closed in green in all the months of April in the last 10 years, and average returns is more than 8%. Now, on the flip side, there are 2 stocks that have closed in red 7 times, and average declines is more than around 2%. Alchem Labs, average returns of negative 2%, and Infosys is another counter which has declined around 7 times in the month of April, and average returns has been negative 3% in the month of April.
Okay, so that's with regards to what the historical data is suggesting for the month of April as well. Thank you, Somit, for that. But completely out of time. With that, it's a wrap on this edition of Trending Stocks with Somit, the team that put the show together, and myself. Lots more lined up on the other side. In fact, this is going to be a special discussion on the RBI move when it comes to the Indian rupee and the impact it could have on the banks, on the economy as a whole. And Nisha Podar will be taking this forward. Please stay tuned.
हर पल मनाओ केसरी त्योहार। विमल
सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, Every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's at stake? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chunk.
Hello and welcome to NDTV Profit. I'm Nisha Podar. Let's dive into the biggest story of the day. The Reserve Bank of India on Friday issued a fresh directive aimed at arresting the sharp slide in the rupee, asking the banks to cap their net open position in the onshore deliverable market at $100 million at the end of each business day. Now, this move comes after the rupee fell to an all-time low of 94 rupees 84 paise against the US dollar. That was on March 27th, which reflected sustained pressure from global risk aversion. Now, dollar strength and speculative positioning in the currency market by tightening limits on banks' open forex positions. That's the move the RBI is seeking to curb the excessive dollar bets, reduce speculative activity, and also ease the pressure on the domestic currency. Now, this is also the first such directive from the central bank in nearly 15 years, underlining the urgency of this situation. To discuss more about this particular aspect and how it impacts not just rupee economy as well as the bank profitability, we are joined by a whole host of experts right here. Let me welcome on the show Dinesh Khara, former chairman, State Bank of India, Amit Pabari, who's the managing director, CR Forex Advisors, Kunal Sodhani, Gandhi, who's the head of treasury at Shinhan Bank. And we also have with us Teresa John, who's the deputy head of research and lead economist Nirmal Bang. But before we head to our guest, let's also understand this particular matter. If we have our colleague who will be joining us to really explain what this move really means. But my first question to you, Dinesh Khara, this particular move is one of the most important moves that is coming in from Reserve Bank of India, where RBI has been stepping in, and now it wants the banks also to cooperate in their actions to avert rupee fall. How do you view this?
No, I think what we have been observing is that ever since, it was possible to... Hello, am I audible? Hello?
Yes, sir.
Yeah, so, ever since it was possible to get into the overseas market, into the NDA market also, to hedge the positions. So there was, frequent move in terms of open positions in the domestic market and also covering in the overseas market. So this move essentially is meant for the onshore market, and in the onshore market, they have restricted the open position. Earlier, some of the banks had a tendency of having some percentage of their capital allocated for managing this kind of a currency movement. So now RBI has said that it should be confined only to 100 million. So essentially, they are trying to curb the speculative tendencies on the currency, which was essentially leading to the currency falling. We have seen that in the current financial year, rupee has already depreciated almost about 11%. And ever since the war has broke out, it has actually depreciated by about 4%, which is quite substantial. In the past, we have seen that generally, on an average, rupee used to depreciate about 3 to 4% a year. But as against that, within a month, we have seen this kind of a tendency. So I think essentially to ensure that, if at all the dollars are available, then it should be brought to market, and it should actually, calm down the market. This is what the intention is. And of course, I think the broad message is that not to get into the speculative trends at this point of time. When, as it is, we are having a pressure on the foreign currency. When it comes to oil import, we have already seen the crude prices have gone up. When it comes to, remittances, there seems to be some kind of pressure. And when it comes to, the FPI, we have seen the kind of trends. So in this kind of a situation, just to ensure that, external factors should not influence the movement of the rupee-dollar parity. That is why it has been done. I think in the overall interest of the economy, this is a very welcome step. And it will go, at least for the time being, it will help in terms of keeping the markets calm for the time being. Yes, of course, there is a challenge in terms of MTM, and it will probably have an impact on some of the banks who are holding significant open positions. They'll have to probably wind down their positions, and which lead to some kind of a losses also. But that, I believe, is a temporary phenomena. But in the overall larger interest of the economic interest, perhaps it was valid. And we have seen that way back in 2011 also, similar kind of currency volatility was seen. And to curb that at that point of time, RBI had come out with a regulation saying that a certain percentage of the capital has to be earmarked for allowing such open positions. But yes, of course, now it's in absolute term. So I think it is essentially to ensure that the volatility of the currency should be curbed.
That's right. So Dinesh Khara, what you mentioned, several of those aspects there. And of course, these are unusual times. This is a global war situation. And therefore, RBI is taking some of these measures which are rarely taken by the Reserve Bank to avert the rupee fall. Let's ask the economist also, Teresa John, how do you make of this particular move and the way the FPIs are really taking out money from the country? Both of them really offsetting one another? Because we did see a little recovery in rupee today, but then it is again falling with the pressure built on the market. The FII is pulling out, and also as dollar surges, rupee falls further. So how do you see this particular situation impacting the rupee fall?
Well, I think... yeah, please. I'm sorry I missed out.
So I think we have a double whammy situation. You have pressure because on the rupee because of higher oil prices. You have an increasing trade deficit. So that is one aspect. And as you mentioned, on the capital account side, you have substantial FPI selling as well. So both on the current account and capital account, you have pressures. And this is probably one among the few years where you will actually end up with a BOP deficit, and potentially that could move into FY27 as well. So fundamentally, the rupee should trade with a weakening bias, and I think what RBI has done is appropriate, given that there is a lot of speculative attack on the rupee, and by curbing the open positions, you can actually, at least to some extent, curtail those speculative positions. It could be a hit on banks' profitability because of MTM losses, but at least in the interest of the broader economy, this should help.
It should help overall, and of course the pressure is building. So Amit Pabari, as a forex expert, how do you see the transactions, and how much of the year-end transaction pressure and account settlement pressure has also come into the mix to put pressure on the rupee?
I think the kind of move what RBI have taken is fantastic. They have taken a move called Dhurandhar kind of a move, or telling to the market that main hoon na. So basically, in the short term, it is definitely a positive step, and because of which we are expecting we can get some amount of appreciation in the dollar rupee pair. Saying that the overall trend will depend on geopolitical tension. If the geopolitical tension persists, oil continues to go higher, FII will continue to take out money, and trade deficit will increase. So structurally, these are the major things which is going to put pressure on the rupee. But in the short term, we can expect rupee to get stronger towards 93.5 kind of a level, and any dips will be bought by importer, because structurally, till the time issues are there, importer will go and buy, and probably exporter will stay light on the hedging side.
Right, Amit, thanks so much for putting that into perspective. But let's ask one head of Treasury, Kunal Sodhani of Shinhan Bank. Kunal, so you have to really execute what RBI has stated. How executable is it, and what will be the impact on the banking sector?
I think I'll just move 2 steps back. First, obviously, it's important to understand that why this move has come. If we talk about the forex reserves India has, it's around $698 billion, out of which the gold reserves are around $120 billion. Roughly, the RBI net short position in forwards, as per my personal estimate, is around $100 billion. So the net impact, the FCA, the net position is around $470 billion roughly, which means it is less than 9 months of import cover. Which possibly during the crisis where the geopolitical tensions are still underway between US, Israel and Iran, that's a concern from the FX reserves perspective, where the net position of forward position is already short. Thus, they cannot add more short positions because it will just spiral that effect more furthermore. Secondly, also the other reason I understand is the liquidity conditions being March end. If we talk about the March end, the liquidity because of GST, advanced tax outflows, and even the book closing of corporates, the liquidity is very thin for INR. So if further selling happens into the market by the Reserve Bank, it will further create deficit into the liquidity, INR liquidity, which is again a concern. So I think these two were the major reasons why possibly RBI might have thought of the new limit of $100 million on the onshore market. Yes, it did create some appreciation in the morning where the rupee opened around 93.59. The NDF was actually showing 92, 96 levels also, but we did open slightly higher at 93.59 levels. The estimation as per us is around $25 to $30 billion of excess positions, which overall banks are holding. On an average, a bank is having around $300 to $400 million of position. Yes, there can be some M2M and some losses which can be taken by the banks. But I believe this is a temporary measure. I would not say this as a permanent measure of improving the rupee appreciation, but a very right measure considering the challenges which the central bank is facing at this point in time. Lastly, I want to just add that it's not only about the measures which are taken. It has been also countered by the 10-year US Treasury yields, because if we see, the Fed is now not looking forward for any rate cuts. When that is not happening, I think the flows which are in the Asian countries are moving off the market, which means they are moving out in terms of the FPI outflows. So it's not only the geopolitical reasons which we are talking about, but also the US Treasury yields which have been rising. So thus, we have seen outflows to the tune of $13.3 billion from equities already, which were last seen in 2020 during COVID time in March itself, around $14 to $15 billion. So bond yields, yes, it's important to watch out. Liquidity, very important to watch out. Couple of more measures can be expected, as my personal opinion states, is some FCNRB or NRI inflow related incentive systems can be further added and thought of, maybe, which can further assist and support rupee also.
All right, many important points there, and the measures don't stop here. That's also something that the experts are pointing out. Thanks, Kunal, for that. But Dinesh Khara, the banks are going to meet the RBI with their, requests for giving a longer time period for really executing this ceiling. How do you see the situation from just the bank's profitability and bank's balance sheet perspective?
I think RBI as a regulator has a responsibility to ensure that the system should remain stable. So when it comes to banks' profitability, etc., that would be an impact for the time being. And in any case, we have to see these kind of actions in the larger context of how does it serve the economy. So I think on that particular point, my view is that perhaps RBI will be focusing more on the system stability than to look at the individual bank's profitability.
That's right. At the current moment, the focus is very different because our purchasing power has become so weak in the global market, and with crude oil prices also increasing, for us, the amount of rupee that we have to really spend to get that crude oil is just getting too high, and overall impact on the economy as well. But Amit, when we talk about this ceiling coming into effect, what are the other aspects which get impacted besides also averting the rupee fall? Do you think that the volatility is going to increase because of the semantics and the movement and the offshore overbearing nature on rupee's movement?
Definitely, after 10th of April, as the banks have been limited to operate, we can see a lot of volatility, and offshore market is again going to determine the value of rupee on the onshore. Before 2020, that was the case. That is why RBI bought this regulation. As again, they have moved back to the old regulation, we are expecting volatility is going to go up. Second, gap up, gap down chances will increase. Third, hedging cost across the tenure is going to increase. So in the long term, it is a negative aspect. In the short term, it is going to support the rupee. But the idea is that when the things were good, RBI allowed banks to go and hedge or take a position in the offshore. When the things are difficult, they have come back and said, let me protect the situation currently and take a collective action so that speculation position do not build up. My sense is that they are going to come up with many more steps like that to curtail the volatility. So it's a situation where you trade off. What is more important? Whether it is important to curb the volatility at this point of time, or whether it is important to look into bank's profit at this point of time, or whether you want to increase the hedging cost. So RBI have taken a bold step stating that currently I want to reduce the volatility, and I am not going to allow rupee to weaken drastically what has happened in 2008, 2013 kind of a scenario.
Right, Teresa, John, given this scenario, what are the key figures for rupee levels that you're really penciling in the short term and medium term because of this particular move?
So over the short term, we think the rupee could depreciate if the situation persists. So it could cross 95 to the dollar. But fundamentally, I think, the rupee has seen a sharp depreciation. So once the situation settles, we think we could see a pullback. So the average for FY27 for us would be closer to 93.8.
All right. So uncomfortable level, Dinesh Khara, would be 95 to the dollar. And that's where looks like RBI has really stepped in because they were not penciling in such a steep fall. What is it that you're expecting from the RBI governor in the upcoming monetary policy? Looks like the entire focus is going to be on the economy as well as rupee this time around.
Yeah, I fully agree with you. And I think when it comes to interest rate, etc., the stance which have been taken, because RBI would be equally concerned about the growth potential. We have already seen that CA has already gone in on record saying that they might be required to be readjusted towards the lower side. So I think the overall impact of the evolving global scenario will actually show up, and that will be something which RBI would be very watchful when it comes to their next policy meeting is concerned.
All right. In fact, on the other hand, the monetary policy move and the stance could also be changed. I'll come to you on that later. But Kunal, at the particular moment, what is on top of minds of the bankers to avert a situation in which they are impacted too much? And how are things going to develop when they meet with the RBI? Give us a sense on what all requests are getting placed and what all, negotiations or at least the request with the RBI could be.
I think the requests were already made by the large banks with respect to the extension of timing, which is till 10th April. But the banks have been supportive. The bank appreciates the RBI's vision and the measures. And I think the banks are in synchronization with supporting the central bank. So I don't think that's a thought that banks are not ready to absorb losses. Obviously, the concern remains because of the year end also and the quarter end also. So thus, in terms of profitability of the bank, the concern was from that perspective. But I don't think there is no missync. Everyone remains in sync in order to support rupee. One thing which I just wanted to add again here is, if you might have observed the oil prices, they have moved from almost around $59 per barrel to $119 billion per barrel. But the end use, the retailers have been not charged any hike in terms of the petrol or diesel prices. Initially, the OMCs, government and retailers are the three parties who are involved. The OMC started bearing all the brunt on themselves. Later, they stated the government, and then the government cut the excise duties, which again supported the OMCs to, share some losses. The last leg remains retail. So in case if this war continues to persist for a couple of more days also, I think it will be passed on to the retailer, which means the inflationary risk starts going much higher once again, where the monetary policy decision making remains much more important to watch out, particularly from the liquidity perspective. Maybe addition of more VRRs, buy-sell swaps by RBI, or maybe some other measures which they may look forward for. So I think the last leg is still left, which can impact the inflation to some extent, at least to 1.5%. That's as per my estimates.
That's right. These are very pertinent points. Trisha, John, very quickly, the overall impact of the rupee movement, oil movement, and what could be weighing on top of RBI's mind in the monetary policy, in your view?
I think RBI will be in wait and watch mode at this policy because we are still only a month into the war. Definitely, I don't think there'll be a change in stance or a change in rates. But what they will commit to is continued provision of liquidity because that will be the most crucial point, at least at this point in time. And then they will wait and watch how things pan out and at least on the rate and the stance, I think at least in the next policy.
All eyes would be on the next policy. Dinesh Khara, last word to you. Summing up, the most important aspect is that a lot of foreign brokerages have also reduced their expectation of the GDP growth of India. A lot of investors have written off India in terms of the worst affected market because of crude oil prices going up. The crude prices are impacting various sectors in terms of transportation cost as well as fuel and raw material cost, increasing the inflation. So when growth and inflation are at these levels and liquidity is also a concern, what are you expecting from the Reserve Bank of India, and from your vantage position as a banker, how do you see this particular bit developing and impacting the economy?
Well, I think these are the trying times for the economy, and also when it comes to RBI has been very, very pragmatic and mindful of the ground level realities, with a very clear focus in terms of supporting the growth. But yes, of course, if at all inflation is very clearly seen on the horizon, then perhaps they cannot ignore these risks also. So I think for the time being, I expect that as far as RBI is concerned, I expect a pause movement from them. I am really unable to comment about what will be the outlook, but nevertheless, my sense is that as far as the policy rates are concerned, there should be a pause. That's what my sense is.
All right, there should be a pause. That's the verdict coming in from Dinesh Khara. Of course, too early, all the experts say. But Amit, one quick question to you. As the Forex movement, how do you see the rupee really averting further fall? Because today we saw enough amount of volatility, but the market pressure is really weighing heavy despite RBI's new mandate coming in for the banks. How do you see in the next few days rupee movement from your channel checks and from the trading perspective?
What we are suggesting to our clients is that between 94.5 to 95.20 kind of a level, they should participate and increase their hedge ratio. The entire theme is that if RBI is very clear, they want to protect the overall rupee weakness. So there are high chances that rupee might get stronger and move towards 93.5 kind of a level. And if the war gets stopped, probably we can see 93 or 92.80 kind of a level. So basically, if the entire move from 90 to 95 has happened, so now 95 is going to act as a very, very strong resistance, and probably this is the best time where an exporter should increase their hedge ratio, an importer should stay put probably towards 93.50 or 93 kind of a level. They should start getting longer. So the idea is do not get panic on the buying side, get activate on the selling side. Technically, equity markets are at bottom. FII exited the market when rupee was at 83. So now rupee is at 95. So probably, once things get settled down, we might see good amount of interest coming from the FII side also. So FII coming back, war getting stopped, crude oil price getting lower,
yes,
RBI protecting, these are all positive.
All right, and that is also utopian to think of right now, Amit, but I like your confidence and positivity on this. But we have tried to cover all corners at this particular point, and yes, rupee has recovered because of RBI's action. The market pressure, FII pressure still remains. Thank you so much, gentlemen, lady, for joining us on this discussion with all your perspectives. Thank you, Dinesh Khara, Teresa John, Amit Pabari, as well as Kunal Sudhani for joining in. So that was the full perspective coming in on RBI's action on rupee levels.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's that today? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers with me, Varsha. Let's see what we're gonna focus on today's show. Well, we'll be speaking to the management of Interarc Building. Now, this is on the back of approval of QIP. Also, we'll be talking about KNR Constructions. Now, the stock is in focus on the back of order win of around 1700 odd crore. This is from NHAI. We'll be also, speaking about why the sugar companies are, buzzing today, because ethanol push may cut Brazil's sugar export by 14.2% in 2026 and 27. So this is, a benefit to the Indian sugar companies. So we'll be talking about Dwarike Sugar, Mawana Sugar and Sri Renuka Sugar. All the stocks, if you see in trade, are up today. Well, we'll also talk about Ganesha EcoSphere. The stock is up. This is on the back of volumes. The volumes are at 3 times of its 30-day average. We'll be speaking about Shivalik Bimetal as well. For the same reasons, if you see, the stock is buzzing on the back of volumes. Well, now let's focus on markets. If you see, Nifty is down almost 1.53%. Well, talking about the sectorial indices, all sectors are in red. Talking about, Nifty Bank is down almost 1.5%. Nifty IT is down almost 1%. Nifty Midcap 100 is down almost 2%. Talking about small cap, let's see which are the stocks which are in focus when it comes to small cap. Well, on the gainer side, you have all the sugar stocks, as I was saying, are buzzing in trade today. You have Hilton Metal, which is the stock is up on the back of volumes. Volumes are trading at 8 times of its 30-day average. There you go. The stock is up almost 20% in trade. You have KNR Construction. Again, the stock is moving on the back of order win. Stock is up almost 9% in trade today. Ganesha EcoSphere volumes are at 3x. Suven Life is also, buzzing. A lot of things can happen in this company. Do keep a watch on Suven Life as well. On the losers side, though, you have Vertos ADV, you have FCS Software, Bhagiratha Chemicals, and Royal Orchid, which are under pressure as of today. Well, moving on. Interact Building Solution is one stock which is in focus. Now this is on the back of approved QIP. So company has approved QIP to raise capital. The company is doing a lot when it comes to the capacity expansion. We'll also speak about that. But to speak about more on QIP, what lies ahead for next 2 to 3 years and what are the growth triggers, we are here joined by Mr. Arvind Nanda, who is MD at Interarc Building Products. Well, Mr. Nanda, welcome at NDTV Profit. Always pleasure to have you. Let me start with the QIP that has been approved. Just wanted to understand if you could highlight us with the details. What is the amount that you're going to raise and what is the utilization of funds going forward?
Thank you. We have been seeing that there has been a lot of uptake in business, especially in the demand for heavier structures going forward, which we were doing very low business in. So companies which are setting up high-rise buildings, data centers, steel plants, power stations, they are requiring a lot of heavy structure, pre-engineered structures to be manufactured and delivered to them. That was one area that we were not really very prominent in. So we decided to set up a new plant last year. We started that in October, November last year. And the first line will be in production by June, July of this year, now next quarter. So while we were at it, we realized that the demand is currently picking up at a very great pace. So we took approval of the board for a QIP so that we could prepone that capital expenditure, especially in the heavy structure, going forward, rather than wait another year before starting it. We decided that we will start it now only and have it in production by November, December, or latest by January, instead of 15 months later as we had earlier planned. So that is the main reason for raising the QIP, for preponing the capex, where we are seeing a lot of traction right now. A lot of demand is happening. And pre-engineered building, our pre-engineered building capital expenditure is going on as planned. Gujarat plant will come in stream by June, July also in production. And the second phase of Gujarat plant is planned between 8 to 10 months after that. So that is still on plan. So our growth plans for pre-engineered building remain as they were, targeting about 2,500 crores for 27-28 sales target, with margins remaining very similar. But heavy structures we are a little bullish on because two reasons. Number one, there's a big demand coming up. And also our side, we are doing nothing much. So we can do a lot of addition to that for our company.
Right. Mr. Nanda, talking about your Gujarat plant, which is the next leg of growth for your company, what is the expected commissioning date and how long will full utilization take place, and also what's the peak sales potential that you're expecting from this capacity?
So our Gujarat plant is nearly completed. The machineries will start arriving by April, and by May, June, we should do trial production. So that is just a matter of another 3 months for the phase 1. Phase 2 will take another 5 to 6 months. That phase 2 is planned in such a manner because manpower you get slowly. You can't get manpower to that same level as we would need. So while the first phase is completing manpower, then the second phase will start hiring. So the peak production from Gujarat plant should happen by December of 2026. And that, like most of our plants, adds between 450 to 500 crores for the full plant, first phase 1 and 2 for our pre-engineered building. So that will be our 5th complete plant for pre-engineered building production. So by end of this year, we should have a capacity of about 2,500 crores plus for pre-engineered buildings with Gujarat plant completely online, phase 1 and 2.
Okay. So if you could also take us through what's your current order book, how has been the order inflow so far in the fourth quarter, and for FY27, any targets that you have set?
So the order book that we declared last was after our board meeting in the month of February was 1,650 crores. Considering that pre-engineered building normally don't hold a very large order book because most of the orders have to be, even the large ones have to be executed within 9 months, maybe maximum 10 months. So that was the fullest order book that we could have with our present capacity. I think the same tempo will be maintained in quarter 4 also. We will announce the figures once the accounts are announced, financial figures are announced. But the tempo is the same. And in fact, we are seeing an improvement in the tempo. But we have to be limited by the amount of business, amount of deliveries that we can make by our capacity. So I think till the new plants come in, Gujarat in the first quarter of next year, and the heavier structures, and then that, the order book will substantially remain about the same till we are in an improved position of delivering, because delivery is very important.
The business that you're in and the current market scenario that we're looking at, the cost of raw material for you must have definitely increased. Are you confident that you will be able to pass it on to consumers, or is it some part of this impact you will take on your books and the rest is something that you will pass it on? Can you just explain how does this work for the company?
So we are constantly taking new orders, and whenever we take new orders, we always price at the latest pricing that we have, plus whatever we think the future pricing will be. Normally, steel is very cyclical. So January, February, March is always a quarter where the steel prices go up. You are right. This time it's a little bit more than normal because of the world situation as it has happened. But it's always going up. And this extraordinary rise in prices, what has happened in the last three months, will be a little bit of a hit in the margins, but that will be for the first quarter next year. But we are assuming that our customers will also understand that it's been a little different, little more than what is required, expected, and they will give us substantial price increases, so that overall in the next 1 year we do not expect any margin to be hit. Maybe a little bit in the next quarter, but overall in the whole year we don't expect any change because steel is cyclical. It keeps going up and down. At the end of the year it balances out, and our orders are always at fresh pricing. We don't have a fixed price that we must take the order at that. And when the variation is a little bit more, as it's happening now, we have also shifted to taking orders more at variable pricing. Customer also likes that, and we are also benefited by that, so we can pass on. So both the things are happening. Pricing is increasing. Customers are looking at giving us better pricing even for orders obtained because of this unusual situation. And we are shifting more and more to variable pricing till the prices stabilize. So overall, I would say 26, 27, there will be no change in the margin.
Okay, so we can expect 7 to 8% of PAT margin, sir, in FY26 and 27. Is that the conclusion?
Yes. Both the margin percentage as well as because of heavy structures getting added onto our turnover, the quantum of the profits will also go up. That is also very important to us. It's not only important how do we get a better margin per se, but how do we also get the total profitability to increase so that the investor can benefit from that as well. So both we are trying to do, and we are confident about that.
And sir, any impact on you when it comes to the gas shortage also?
No, as a factory of our own, we don't really use any gas, except very little. Most of them are not. We are not using gas, but that is a very small quantity which we have no issues at all. We have had zero issues as far as shortage of gas for some of our welding is concerned. At site, we don't need any gas because everything is ready-made from the plant, so there is no requirement over there. I think what is happening is that gas shortage has affected some of our steel suppliers, especially the galvanized steel suppliers. But I think being a very old partner with them for last 25 years, we've been buying steel from all these steel majors. and having very strong relationships. So we are not affected even in the steel quantities being supplied to us. So we have not really seen any adverse impact at present.
And so lastly, for FY26, you have raised your revenue guidance from 1700 crore to 1900 crore. For FY27, you've given a target of around 2100 crore. Considering the historical growth rate that you have been, that 11% of growth over FY26, is it a bit conservative in your opinion?
Well, this year's growth we had given that it will increase to about 1850. We hope it will cross that figure. So 1850 to, we had given a 15% growth target to take it up to 2100 plus. It is conservative because we need the capacity also. Last year we managed to put the capacity in place a little earlier, get the orders and execute it. But the future capacity now was planned on the earlier basis. So we need the capacity to supply that material as well. So it is conservative, but we have to keep in view the position of our supply and our deliveries that we need to make. So maybe let us see during the year if the situation improves for our supplies, factories come into play faster, production comes into play faster, we might change it, but we don't want to say anything at present. A lot depends on supply. We are not seeing so much of a problem in the order intake. The market conditions for the business are still very, very bullish. More is our own capacity to deliver. So earlier, our target was to deliver 22,050 crores into 26-27, which has already increased to cross 2,100 crores. So if you look at from the original figure, it has crossed it. But yes, from the current, because currently if we cross 1850, it will only nearly be a 27-28% increase instead of 17%. So we have utilized our capacities faster. But I think we will have a more clearer picture for next year by maybe August, September, once our new capacities are in place also.
Right, got that view. Well, thank you so much, Mr. Nanda, for joining and having a conversation with us. Thank you so much. Pleasure to have you.
Thank you.
Well, this was Interarc Building Products, outlining the growth prospects for the next 2 to 3 years. Well, let me also invite our guest for the show, that is Lancelot D. Kuna, who's CIO at ValueX Wealth Connect. Well, Lancelot, welcome at NDTV Profit. You heard the management of Interarc. Just wanted to understand your view, considering the company is doing, is expanding its capacity and it's betting on the next leg of growth.
Yes, I think, the company has a market cap about 2,600 crores and is actually building a good business model in terms of providing prefabricated steel structures. However, if you look at it, since, at this point in time, based on the current mix, the profit margins are not that high. And while the new plant capacities will start, will increase the capacity, so overall profitability may go higher. It's important to see how the product mix changes. And as the management had mentioned, that they are looking at taking on much larger size of prefabricated steel products, which could increase the margins. At the moment, their margins are, around 8 to 10%, which is a fairly low profit margin for a business. And any kind of material shocks can impact this margin going forward. So that is a big risk that one looks at. And if you compare it with the current PE, it's trading at about 20 times earnings, which is, fair price earnings for a company growing at this pace. But one needs to factor in the higher risks as well.
Now, before we move on to our next small cap counter, exclusive coming in on India's largest stock exchange, that is NSE. Now, this IPO has been delayed for quite a while, but right now the company has, or the NSE, the exchange has started or kicked off its IPO process. In fact, they have sent emails to their investors regarding this IPO, and they're seeking investors' expression of interest via the IPO for the OFS route, which means that they are seeking investors' interest whether they also want to participate in this IPO via the offer for sale route, which means that whether investors want to sell their shares in this IPO, that will be launched very soon. So it is one of the steps that NSE has taken to kick off this. In fact, what we are also understanding is that the last date to submit this expression of interest is April 27th. So keep an eye out for that one. This will be one of the most interesting IPO because they have already announced nearly 20 bankers for this IPO, and the IPO size could be as large as 20,000 crore rupees. So one of the largest exchange will be coming out with its IPO soon, given the fact that it has kicked off the shareholder process for this IPO, which will be coming off soon. Well, before we get into the next small cap counter, let's get in Puneet to understand what has been buzzing on the FNO side today.
Well, thank you for that. It's definitely been a very interesting day where we've seen for the BSE Sensex, of course, continuing that pressure. So only one stock right now, Power Grid, that's up 0.5%, but largely a day where we've seen financial being under pressure. So Kotak Mahindra Bank down 2.8%, Bajaj Finance, Axis Bank, SBI, all down 2 to 3% in today's trading session based on the regulation and the news flow coming in from the RBI. Apart from that, also when you look at the long unwinding stocks, those are some of the key ones that we continue to focus on. Nifty Bank, of course, because of this same regulation, has been under pressure, but the metal pack continues to outperform. So SAIL as well as Hindalco are up and about in today's trading session. When you look at the short coverings, again within the metal pack continues to favor in covering of shorts for Nalco as well as Coal India. In terms of longs which are being built up in the system now, you're seeing stocks like LIC as well as Ashok Leyland, but look at the momentum very, very quickly. So you've seen longs being unwinded in both these counters despite expectation of a strong sales growth for Ashok Leyland for tomorrow and the day after for the month of March. And largely in terms of build-up of shorts, you've seen Bandhan Bank as well as AU Small Finance Bank, both these counter being under pressure. So these are some of the key stocks to watch for investors as part of our BSE FNO setup today.
Right. Thank you so much, Puneet, for all the details. Well, moving on, sugar companies are in focus now as Brazil is expected to cut shipments by 14% in 2026-27 seasoning beginning April. Now, as Brazil will cut imports, Indian companies will benefit. But, to speak more about this and to give us more details, we are here joined by Jasmeet. Jasmeet, over to you.
Well, Varsha, thank you for that. The overall positive momentum and sentiment for sugar stocks for say, if you look at the overall trajectory and why the overall up move is, firstly, we have something like as ethanol price spiking due to the oil. That's something that's supporting the sugar prices. But we also have something like a Brazil, the largest producer of sugar in the world, is cutting down its production by 14% in the coming season of the sugar from April month onwards. Now, why they're cutting is the mills want to convert the sugarcane into ethanol oil because the high demand for energy requirement, and that's what they see converting the overall sugar space. So that's the reason why they're cutting the production. Now, while if they cut the production, the demand of sugar still stays the same, which would in turn take more demand for something like Indian sugar brands, and that's why the stocks are buzzing in trade. If we look at the key counter like Dwarka Sugar is about 13% in today's trade, while Mawana Sugar is up 8%. Even Balrampur Chini remains a key focus alongside Renuka Sugar as well, where they have been spiking in trade today on the back of a similar news.
Got that view. Well, thank you so much, Jasmeet, for all the details. Lancelot, what's your view on the overall sector, and also your view on Dwarka Sugar and Sri Renuka Sugar, if you cover those counter?
Overall for the sector, one has to be investing when these stocks are at all-time lows, because this is a cyclical industry. It depends a lot on on the prices of sugarcane, the availability of sugarcane, and it's not merely the ethanol blending that will change the future. It's also the cost of input. And if you look at the current valuations, like Dwarka Sugar is trading at almost 45 times its earnings. So these are all expensively priced at this point in time, and one should wait for serious correction and then look at investing in the sugar counters. Yes, the news is positive, but based on news flow, it's not always the best time to invest.
Kena Construction remains in focus. A 3,400 crore market capitalization company wins an order worth nearly 1,700 crore. Let's get in, Puneet, with more information.
Well, thank you for that. As you rightly mentioned, 1,700 crore order win today, and stocks up and about in trade today because of that. It's a hybrid annuity model, or a HAM in the state of Telangana, and construction will be for 730 days with roughly a 15 period operation concession period as well. Now, importantly, this will also come on the back of some recent order wins, roughly around 83 crore order win just a couple of days ago on 26 March in the same state, 850 crore order win on March 12th, and a 2,000 crore order win that the company had won in 17 Feb. So quarter 4 has led to order wins. But despite that, stocks been, if you look at the 1-year chart, has been in a corrective phase because of 3 back-to-back quarters of weak financial numbers. Now, in terms of the order book, as of quarter 3 of FY26, stood at almost 8,800 crores. So when you all add up all of these orders, roughly around 4,000 crores of orders have been won because of that. But despite that, and despite giving a 2-year revenue visibility from year on, stock's been under immense pressure given the margin compression. And what's interesting is that for FY26, management has guided for a revenue range of 2,000 crores. That will be a 40% dip compared to the same time last year. Expectations for FY27 is also not that great, of just 2,100 to 2,200 crores. And expectations of margins are between just 9 to 10% from roughly 13 to 14% earlier. So continues to be a stock that has buzzing today on order win, but the last 3 quarters don't give much confidence to investors to enter at this point of time.
Lancelot, any view on KNR Construction, as Puneet was mentioning that the last 3-quarter performance was not quite interesting here?
Yes, what we have seen is that during the last 2-3 quarters, there has been a decline in the overall sales and order book, and that is putting pressure on the company. Also, if you look at it from a working capital perspective, the number of days working capital has increased considerably over the last 3-4 months, and which means that from a cash flow perspective, more and more the company's, let's say, cash flows are getting blocked up in their working capital. So falling order book and a falling sales or execution, is, as well as a lengthening working capital cycle, does not augur well for the client. So while you may see some movement on the basis of a hike in, orders or announcement, I think it's better to stay away from this company for now. Wait, there may be better alternatives or stronger alternatives, because as the environment becomes a lot more difficult, we have seen, interest rates will start moving up. This working capital issue will only, only create more problems for the company going forward.
Right.
So it's wait.
Right, got that view. Well, thank you so much, Lancelot, for joining in and having a conversation with us. Always pleasure to have you. Thank you so much. Well, moving on, Ganesha Ecosphere is in focus. Let's pull up that stock. The stock is, buzzing on the back of volumes. Well, we have Parth joining us to give us more details on that. Parth, over to you.
Thanks a lot, Varsha. So Ganesha is the largest PET bottle recycling company in India, as they recycle around 16 to 18% of India's PET bottle waste. The company has a total installed capacity of almost 2 lakh tons, and they serve almost 400 customers across more than 16 countries. In the recent conference call, the management highlighted that the textile sector is witnessing some headwinds, and the company's volumes were impacted due to regulatory concerns. The management said that FY26 remains transitional for the company, while adoption in FY27 should be on the normal levels. The key strategies that the company will be focusing on in the future is that they'll be looking to strengthen their presence in overseas countries. They will be also targeting around 65% of their revenue from value-added products, which is around 40% currently, and they'll be increasing their granules capacity to meet the growing demand. About the stock performance, the shares are up more than 8% today, but in the last 6 months, they have fallen around 30%, and year-to-date, the company is still flat.
Right. Well, thank you so much, Parth, for giving us all the details. Viewers, this is all.
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and address all of them. So if you haven't already, do start sending them on the number that's flashing on the top of your screen. You can also call us, talk to us directly on your stock-related queries as well. Before we move on, a very quick check of the markets, because we've seen consistent pressure today yet again, and there's no new news to it in that sense. We're below the 22,500 mark, so almost down 380 to 390 points now at this point of time. Losers continue to be the banking pack, led by the regulations by the RBI, and hence you're seeing all those names led by SBI, led by Kotak Mahindra Bank, Bajaj Finance. All of those continue to be under pressure. And you're seeing that pressure on the Nifty Bank as well, now down almost 1,650 points. We spoke about in the morning that 52,200 is not a support for the banking index. 51,800 could be one of the earlier ones. But then since then, we've broken 51,000 as well and on course to hit a new 52-week low as we speak today on the banking index. In terms of the mid-cap and the small-cap performance though, that's the other key aspect because we've consistently seen pressure on the index down 2.2% at this point of time. And the BSE 500 also, the individual names, while there have been some winners like KNR Construction on the back of an order wing, we've seen and IRB Infra, of course, there as well. And the sugar pack continues to do well. You're seeing Delta Corp, Mahindra Life, Hindustan Copper, Power Industries, all of them that are down in trade today. But before we take all those questions and your stock-related queries as well, there was the ECMS approval that had come in, just a while back. And Dixon as well as Sirma, both those counters, while they are down in trade today, have gotten approval under the new ECMS scheme. Now, this is the round 4. The government was expected to have a press conference today, and hence the proposals for both these companies, along with the others, have been approved at this point of time as well. But it's important to get some perspective directly from the management as well. And my colleague spoke to both Sirma as well as Dixon exclusively on the same. Let's quickly listen into what they had to say on this approval win.
Congratulations on the fresh approval that has come in as part of the ECMS. Talk to us about your plans. How much are you willing to put in and where all will your facilities be?
See, the entire facilities will be coming up in Naidupeta, Andhra Pradesh. And with today's approval of CCL and HDI and Flex, we are present in the entire value chain of the PCB industries, starting with the input of CCL, going to multi-layer and HDI and Flex.
So what is also the rupee amount that will go in across these two facilities?
We plan to spend approximately 1,600 crores over the next 3-4 years for these 3 facilities. The PCB plant is already under construction and the construction is going full blast, and we expect that the civil structure should be ready to start receiving the machines by about August, September, such that by December or latest by January to March 27, we should be able to start the trial production. And we will be the fastest of the block from the time when the approval was given on 27th of October. In about 15 months' time, we should be into trial production. Yeah.
So sometime early next year is when we can expect.
End of this year or early next year.
So end of this year or early next year. Also talk to us about the other sort of categories within ECMS that excites Sirma, sir. Talk to us about where you might be coming up with further applications.
So I don't think we are currently going to come up with any further applications in the ECMS. The window is already closed. So we have approval for camera modules. There also will be starting the production towards the end of the year. And I think we have full work on our hands to first deliver at a fast speed. Because if you delay the execution of the project, then you lose out. So having got the approval, our first view now is the efforts are to get onto the construction and commercial production.
So lastly, the minister also pointed out to the speed and he expects more from the industry. What is your opinion on what the minister had to say?
See, speed we have already communicated that we are focusing on execution. Now, of the 4 asks which the minister had said, on 6 Sigma quality we are already working on it and very structured way. We'll share the details with the minister as he has asked. We have just received as a part of our quality journey a TISAX certification, and we are told we are the first company in the country to have that. On sourcing from local supply chains, we are as a company committed to source all equipment which are made in India and available in India to source that. And we have entered into contracts with some of the companies which have got approval in this ECMS policy, where we're sourcing all our automation, testing and material handling lines and systems from them.
Fresh set of approvals under the ECMS. Talk to us about the sort of investment figure that you're coming up with. Where will these facilities come up and what's the sort of production target that you're aiming for?
So I think this, as I mentioned, that this ECMS scheme that has been launched by the Ministry of Electronics and IT is very timely because now that we've achieved a very large scale, the whole focus shifts now to creating a robust and strong component ecosystem so that the value addition in our sector goes up and the success that we've achieved in manufacturing of the finished product is sustainable. So we in Dixon have already received the approval for the camera modules for which production has already started. Today we have received the approval for our display factory which will be coming up in Noida, Greater Noida area. And once this facility is operational, the capacity is going to be eventually almost 60 million pieces of mobile phone displays, on almost 24 million pieces of the IT hardware display. So I think it's a very significant step. And as a country, what we're achieving now with this announcement, that the value addition, which was at around 18% in mobile phones, is going to go up to almost 40%. And as you know, this was one of the issues, and the critics rightly pointed out that the value addition in this sector was very low. So I think that issue has been resolved. And with this approval, we are confident that we'll be setting up the factory maybe by July. The trials will start in July. And once it's operational, we would have put an investment of almost around 1,100 crores.
Well, that was the management of Syrma as well as Dixon, both those heavyweights in the EMS space. Stocks not reacting one bit today, probably given the market condition. But let me welcome in Avinash Gorakshankar, as well as he's, of course, the head researcher at Avinash Mentor Research Services, as well as Vishnu Kant Upadhyay. He is the AVP Research and Advisory at Master Capital Services. Gentlemen, both of you, thanks so much for joining in. Let me actually go across and take the first question from Daniel from Mangalore, and he's actually asking on Dixon Tech itself. Now, Avinash, believe it or not, his buying price is 531. I hope this is true and there's no mistake in it, because, and I don't even remember any time that stock went to those levels. But just in case, Avinash, your view on this ECMS approvals also that have come in. I think this is the second round of approval for both Syrma as well as Dixon. How are you viewing the space, and just the specific query for Daniel as well, what he should do with Dixon Tech now?
I think, Puneet, my sense is that he has a very significant amount of margin of safety because his buying price is significantly low. But if you ask me what is the strategy he needs to adopt, unless he requires money, he should hang on. I think currently the market sentiment being so bad, I think this news in a good market would have re-rated the stock, but unfortunately the market sentiment being so weak, this news has got no impact on the stock price. My sense is that over the next, say, 2 years, this gives a very strong runway for players like Syrma as well as Dixon. And I think both these companies should do well. As far as Dixon is concerned, I think this is the next leg of opportunity for them. And I think as the investments come in, the new facilities go on stream, you're going to see a new revenue stream coming in. And that is definitely going to be, earnings accretive. So my sense is, I think if he doesn't require the money, he should hold on. He should not get worried on the market conditions, because these kind of conditions are completely uncontrollable, and you need to carry on and you need to face the adversity in the near term. But yes, longer term, Dixon should continue to do it.
Got your view, Avinash. But the next question that's coming in is from Ramesh from Bangalore, and he wants to buy into Canara Bank right now for the short term. Vishnu, good afternoon. Welcome to the show. Would you recommend Ramesh to buy into Canara Bank? Is this a good time to enter?
Well, very good afternoon, Puneet. So from technical standpoints, the stock is looking quite bearish because the stock has fallen below its all short and long-term moving averages, and currently it is trading around 125. So I believe this losing streak should remain intact with a potential downfall towards 119, 118 sort of level. So let the prices come down towards that point, and from that support area, we can accumulate this.
Got that view, Vishnu, and so that's on Canara Bank. Stock's been consistently out of favor, and one of the casualties in that sense in what we're seeing in the market move. The next question is coming in from Satyan. He wants to know if he should book his loss right now, Avinash, in Sundaram Fasteners and Sterling Tools and buy into Syrma. So I think you gave your view on the EMS pack, but would you recommend exiting Sundaram Fasteners and Sterling Tools at a loss right now to Satyan?
I think, Puneet, both these companies are fundamentally very strong. Sundaram Fasteners represents the TVS group, and Sterling Tools is a very well-established fastener. And incidentally, both of them cater to the automobile sector. And our ground reports suggest that within the auto sector, activity is going on very strongly. I think not only the fourth quarter, but even the year ahead, that is FY27, is going to be a lot better. So unless the investor has a short-term view, he can exit. But as far as Sirsma is concerned, I think unless he's got a 12 to 15-month time frame, because these are also companies which are well identified, and whatever earnings benefits do come in from the new expandable facilities, that is going to take some time. So I think he needs to take this point into mind that if he's a short-term trader, then it's better to just book your loss and stay, in cash. I think rather than getting onto some other stock, because this is not a short-term call. You'll have to give in a time frame of at least 12 to 15 months going forward.
Got that view, Avinash. But the next question, it's pertinent today on the sugar pack actually, and Dalmia Bharat Sugar is what our viewer is asking on. He has bought 100 shares at 332. Let's pull up the stock today and see what it's doing. The sugar one, yeah, that's right. So it's up 11% today on the back of these news flows that we've seen on ethanol. Vishnu, would you recommend him to exit? He's bought at 332, so currently he's sitting on a profit with today's move. Should he exit, continue, or the chart suggests that this move could continue at least for some more time?
Well, Puneet, so, following this news, yes, we have seen some sort of, buying in the counter, and definitely the picture has been turned bullish in the space. I'm expecting this gain should remain continue till 424-25 sort of levels. But yes, we cannot rule out the possibilities of some profit booking from the present juncture. So yes, he should not get in panic and should continue with the position for the target of 420-425 sort of levels.
Got your view, Vishnu. But let's go across and take our first caller for today from Andhra Pradesh. And Mansa, I hope you're pronouncing your name correctly, is calling us. Please go ahead with the query.
I'm holding Sandur Manganese and Iron Ore. 300 shares I'm holding.
Okay.
Currently, I am at 24% loss. So I would like to know upside potential in this stock. Can I hold for long term or I have to exit?
Got it. Avinash, on Sandur Manganese, she's sitting on a loss for almost 24% as she highlighted with a buying price of 228. Should she continue to hold? Would you suggest a good time to average as well?
Yeah, Puneet, I think, if the investor can hold on for the next, say, at least, 12 to 18 months, I think definitely Sandur Manganese is a well-established metal player and has been doing pretty well. In fact, this is one of those stocks which, from the mid-cap category had done remarkably well. Metal space, according to us, is doing pretty well. I think, of course, there are going to be, times of volatility, and that is exactly what is happening for the counter. I would not be surprised that the fourth quarter, which is going to be due now, is expected to be reasonably good. And the forthcoming year is also going to be pretty encouraging. So, if the investor can hang on for the next 12 to 15 months, this is definitely a stock which is not worthwhile to sell at a loss. Fundamentals are good, the management quality is good, and overall the tailwinds in the metal space definitely look quite good. So I think continue to hold, but one can average if the view is going to be for the next 12 to 15 months only.
Got that your view, Avinash. But the other counter that's coming in is on DCX actually, and our viewer Vanita had actually asked us this question last week, and I think one of our guests would have recommended a buy. She's currently, because the stock's fallen in the last 1 week, she's currently sitting on a loss. She's not mentioned if she should her time frame, but Vishnu, what would you recommend in terms of DCX? It's been a volatile counter, but should she continue to hold?
Well, so technically, stock is in completely bearish, picture, and the good part is that the stock is currently trading near it's a very crucial horizontal support that aligns somewhere around 154, 155. So with the stop loss below 154, one can hold the counter, but still the stock is not looking good. On the higher side, I believe if you find level somewhere around 179, 180, try to get exit from the counter.
Next one's on JSW Energy, and our viewer actually holds shares at 497, bought almost 100 shares, and this is Swati. She wants to know if she should continue to hold for the next year or so. What would you recommend, Avinash, for this counter?
No, I think JSW Energy definitely looks interesting, and I think the investor needs to take a slightly longer term call. The numbers have been very solid. The scalability of the business is also pretty good, and I think we should see stronger Q4 numbers. Plus, the coming year should be reasonably good. So, if the investor has a slightly longer term horizon of say 12, 18 months, I think definitely one should stay invested. The fundamentals of the business are solid. Plus, the management bandwidth is very good. So I think you need to stay invested, although the times now are really challenging, but definitely numbers when they come out should be reasonably better as compared to last year.
Got the view, Avinash. Avinash, let me stick with you because Mr. Rao from Hyderabad, he has been following our show. So thanks so much for that, Mr. Rao. And his question is, he wants to invest 35,000 now and asking for a best banking stock at this point of time from a long-term perspective. Avinash, we've seen the PSU bank actually rally, wane away. HDFC Bank also has given up some of those gains. Which camp are you in? Are you pro HDFC Bank at this point of time, or do you still continue to like ICICI? What's your pick in this space right now?
No, I think I would still bet on ICICI Bank, Puneet, because clearly we don't know what's the kind of damage has been done at HDFC Bank. At least for a couple of quarters, HDFC Bank may underperform, although it's come down to very attractive levels. But ICICI Bank looks pretty good. I think, if he prefers the PSU pack, then even SBI at these levels, which is one of the largest PSU banks, can be a good, investment kind of entry point. I think one needs to be a little constructive here because I think the new RBI norms for the rupee have given a little bit of uncertainty, making people and most analysts expect that possibly there could be large M2M losses because of the currency, M2M factor. But I think we need to wait for the Q4 numbers and only then we could get a little bit of clarity. But SBI and ICICI Bank are strong bets in the banking sector. Somebody who wants to take a long-term exposure can definitely buy into, an SIP approach and obviously, stay invested here.
Well, got that view, Avinash. But viewers as well as Avinash and Vishnu, time for the rapid fire round in this edition of Fast Profit. Request you to keep your answers on buy, sell and hold so that we can take as many in the next couple of minutes. The first question coming on Tata Motors PV. Would you recommend buying into it right now? Avinash is what Santi is asking.
No, I think as of now, not now, because I think there has been some other, closure of JLR. I think that could impact the numbers.
On Shriram Finance, is it a good time to buy, Vishnu?
Well, yes, we can buy.
Avinash, you did answer partially, but Ramesh wanted to know if we can accumulate. He's intending to accumulate 300 shares of HDFC Bank. You just answered it partially, so would that be a no?
No, I think not as of now. It's better to wait for the Q4 numbers.
On Karur Vyasa Bank for the next couple of years, Avinash, what's your view is what K Guru is asking?
I think can be a good entry point provided investor has got at least 18 to 24 months time frame.
And on Tata Power, is it a good time to buy is what Ravi is asking, Avinash.
Yeah, I think Tata Power can be a good bet. Again, from a long-term point of view, he can buy in SIPs.
Varun Beverages is neck counter. Veera from Hyderabad is holding shares at 641, Vishnu. Would you recommend averaging down at this point of time?
Well, no.
The next question coming in. Sorry, Vishnu, go ahead with your answer.
The stock is currently in the bearish phase. I would not recommend to buy at the current juncture.
A very smaller counter, Vishnu, on Infobeam Technologies, roughly around 1,300 crores in market cap, and K. Mallikarjun has actually bought shares at 179. What would you recommend on this counter?
Yes, we can buy with keeping a stop loss below 190.
Ashok Leyland bought by Stani from Bengaluru at 209. Since then, of course, it's been in a corrective phase. But Avinash, is it a good time to accumulate now or wait for the bottom?
No, I think one can slowly accumulate now. I think Ashok Leyland should be a key beneficiaries of the uptick in the CV cycle.
Shankar from Bangalore wants to accumulate 1,000 shares on Network 18 at the current price. Vishnu, would you recommend that? And he's a short-term viewer.
Well, definitely not. The stock is likely to extend this losing stick towards 25-24 of levels.
Kansai Nerolac bought at 163 by a viewer who holds roughly 60 shares. So probably bought it today. Avinash, given whatever is happening with the paint industry, what would be your view?
No, I think as of now, if he's not purchased it, it's better to wait because crude prices are likely to be elevated. So I think it's better to hold. No fresh buying suggested.
DMart bought at 4240 by Mayur. Vishnu, what should he do with his 10 shares?
yes, he can stay long, and I'm expecting prices to extend again towards 43 sort of levels, 4300 sort of levels.
Got it. Siemens Energy bought at 2987 by Tatyamati from Telangana. What would you recommend here, Avinash? Should she wait or can buy a little bit more now?
No, she can definitely average more, but keep a time frame of at least 12 to 15 months.
Got it. Well, that's the end of the rapid fire as well as this edition of Fast Profit. Avinash, as well as Vishnu, thanks so much for solving our queries. With a net total for both the morning as well as afternoon edition, we hit 106 queries today. So thanks so much for helping us hit that magical number of 100 again. But viewers, all the time on this edition of Fast Profit, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today? How to?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist,
Hello and welcome. You're watching India Market Close on NDTV Profit, where we will be dissecting the key market trends in this last hour, where we are at the day's lowest levels. With me, Samit Sarkar, and myself, Hiral Daria. Clearly, if you see, Samit, in terms of markets, we are at the day's lowest levels. A 1.9% cut. We're talking about a sentiment which has been weak, which was expected to be weak as well, and lots happening in the markets.
Yes, in fact, we have even trading below the 22,400, which is expected to be one of the crucial support level coming in for the benchmark, but we are now trading below that level.
In fact, to add to that, if you see in terms of Bank Nifty as well, that's the key over here. A 3.4% cut coming in terms of Bank Nifty. It's the PSU banks as well as the private sector banks which are taking a beating, and this obviously is on the back of the treasury losses that we could be seeing in the fourth quarter so far on the back of the RBI action on the Indian rupee. But what is interesting is the bounce back that's come in terms of the Indian rupee as well. If you just quickly pull up that one on the screens before we look at the broader markets and the advanced decline, we are back at that 94.73 levels yet again. So, that 1 rupee easing that we were seeing seems it's getting nullified somewhere right now. So that is something that we need to keep our eyes on as well. But very quickly, let's just look at the heat map in terms of Nifty 50, and then we'll look at the sectoral indices as well in trade. In terms of where we started off, it's only Coal India which has come in as the day's highs right now, but Hindalco continues to stay there. ONGC was the other one which was also trading in the positive. What is taking a beating majorly is your financials. So from a Bajaj Finance to your Jio Financial Services, Bajaj Finserv, your banks, Axis, SBI, HDFC, all of them that have been trading under pressure. Let's just look at the contributors, because which are the ones which will be actually putting pressure, and that will give you an idea. HDFC, Bharti Airtel, SBI, ICICI. Majorly it's the banking space. Not that kind of support that we could have seen from a Hindalco, Coal India as we speak. In terms of broader markets, let's look at the breadth first, and then we'll look at the individual indices and contributors as well. In terms of the statistics, if you see, we are widening. Your declines actually have gone up to 2,195, pretty much where we started off. So even Stevens right now in terms of the advanced decline ratio from where we started off to now. And very lastly, if you see in terms of broader markets as well, let's just pull up that one on the screens. What's happening, Somit, is on the broader markets, the cuts are deeper today. Your mid cap 150 is down 2.5%. Small cap as well, similar kind of cuts. So I think that's what is not supporting the breadth as well.
Yes, the rupee depreciating from the day's highest point that we had seen, plus crude price rising, and also increasing this pressure overall on the market. Second consecutive day of decline, more than 800 points is what we have seen. The markets coming off from over the last couple of trading session, and now we are trading at its lowest level that we have seen since April 2025. So 11-month low is where the benchmark is trading. Among the sector indices, metal index is the only sector index that is trading in green, and this is largely led by aluminium players. Nalco, Hindalco are the top gainers here. And if you look at the support levels, 22,400, 22,450, major support seen on an intraday basis. We are trading now slightly below the 22,400 level, but we could see some support coming in on that front. And when it comes to the intraday resistance, we are seeing it at around 22,600 and 22,700, which is also the day's highest point. If you look at the India Volatility Index, that has spiked about 28, which is the highest intraday level that we have seen since April 2024. So that is a cause of concern coming in, and the sell on rise strategy is expected to continue overall in the market until and unless Nifty clearly moves above the 23,000 and the 23,200 level. Some statistics or some data coming in on the financial year end fund, given the fact that today is the last trading day of FY26. Nifty is heading towards its worst financial year loss since FY20, and FY20 was the COVID year loss that we had seen. We are down more than 4% in trade, and in the month of March we are down nearly 10% in trade. This is the worst monthly decline that we have seen since March 2020. Obviously the Middle East war and the FII selling is the reason why we are seeing this. FII selling in fact has crossed more than 1.1 lakh crore so far in the month of March.
Okay, so these are the factors we are watching out for. But let's get in Hemen Kapadia from DR Choksi Finserv. Hemen, good afternoon and welcome to the show. Always a pleasure to speak to you, Hiral, on this side. My question to you is, the sentiment continues to remain weak. We are trading at the day's lowest levels. It is a truncated week. What should the strategy be on Nifty and Bank Nifty?
A very good afternoon to you, Hiral. Thank you for having me on the show. Like I said, it's such a pleasure to talk to you. like you said, Hiral, it's a truncated week. You have 2 holidays. It's a monthly expiry. We should have got the whole week as a holiday. But seriously speaking, Hiral, one would have thought the markets are deeply, deeply oversold. One would have thought that around the previous low, we'll get respite. I won't say double bottom, but we'll get support from the earlier low and we'll bounce back. That isn't happening, and HDFC Bank is sinking the bank nifty. So frankly speaking, with a holiday tomorrow, I wouldn't advise going short because if currently it sounds like mission impossible, but in case a sliver of good news comes in, we'll open a gap up. So I'd say too late to sell, too early to buy. But with 2 holidays and a truncated week and the expiry, I wouldn't short the market at this point, despite the apparent obvious weakness. And the weeks is at 28. I think it can go to 31 and 34 before it finally eases off.
Okay, Bajaj Finance is one of the top loser. At least on the fundamental side, I can say that analyst or street is concerned about the fact that it has the highest exposure towards unsecured MSME, and given the current macro situation, that is one segment which could get impacted. But on the technical side, how are the charts looking like? Any support levels that you could suggest?
Somit, frankly speaking, we are at a congestion area. Frankly speaking, this level of 798 or 800 has not been decisively breached since 31st January 25. I mean, Jan 25. So we are, frankly speaking, at supports. Then there is support at 780, 680. There is a whole congestion area, Somit, if you see between September 21 and January 25. So it's been almost 4 years and the Bajaj Finance was doing nothing. So this whole area is congestion, which means there's now support. So honestly speaking, we are at supports and we should not go down much. But having said that, things don't look too good because any time frame that you see, all indicators are in sell. But one also needs to keep in mind that, Bajaj Finance has had a phenomenal run over the last 16 years. So I think the laws of gravity caught up. Maybe the reason was more fundamental than technical though.
Okay, so that's with regards to where Bajaj Finance goes. Hemant, quick one. Your top picks at this hour?
Okay. That's
I know it is going to be difficult to choose something, but in terms of the way prices are, I think a lot of things might look attractive.
Well, yes. So, like I said, I won't give a sell at this point in time, Hiral. So, I will give a contra buy call. Caveat emptor. Only people brave enough to buy this. But once again, they're not very short-term call. They are maybe slight a month or 2 month calls. Firstly, a buy call on Bayer Crop Science. Stock is bottoming out. Positive divergence. Oversold. Looks stronger. Buy at 45.60. Stop loss of 44.10. And a target of 4860 here, Bayer. And the other one is IPCA. IPCA looks very promising. Aurobindo does, but I think IPCA looks a shade better. So IPCA is formed a rounding bottom, and we're on the cusp of a breakout in a market such as this. So buy on IPCA Labs at 1590, stop loss 1540, target of 1690. I believe it should be going to a 1760 over the next few months.
With regards to IPCA, Bayer, interesting moves coming in on that counter as well as we speak. That stock is at the day's highest levels. Let's also get in Ashish Chaturmota from Apex PMS JM Financial. Ashish, welcome to the show. Always a pleasure to speak to you. My question to you right now is, what are you advising your investors with the way markets are moving? Because valuations somewhere are turning attractive to some extent. Yes, there could be further improvement when it comes to looking at entry levels. But from a stock price perspective as well, you're already probably in an attractive zone. Are you recommending buying at current levels? And if yes, which pockets are you advising?
Thank you, Hiral. So I think first of all, you rightly mentioned about the valuation part. If you look at broader market valuation, if you look at Nifty, on a 1 year forward, it's trading close to 17 and a half times forward multiple. And if you look at in the history, we have observed that whenever markets have gone to a level around 15 to 15 and a half PE multiple, it has become extremely attractive. And also it offers a very strong earning yield when we hit hit those kind of multiples. So keeping this in mind, we have already breached very important support zone of 22,500, which was multiple times, got respected, not just this particular month, but in the previous occasion also we have seen these levels. So keeping this in mind, I think the 50 monthly moving average comes around 21,500, 21,600 trajectory. So ideally, from a technical perspective, that's the area where I think a lot of these, a lot of meaningful support will start emerging, and at the same time, the valuation will become more attractive. So what we are recommending to our investors, a staggered approach for next 2 to 3 months time frame, because even if tomorrow this de-escalation starts to happen, crude is not going to immediately see a big correction. There will be one knee jerk, but then again there will be a consolidation. Until the time crude is above 90 odd dollar, it is going to impact us in terms of GDP deficit and the overall inflation perspective. So keeping this in mind, actually next 2 to 3 months would be a staggered approach which investors should adopt, and ideally every week, every fortnightly, one should add on to the position. And as I mentioned, technicals also suggest that since we have broken this support level, and at the same time India VIX hitting 24-25 is a sign of worry, and that's where a staggered approach is a better strategy. Now coming to the sector, so definitely there are pockets which looks very, very promising. First of all, banks, definitely, a lot of has been discussed about banking as a space, but just to give you a perspective, most of these private banks now today are trading below 2x price to book, and these are decadal low in terms of price to book or in terms of PE multiples, which most of these private banks are trading. From a credit growth perspective, we have seen decent recovery in the last 2 quarters in terms of credit growth momentum, and at the same time, if interest rates remain stable or if it starts to inch up because of the inflationary concerns, then I think banks are going to be the biggest beneficiary. Today we are seeing a big sell-off, obviously, because there is going to be an M2M losses on the bond book of a lot of these PSU banks and even some of the private players. So I think this is offering a very strong opportunity to for investor to accumulate these quality private banks and PSU banks or PSU bank B's ETF. From a 2-3 month perspective, this should be the accumulation, and then ideally in next 1 year we expect very strong returns coming out of this space. Selectively, we are very positive on the CDMO opportunity, because we believe that if pharma is going to grow at 7-8%, this CDMO players might have a lumpy business on a quarterly basis, but we will see a very, very strong 18-20% kind of growth rate in terms of profitability, in terms of top line for a lot of these CDMO players, where names like Divi's Lab, Laurus, SciLife, or even Naveen Fluorine for that matter, which has got a decent book of CDMO within itself. And then you have RefGas business, which is a good proxy to play the data center theme. So yeah, these are the themes and sectors and companies which are looking very promising to accumulate for next 2 to 3 months time frame.
Right. Let's move on to our stock of the day, Urban Company, and this is after the company announced that they have seen a strong demand coming in for its one of the services, that is Instamart. Let's get in Varsha to understand how the numbers stack up against its peer as well.
Well, thank you so much for that. Yes, so definitely Urban Company is in focus now, because company is now clocking 1 million monthly bookings, and if you see, the Insta Help is actually hitting nearly 50,000 daily orders as per this is Feb data. This makes it the fastest scaling vertical, which provides services like cleaning and laundry services with 10 to 15 minutes of fulfillment. Well, let's see what brokerages are saying. We have Morgan Stanley, which is actually positive when it comes to Urban Company for long term. And what they say is that the Insta Help growth, if you see, is strong, but losses are rising and the orders are scaling fast, nearly 17,500 to nearly 36,000 daily. There is near-term pain according to the brokerage house, but long-term break-even is intact according to Morgan Stanley. Now, let's also talk about InstaHelp specifically and also compare it with the peers. Talking about InstaHelp by Urban Company, demand has already been proven, that is 50,000 orders a day, and which is built on the existing company's user base. They also have well-trained, strong supply network, that is trained partners, and their strategy is to focus on repeat usage and of course the efficiencies. Now talking about their peers, that is Snabit, which was funded with $56 million. They don't have as much as large base yet, and they're building demand plus supply overall to have the growth, but their focus is on the fast acquisition. Talking about Pronto, which is again a peer for UC's InstaHelp, the funding has been done at $13 million, quite smaller but at an early stage, and they have a very limited scale visibility, but their focus is on the city-wise or geographic expansion. Talking about the overall key difference, urban company, if you see scaling a working model, I would say, while Snabit and Pronto are proving the model itself, which gives an urban company a first mover advantage and a head start when it comes to the growth ahead of Snabit and Pronto.
Okay, so that's with regards to where urban company goes, and in terms of comparison as well, it's very interesting. If you just pull up a 1 month chart of urban company, today it's seen a spike. I think in mid of March itself, that stock had seen a good spike as well. So 11 to 12% up move is what you're already seeing. Ashish, any view when it comes to urban company from a fundamental perspective?
Yeah, so I think this Instamart is going to be a big growth driver for them, and I think it's a very micro market business, and with lot of I would say focus upon the urban markets where the pricing power remains with urban company to a great extent, and once you hit a particular size and scale, then it creates a very big operating leverage for the company. So I think going forward, we believe since the listing, the stock has seen a big correction, and now I think there's a very, very strong base building which is happening around 105 to 115 kind of zone. So keeping this in mind, I think the risk reward looks quite promising. On it, any dip towards 105 would be an area where one can add more positions and can even add at current level. So ideally 105 to 120 is an area to accumulate, and it looks like stock has a potential to deliver double-digit kind of returns in this particular year.
Okay, so that's with regards to where urban company goes, as we speak right now. Strong moves coming in on this counter. Double-digit growth is what Ashish is watching out for. But moving on, let's understand, what the FNOQs are indicating right now, because it is expiry as well today. What are the numbers indicating, Puneet, in terms of today's session? Where are you seeing the accumulation and any levels that you're tracking?
Well, thank you for that. We're definitely seeing broader market pressure, as we've been highlighting throughout the day. The Sensex continues to be under pressure, and the banking names, of course, have been the one. Bajaj Finance now down almost 5% as we speak, but continue to see broader market pressure. Nifty Auto also down. The tech names also down roughly 0 to 2%, but largely the banks dominating the news flow. In terms of the Nifty Bank, it's, and some views on this will be key, because we've broken down the levels from even 51,000 at this point of time on the Bank Nifty, and hence continue to see pressure now around 50,600 odd levels. In terms of some stocks though that, we are focusing on today in terms of longs being built up, it's a safe haven play that we're seeing across a bunch of FNO stocks today. So the metal pack, SAIL as well as Hindalco continue to be under focus. In terms of covering, also short coverings, you're seeing the metal pack seeing massive coverings of shorts. So Nalco continues to be on the radar, and so does Coal India at this point of time. In terms of longs being unwinded, any momentum built on the auto pack is getting sold into. So Ashok Leyland and also on LIC, we're seeing almost a 5% downtick in trade today, while fresh shorts being built up is yet again on the banking pack. So a picture perfect playbook in that sense being built up across a bunch of stocks. So Bandhan Bank and EU Small Finance Bank feature on this list, but largely pressure continues across a bunch of spaces. Banking definitely the one which is bearing the brunt today.
Right. Let's also welcome in Manoj Kumar Dubey, the CMD and CEO of IRFC. So firstly, to start off with a refinancing deal that you have announced recently, and this is, I believe, the refinance of long-term debt of close to 12,840 crore. Could you share some more details about this refinancing term that you have signed as of now?
So, good afternoon, Sumit. This deal, yes, last week we signed this agreement with the management of HURL. It's a joint venture company promoted by IOCL, NTPC and Coal India Limited, three of the biggest Maharatnas of CPSEs parlays in the country. So, this nearly 12,000 crore refinancing deal that we did at a very attractive rate for them. And yes, the payment was also made on last Friday. So in this FY, this is one of the biggest, in fact, the biggest disbursement deal that we did with them. They are into fertilizer business. They are already, all their three plants are doing productions. Cash flow is positive. Gorakhpur, Barauni and Sindri, there are three plants that they are running, and the tenure is 10 years, and we are very happy doing this deal with them.
Okay. For FY26, you had set a disbursement target, I believe, of around 30,000 crore, and 75% is something that you had already achieved. Have you met that guidance, or have you exceeded that guidance, sir, for FY26 now?
Oh yes, we have exceeded the guidance in terms of sanction of assets as well as disbursement. As you rightly mentioned, by the Q3 we had done nearly 75%. Today, end of the FY, I'm very happy to share that the disbursement stands at more than 35,000 crore against the guidance of 30,000 crore. And sanction of assets, we had given a guidance of 60,000 crore. We have already done more than 75,000 crore. And there are a few in pipeline where we are lowest. So, I mean, the year is closing on a very high for us. This is the first FY when the company has gone on its diversification mode. Typically, we call it IRFC 2.0. And the kind of success that we've seen as a team, I'm sure that going forward in FY27, when we have a pipeline with us. Last year, we did not have a pipeline. Now that we have done disbursement more than what we targeted, and we have got a pipeline with us, FY27 is going to be unfolded in a very positive manner for us. This is the expectation of the management.
Okay. Any internal targets that you have kept for FY27, and also if you could just give us some guidance on the AUM front?
Oh, so yes, so AUM, we are now, when we are closing this FY, we started at 4.6 lakh crore. And we'll be ending somewhere near 4.9 lakh crore, near to 5 lakh crore. This is what we are ending. We'll be sharing the details. Going forward in FY27, we believe that we will surely crossing the landmark of 5 lakh crore, which will be the first for this company. And other guidances, now the benchmark will be what we have achieved in FY26. So on this benchmark, we'll be going ahead, and one particular aspect that I wanted to share with you, we are differentiating ourselves in kind of the assets that we are taking into our fold. For us, any ticket size which is less than 5,000 crore is a kind of retail. So we are not looking for any small ticket sizes. As you know, we did all deals like DFCCL and this all more than 10,000 crore. So we are looking at the assets where the minimum ticket size is 5,000 crore. Going by that, if you see next FY27, the things are going to be on higher side than what we did last year. And this is how we want to grow. We want to ensure that our margins are quite better than what it used to be with the Indian Railways. And NIM and the PAT, both the target for us is to grow in double digits. So that is where we stand today.
Mr. Dubey, good afternoon. This is Hiral here. You know, before I ask you the next question, I just want to address what's happening on the Indian rupee. A record low again at 94.94 is what you're tracking as we speak. 96 right now. And that's the pressure that's building up as we speak. You know, I mean, Soumit and I were just discussing in terms of your exposure to the currency volatility. We do understand that you have a ECB loan which you've raised in yen as well. What is the kind of impact when you see with regards to the rupee depreciating?
So, Hiral, you are right in terms of volatility in currency market, but we are completely hedged. Whatever we raised, that 300 million and 400 million dollar worth of yen, we have already hedged it. And the brackets that we have hedged is quite conservative. So we are quite comfortable with the kind of temporary hiccups that the currency market is showing.
Mr. Dubey,
so far as
have you
older exposures are concerned.
Mr. Dubey, I will interrupt you. When you're saying you're hedged, are you hedged to look at a rupee at 95? Is that what you're saying?
My hedging is quite high than that. I mean, it is quite higher than that.
What would that be?
So
what would that be?
no
Because
issue
that
for
gives us an indication of what are you anticipating the rupee at? Because market participants are looking at rupee at 96, 98. What is that hedge number that you think you're comfortable with?
No, we have gone for a hedging of 5-year tenure that is in the bracket of 110 to 115. So there is a lot of legroom available. So we don't have any worry right now. And we believe that this is a temporary phenomena. Even rupee, we believe that when the things are settling down, rupee will be showing stronger position. And the kind of hedging that I told you in the leg of yen as well as in the leg of dollars, we are hedged in a very comfortable manner. We don't find any kind of issues right now.
Thank you so much for that. I think we will touch base with you to understand your hedging policy in detail as well. But you have the rupee which has hit that 95 mark already as we speak. In fact, that 95.22 is what you're tracking in terms. These are record low levels that you're seeing in terms of where the rupee goes. Let's just, with the Indian rupee, pull up the IT index, because that will again tell you the reversal probably that could be coming in on the IT sector as well, just in terms of a short-term sentimental impact. But clearly, a record low is what we've hit in terms of where the Indian rupee goes. We've surpassed that 95 mark. 95.22 is what you're looking at. So, Amit, my question over here is, we were looking at the RBI coming in to ease the pressure when it comes to the Indian rupee, and that's the reason why they got this entire framework for the banks. And after the morning opening session, we did see that easing, and it's bounced back yet again. Let's get in Dheeraj Neem, economist and forex strategist at ANZ Research. Dheeraj, good afternoon. We've surpassed that 95 mark, 95.22 on the Indian rupee. Your initial comments, because the RBI was the one who was going to come and rescue.
Look, I think this very much reflects that there is strong underlying demand. It's not just speculative activity that was pushing the rupee weaker, but looking at where oil prices are, of course, there would be strong corporate hedging demand and even real demand for real-time trade flows. So I think this opportunity that came after the NOP revised guidelines and when the rupee USD INR dropped gave a good opportunity for others to sort of buy in.
Okay, so Dheeraj, what is the RBI trying to do right now? What is the kind of impact you're seeing? Because in a single day, if you're going to see this bounce back yet again, what are markets reading in, overall?
Look, I think the basic guideline is that with the scale of the oil price shock that we're currently facing, the rupee is headed weaker. I mean, oil prices remain above $100 a barrel. And that means that it is not just a problem of portfolio investors pulling out money on adverse sentiment. In fact, your current account deficit could be much larger, warranting a shift in the fundamental view. And insofar as that is on the cards, the rupee should be heading weaker. And with that, of course, comes the hedging demand and all of that, a lot of importers would be coming into the market for. And of course, they were looking for a good entry point for them to hedge, the lower forward premium because of this latest revised guideline, etc. Gave them exactly that opportunity, and that is what is exactly playing out. My sense is that if the tensions persist and oil prices do not ease, we could be seeing the rupee heading towards 96 in the near term.
Do you expect any further moves that RBI could do to ease this pressure?
I cannot so much comment on the regulatory side of things, but I do think that their intervention capacity is still there. I mean, FX results from any adequacy metric that we track are overall in a decent space, but of course they are not so large, especially the foreign currency assets within the FX reserves aren't so large that the central bank would be indiscriminate about interventions or defending any particular level very staunchly. In fact, I think whenever they see some speculative activity build up, they will be willing to cull that with their intervention. But with the recent revised guidelines, of course, that remains a smaller possibility.
Okay, so it's a wait and watch now. But thank you so much, Dheeraj, for joining in. Always a pleasure. to speak to you as well. And again, 170 paise fall is what you're seeing from opening levels in terms of where the Indian rupee goes. We've hit record lows in today's day of trade itself, and you can understand the kind of volatility crude prices are causing as well. Let me get in Ashish to give his view. Ashish, with the kind of volatility that's coming in with regards to where the Indian rupee goes, any rate sensitives that you would want to focus on right now?
So definitely, falling rupee, rising crude, rising India VIX, and an environment where the global growth might come into a question mark, and the inflationary pressure is going to hit, which will ultimately result into either interest rates remaining at current levels or eventually going up. It is going to put a lot of pressure on a lot of interest rate sensitives, whether it's real estate, whether it's auto segment. We are already witnessing a lot of consumer facing finance companies also seeing a lot of pressure, because ultimately all this unsecured lending is also going to get hit significantly. So our sense is that at this point of time the focus should be more on defensives, on healthcare, on pharma, or even if one want to focus on the BFSI space, then ideally banks are more attractive than the NBFC at this current juncture, because there's going to be a lag effect between the borrowing and lending side. So I think that's where the banking would be a big beneficiary. But overall, we believe that yes, there is going to be a lot of pressure on the interest rate sensitives, and portfolio should be aligned towards defensives as a basket.
And anything in the IT space that you find attractive, given the fact that they are a direct beneficiary of rupee depreciation?
Ideally not. The reason is normally Q4 is a very soft quarter for a lot of these IT companies, and we are not seeing discretionary IT spending reviving. So yes, from a dividend yield perspective, from a FCF yield perspective, it looks very promising from a valuation perspective. But the way the dynamics of the businesses are changing, we would like to keep a hold on IT. We are over, and we are significantly underweight in this space, except one name within the mid cap IT, which is Coforge. This is one stock which is prima facie from a relative perspective looks promising, but otherwise we don't have a very constructive view on IT even at current levels.
Okay, not very constructive when it comes to IT at current levels as well. But thank you, Ashish. Thank you, Hemant, so much for joining us on the show. There's so much happening. So I think the conversations are seeming to be pretty short today. But that's what is looking like in terms of markets. Let's just quickly pull up Nifty 50 and Bank Nifty on the screens as well and see what's happening there basis the kind of move that we've seen on the Indian rupee. If you just pull up the intraday chart of Nifty 50, we're still trending towards the day's lowest levels. 22,350 is what you're tracking on Nifty 50. And Bank Nifty also further cuts coming in there, 3.6% downtick. 50,350 is what you're trying to track in terms of Bank Nifty as you speak. But moving on, the sugar pack is something which is in focus in today's day of trade. Strong moves were coming in terms of sugar, where it was in a sweet spot where Brazil has gone ahead and cut the exports. And this somewhere benefits India as well, because the pricing is something that comes in favor when you talk about the Indian markets. And two, the export quantum and the quota that sometimes opens up as well for the Indian companies. Atul Chaturvedi, Executive Chairman of Sri Renuka Sugars, joins in. Mr. Chaturvedi, good afternoon and welcome to the show. It's always a pleasure to speak to you. This is Hiral on this side. My question coming to you is, Brazil has said that they will be cutting shipments by almost 14% in 2026-27 season, which starts from April. And the mills are diverting sugarcane to ethanol production post the high energy prices. If you have to look at the entire gamut, how is the sugar industry placed in the current situation of the geopolitical war with what Brazil is doing and other benefits that could be pouring in?
As far as Brazil is concerned, I think it is a little too early to start guessing that their diversion to ethanol is going to be much higher. But having said that, in Brazil, what actually happens is the gasoline prices have still not been revised upwards. In fact, the Petrobras, which is the oil marketing company in that country, has still not increased the diversion, in spite of the fact that the current ethanol parity is closer to about 19 cents as against 15.3 or 15.4 of Chicago. So my take is that logically they should be diverting more sugar towards ethanol, but a lot will depend on what action Petrobras takes. And we must not forget that this is an election year in Brazil as well. So that is why they are still not aggressive in terms of increasing the pain for the consumer. But all said and done, Brazilian crop is quite all right. The cane production seems to be closer to about anything between 600 to 620 million tons. And before the war started, the guesswork was that the production of sugar will be closer to about 40 million tons. Now, with all this happening and with all this petrol prices and crude prices going through the roof, I think a lot of rethinking will have to be done. And from the mill's angle, it definitely makes more sense to divert more towards ethanol than to sugar, for sure. And sugar demand is, in any case, lot muted because the Middle Eastern market is as good as closed for the Brazilians as well, because logistically it's becoming a nightmare. So ultimately they will have to divert more sugar to ethanol for sure. Yeah.
Given the increase in international sugar prices that we are seeing currently, firstly, is this short term or do you expect the prices to remain at the current levels for the entire financial year?
I think that answer should be coming from America, the President of America, or the Israelis. We don't know how long this war is going to last, but if all indications are that it's not going to close any time soon, and if that happens, the pain is going to be much longer than what we are thinking as of today. That's my take. It could be totally different. It all boils down to what action the powers take.
Right. And lastly, just wanted to understand, with this higher prices, are you facing any pressure on cane procurement cost?
As far as India is concerned, we get the cane basis FRP, fair and remunerative price. But as it is, the crushing season in India is more or less over and done with, except perhaps some small little crushing taking place in UP. But as far as Maharashtra and Karnataka is concerned, the crushing is over and done with. So whatever is going to be happening, it's going to be happening for the next year. And as far as the sugar demand in the country is concerned, we find that the sugar demand in the country is also a lot muted compared to what it used to be in the earlier years. So the prices of sugar definitely in the domestic market are reasonably friendly. So nothing great is happening on the sugar sector as far as India is concerned, except perhaps that now the Prime Minister has given the clarion call of increasing the blending percentage. So that should be positive for the sugar sector going forward.
Okay, so lots brewing there, and this is a sector which is seeing some smart moves in today's session. But thank you, Mr. Chaturvedi, so much for joining us on the show. It's always a pleasure to speak to you. We'll quickly slip into a short break. On the other side, we'll get to the top buy today and not sell tomorrow, but sell on Wednesday kind of pig.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to Watching Prime 5 with me, Raisha Sehgal. What's Saturday? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's Saturday.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus
Welcome back to India Market Close on NDTV Profit. Let's go to Amit Goel, who joins in as well, along with Siddharth Khemka from Motilal Oswal. Amit, welcome to the show, and Siddharth, welcome to you as well. With the kind of cuts that we are seeing in terms of where the markets go, you have the rupee, which is at record low levels. Your bond yields have actually crossed that 7% mark already. Amit, what are markets telling you right now? What would you be watching out for from a Wednesday perspective, because tomorrow is a holiday?
Yeah. So it's always a little tricky to go into the trade, especially with a very short-term view. When our markets are closed and the world markets are, dancing to the tunes of a different type of a president in the US. So having said that, if I would to still look at the broader markets are definitely weak. And from a technical standpoint, they are at extreme oversold levels on most of the indices, or rather all the indices, on even the daily and weekly time frames. So from a medium term to long term perspective, this is a definite signal to start accumulating at these levels, because if you read the data, if you look at the data, there has been strong evidence. There is strong evidence to suggest that from here onwards, the market can post a recovery in the medium term perspective. But primarily, if you were to speak of Wednesday, it looks a little weak, and one could look at building up some shorts as well from a short-term trading perspective. I do have a call on DMart as a buy today, sell DTST sort of a call. If allowed, if you want, I could take you through that.
Okay. So that's with regards to individual stocks you should be watching out for. But let's quickly cut into the press conference which is ongoing, where Aparna Sharma, Additional Secretary, Department of Fertilizers, is briefing with regards to the situation on the back of the war.
61 लाख टन हुई थी. अभी हमारे पास एडिक्वेट स्टॉक अवेलेबल हैं इन कंपैरिजन टू लास्ट ईयर. ओवरऑल स्टॉक एज ऑन डेट that we have is 180 LMT, जो कि पिछले साल 147 लाख टन थे। तो हमारी इससे पता चल रहा है हमारी जो स्टॉक्स हैं वो काफ़ी अच्छी उसकी स्थिति है। अप्रैल और महीने के जो महीने हैं, अप्रैल और मई के जो महीने हैं उनमें हमारे लीन मंथ होता है एग्रीकल्चर का, और यूजुअली हम इसको स्टॉक बिल्डअप करने के लिए यूज़ करते हैं। इसी को मद्देनज़र देखते हुए हमने काफ़ी इंपोर्ट्स लाइनअप ऑलरेडी कर दिए थे। डोमेस्टिक प्रोडक्शन के बारे में जो गैस सप्लाई है जो हमारी प्रभावित हुई थी 60% हो गई थी, जो धीरे धीरे बढ़ के 65 हुई और अब 80% तक हो गई है, जो कि हमने एम्पावर्ड पूल मैनेजमेंट कमेटी के माध्यम से हमने स्पॉट बेसिस पे टेंडर किए और हमें हमारा अच्छा प्रोडक्शन 80% तक हो गया है सभी यूरिया यूनिट्स में। कोई भी यूरिया यूनिट जो इससे जो थोड़ी देर के लिए शटडाउन हुए भी थे, जो कि एनुअल शटडाउन होता है उनका, वो वापस उन सभी को गैस सप्लाई शुरू हो गई है। और जहाँ तक सल्फ़र या और इंटरमीडिएट की उपलब्धता है, हमारे विभाग ने सभी ऑयल रिफाइनरीज को डायरेक्शंस दी है कि सल्फ़र या और इससे संबंधित कुछ भी इंटरमीडिएट है उसकी पूरी सप्लाई करें। इसी के साथ विभाग ने लॉन्ग टर्म टेंडर, ग्लोबल टेंडर से पहले ही हमने डाइवर्सिफिकेशन ऑफ सोर्सेज का एक हमारी एक्सरसाइज जो कि पिछले कुछ एक साल से चल रही है और तेज गति पे है। हमारे डिपार्टमेंट में एक टास्क ग्रुप सेटअप हुआ है जो कि ग्लोबल अवेलेबिलिटी और पोटेंशियल सप्लाई सोर्सेज फॉर फर्टिलाइज़र इंक्लूडिंग यूरिया के बारे में हमें जानकारी दे रहा है समय समय पे। और मेजर जो हमारे सप्लायर्स हैं यूरिया, डीएपी, उन सब के साथ हम बहुत क्लोज कांटेक्ट में हैं, जिससे कि हमारे मेजर टेंडर्स के थ्रू या स्पॉट टेंडर्स के थ्रू या
Okay, so clearly indicating that April usually is a lean month, and this is the time when the government uses to build up stock as well. Up to 80% production has been achieved in urea units due to the spot tenders that saw an uptick, and all oil refineries have been directed to supply sulfur and other intermediates to the industry as well. And the task group that is set up in this Department of Fertilizers, they are working on diversification of resources. You are seeing, some of these stocks react from the day's highs as well, some mild correction coming in terms of where fertilizer companies are concerned. But Siddharth, let me come to you, with the kind of situation that we are in, we're talking about there could be a potential disruption when it comes to fertilizers. As of now, stockpiles are quite enough is what the government is indicating. Your view when it comes to fertilizer companies?
So yeah, Hiral, good afternoon. I think the situation, especially the supply chain dynamics, are very unpredictable right now. But a word coming in from the government that they have enough stockpiles, at least for this season, I think that is a good welcome step to allay the fears. And I think we are looking at a big summer before the monsoon starts and before the sowing season starts, so which is where the bulk of the fertilizers will be required. And hopefully before that, if things de-escalate and the supply chain resumes, I think then things will be in a much better shape. But as of now, I think based on the news flows on a daily basis, things could remain volatile, at least in the near term.
Right. The government is signaling a tougher stance on industry compliance. Union Minister Ashwini Vaishnaw has expressed disappointment over lack of support and slow progress from the industry, warning that future approvals and fund disbursals could be at a risk if corrective steps are not taken. Here's what he had to say.
मैं रिपीट कर रहा हूँ बार-बार और मुझे इंडस्ट्री से उतना सपोर्ट नहीं मिल रहा है, इसलिए मैं अपनी नाराजगी आपके सामने बहुत क्लियरली व्यक्त कर रहा हूँ. I'm not very happy with the progress that the industry has made. You have to make more progress, you have to take more efforts, you have to take and these are things for you only. आप सक्सेसफुल होंगे तो देश सक्सेसफुल होगा. आप अगर अच्छा करेंगे तो देश आगे जाएगा और आपको खुद को भी बेनिफिट होगा. सो इसमें आप लोग थोड़ा स्ट्रक्चर्ड एफर्ट लगाइए, अदरवाइज वी विल स्टॉप द फर्दर अप्रूवल्स. आई एम विलिंग टू टेक वेरी हार्श मेजर्स and I don't want to kind of mince any words here. I am willing to stop any further disbursements or approvals if the industry doesn't come up with the commensurate efforts. This is my single message today.
You know, that's a very stern note that's coming in from Ashwini Vaishnav when it comes to participation from companies in the country as well. Siddharth, a quick view when it comes to names like Sirma and Dixon as well as our IFB Industries, because these three are the ones who will benefit from the listed space to some extent. How are you looking at these names?
The entire EMS space, there is a big scare about, again, the same supply chain issues and the raw materials required for making chips, which could see some issues with the supply, especially from the routes from the West Asia getting interrupted, and plus demand for some of these critical consumer durables that also getting impacted. But on the long-term basis, we are very positive on the entire EMS space, and we believe that that's a structural story with manufacturing picking up pace in India. We like Sirma from a long-term perspective. We are seeing that Sirma is benefiting from the structural shift in its business mix towards high-margin segments such as automotive, industrial, IT, railways. Plus, its exports contribution is rising. And what we are witnessing is over the last few years, Sirma has focused on improving its high complex manufacturing, which is improving order diversification as well as margin expansion. And given the healthy order book, we believe that the company is set to deliver a strong 30% revenue CAGR, and with margins likely to improve, we are expecting a 40-45% net profit CAGR over the next 2-3 years. So within that space, we like Sirma, and any fall due to the current market would be an opportunity for long-term investors to accumulate Sirma. We have a 1-year target price of 1,000 on Sirma.
Not much actually, in fact, when it comes to the Hard on Street segment today, because the market continues to remain quite weak. But few stocks that dealers have highlighted in trade today. Firstly is Prime Focus. The stock continues to gain despite the weakness that we are seeing overall in the market. And dealers are expecting some positive news flow that could come in this counter. So keep an eye out for that for Prime Focus. KEI Industries is one counter where dealers are indicating that management has cut its revenue guidance in a closed group investor call. They have cut the growth guidance or the revenue growth guidance by around 5 percentage points, and that's the reason why we are also seeing this weakness coming in for KEI Industries. And lastly, when it comes to BHEL and Indigo, in the last 1 hour of trade, dealers are indicating that there have been fresh sell flows that have come in for both these counters on the FI desk, that is BHEL and Indigo. Indigo, do remember that on April 1st, we'll see what is the kind of hike that will come in when it comes to ATF prices. So that could be slightly negative for Indigo at this moment. So keep an eye out for BHEL and Indigo as well. And earlier we did indicate about the NSE, the exclusive story that was first highlighted on NDTV Profit, and that is the fact that NSE has taken one more step towards this towards the much awaited IPO of the India's largest stock exchange. They have sent emails to investors who are shareholders in NSE at this point of time, and they are seeking investors in expression of interest whether they want to participate via the OFS route in the IPO or not. So most likely the IPO size is expected to be more than 20,000 crore rupees, and NSE has already appointed nearly 20 bankers for this IPO. So one more step is what NSE has taken towards that, and this means that the IPO could kick off anytime soon. And the last date for any investor or any shareholder in NSE to submit this expression of interest is April 27th. So by then they have to inform NSE whether they want to participate in the IPO or not.
Okay, these are interesting names. Then we'll check all of them with our technical analyst. But before that, let's get in Abhishek Goenka from India Forex and Asset Management. Abhishek, you have the bond yields which have hit that 7% mark. What would that actually mean from here on, and what is it actually indicating?
Hi. So of course, we know that the oil prices are going up, and that's important, impacting our bond yields, because even though the government have announced lower than expected borrowing for FY27, still it's relatively elevated. And most likely right now, only because of oil prices and increasing inflation, market is expecting that probably our the measures are not adequate and then yields are going up because of that. I think it's kind of panic across equity, currency and bonds right now, which is also impacting bonds. But I think RBI does not like the bond yields to go up because it increases overall fiscal of our government, and they would be intervening in the market and doing most to ensure that the yields are maintained and does not spike up in an abnormal level.
Okay. So tell me one thing, what would this actually mean because of that inverse relationship that we see between bond prices and yields? What would it mean for bondholders and debt mutual funds?
Sorry, I missed you.
I'm saying, what would it actually mean for the bondholders and the debt mutual funds when you talk about that inverse relationship now?
No, so obviously the mutual funds which are holding long duration bonds, they would be mark to market in the yields in the overall portfolio. If it goes up, the return that the fund is about to give is going to come down because it's an inverse relationship. And the managers who have taken up all on duration would definitely be hit in the current market. And a lot of these corporate balance sheets also have 10-year bonds, 30-year bonds. And those bonds, since it go up in value, at one point equity is not giving returns. Second time, the bond portfolios are also going to get mark to market there. That's an impact, but bonds which are held for maturity typically would not have impact on maturity. But short term, definitely bank balance sheets would be impacted because there a lot of bonds are holding and then there would be MTM on those.
Yeah, understood. So MTM losses is something that one should be watching out for. But thank you, Abhishek, so much for joining in. Always a pleasure to speak to you as well. Very quickly, 22,350 is what Nifty 50 has already broken in intraday trade. As we speak, it is coming back there, but 22,350 is what you're trading at right now in today's session. But as we close the last trading day of FY26, let's also look at how the markets have performed in the last 1 year. Let me head across to Varsha. Varsha, over to you.
Well, we have had a tough year when it comes to FY26, wherein Nifty, if we see, is down almost more than, I would say, 3.5%, with also the broader markets considering mid-cap and small-cap index have also been down more than 4%. So not a very good year, but let's see how sector-wise we have performed. Talking about the momentum actually came from Nifty Metal, Nifty Defense and Nifty Auto, while IT, Realty and FMCG dragged the market down. Talking about Nifty PSU was up 3.6%, PSU Bank was up 3%, Nifty Bank, if you see, is down 1.4%. Pharma, media and FMCG, if you see, was down ranging from 6.8% to 13.4%. But let's also look at the top gainers and losers. I would say that's an interesting point there. In the Nifty, if I were to talk about, you have BEL, Shriram Finance and SBI were the standout gainers when it comes to Nifty 50, while Trent, TCS and Wipro saw the sharpest cut. So overall, if you see, Trent was down 37% in the last 1 year, TCS is down almost 34%, and Wipro is down almost 30% in the last 1 year. ITC down 28%, and Tata Motors is down almost 25%. Talking about mid-caps, mid-cap was actually led by GE Vernova, Nalco and Hitachi Energy, and also, but KPIT and Syngene International, if I were to talk about, fell the most. Talking about KPIT Tech is down almost 50%, Syngene is down 42%, and Hexatechware is down almost 38%. And UCO Bank and Godrej Industries followed all those, companies. Now, talking about small caps, you have Ather, you have Force Motors and MCX, which has given a huge returns ranging from 163% to 128%, while Hindustan Copper and GMDC were up 121% and 113% respectively. But Cohen's Life, Reliance Infra, Blue Jet Healthcare fell the most when it comes to small cap losers, which was followed by Nugent Soft and Ola Electric. Talking about commodities, where silver, if I were to talk about, was the star, doubling in a year, of course, with strong gains coming from gold and crude as well. Talking about globally, if you see Japan's Nikkei was the best performing major index when it comes to the global indices, while US market, if I were to talk about, posted steady double-digit returns. So overall, yes, not a good year for Indian stock market when it comes to Nifty and of course the broader market. Let's see how FY27 will pan out for most.
Okay, thank you for that. In fact, Varsha, because this is going to be interesting. But the other sector that we need to watch out for is with regards to where the auto pack goes. Now, the auto sector will start reporting numbers as well on the 1st. Now, in terms of what we're watching out for, the demand trend seems to be supportive across segments. The two-wheelers have closed FY26 on a firm footing as well. And the PV momentum is expected to remain intact. It's the GST sentiment which has lifted the CV. Rate cut has lifted the CV sentiment, and the early festive season boost has been observed when it comes to tractor sales as well. So if you see in terms of numbers, we're expecting good year-on-year growth. Only it's Hyundai which is seeing a negative growth from the PV space, but M&M, Maruti, Tata Motors, all of them in that range of 14 to 28% on a year-on-year basis. Apart from that, if you see in terms of CVs as well, a good 10 to 20% kind of growth is what is spread between Ashok Leyland VECV as well as Tata Motors CV. And very lastly, if you see the two-wheeler space, that is also going to be interesting to watch out for, where you're looking at Bajaj Auto, TVS, Hero, Eicher, all seeing growth in that range of 10 to 30%. TVS 30-31% is the kind of uptake that is expected. So that quick view when it comes to the auto numbers that will be trickling in. Any trade there?
So yeah, Irel, I think within the EVs, within the auto space, what we like is the domestic themes of two-wheelers where the EV penetration is pretty strong. So TVS Motors is something which is on top of our recommendation list, followed by the passenger vehicles as well as the tractor side. So M&M is the other stock that we like. I think CV cycle was witnessing some recovery, but with the fuel prices going up, the supply chain issues, and I think economic question on the economic growth, the CV cycle could see some delay in recovery. So an Ashok Leyland or a TVA, Tata Motors CV, I think that is something one needs to wait and watch for. But in this correction, two stocks particularly that we like is TVS Motors and M&M.
Amit, coming to you, Nifty Bank is one of the top sectoral loser in trade, and this pressure is largely led by PSU banks in trade. Anything that you're finding attractive at the current levels that you would want to enter?
I would not want to enter in this pre-fall because most of these public sector banks, which were with strong gains some time back, have given up and broken through their key support levels. So I would wait for some sort of a consolidation in the overall index, in the overall markets, before picking up any of the banks from a pure trading and a short-term perspective, because they could be a very strong whips on either side and taking up our stop losses. So my recommendation would be to be a little circumspect and not enter into any of the public sector banks at the moment.
Okay, so an HDFC Bank seeing a mild recovery from the day's lowest levels as we speak. But in fact, let me thank both our guests, Amit as well as Siddharth, so much for joining in. Always a pleasure to speak to you, and enjoy your holiday tomorrow as well. But clearly, in terms of close, we are looking at a closure below that 22,400 mark, with cuts of nearly 2% coming in there. Bank Nifty as well, 3.6%, absolutely steady from where we started off an hour back. Broader markets, the cuts have deepened at 2.7% in terms of where the mid-cap index goes, as well as the small-cap index also, which is down in a similar fashion. Let's pull up the advanced decline chart as well, because that will tell you what's happened to the advances versus the declines. It has broadened quite a bit from where we started off to where we are ending right now, and that is what is indicated when you look at the VIX as well. Let's just pull up the VIX, because the volatility was quite high as we saw in today's session, the kind of gyrations that did come in. If you can just pull up India VIX on the screens, there you go. 3.6%. It has eased, which is slightly comfortable at the way we are ending in today. Let's look at the heat map in terms of Nifty 50, and then we'll quickly look at the contributors to see where that moved. clearly. Few of the other companies which came in the positive is a Reliance Industries, which is pretty okay, which did support to some extent. But Hindalco, Coal India, Tech Mahindra also, which was in the negative, has come into the positive. But major pressure continues from the financials. Your NBFCs, your banks are the ones which put pressure from a Bajaj Finance, SBI, Kotak, Jio Financial Services and Shriram Finance. Let's just quickly look at the contributors on Nifty 50 as well to just see the pressure points. There you go. HDFC, SBI, ICICI, your three major banking heavyweights on the back of the RBI move to curtail the rupee depreciation, and that has what has impacted the markets in today's session. No major support coming in. So clearly, the volumes are weak. It was expiry today as well. So you are seeing that truncated weak effect coming in terms of volumes in the markets as well. But absolutely a dismal day of trade is what everyone has watched out for in today's day. The question is going to be, how will this geopolitical move actually continue to impact the Indian markets from here on? Tomorrow is a holiday. Wednesday opening is going to be the crucial one to watch out for. But completely out of time. With that, it's a wrap on this edition of India Market Closed on NDTV Profit. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have fared today first. So viewers, Monday mayhem grips the Lal Street as markets see sharp cuts. The Nifty ends nearly 2% lower while the Sensex slips by about 1,500 points. The pain is much deeper in the broader markets with Nifty Mid-Cap 250 and Small Cap 250 tumbling close to 3% each. And looking at the sectoral picture now, it's showing no signs of relief as all the sectors have ended the day in red. Financials have dragged the most, PSU Bank ending as the top sectoral loser. And March has proven to be brutal for equities with Nifty slumping over 11%, its worst month since 2020 and also extending the losses to a fourth straight month. And broad-based selling has hit the mid-caps, small caps and all the sectors led by sharp cuts in the PSU banks and realty. Let's now look at how April, in fact, has traditionally, shaped up for the markets. April carries a strong seasonal track record, especially for mid caps and also small caps, which have largely ended the month in the green over the past decade. And sectorally, autos, metals, and real estate, and also pharma tend to outperform, while the IT remains, IT remains the clear laggard here. And the stock level also names like JSW Steel, SRF, M&M, Godrej Properties, and also Aurobindo Pharma have delivered, solid April gains. Historically, if we look at even stocks like Infosys and Alchem Labs struggle to keep the pace. In fact, let's look at Rupee now, which has slipped to a fresh record low, reaching the 95 to $1 mark for the first time. And this move comes amid heightened global uncertainty and also sustained pressure from geopolitics and also strong dollar. While the central bank remains watchful, currency markets stay volatile and the rupee continues to trade on the weaker side. And viewers, banks are seeing some relief from the RBI over its new $100 million net open position cap in the forex market. Lenders have asked for 3 months' time to wind down the large dollar positions and also want the rule to apply prospectively. Bankers warn the move could hit fourth quarter income and profitability, even as the RBI says the curves are aimed at stabilizing the rupee amid recent volatility. And we are Seagull India is in focus today as its arm wins a fresh highway order from NHAI. The company receives a letter of award for a 6-lane spur road project in Punjab valued at around 600 crores. The project is scheduled to be completed in about 18 months and also includes a 15-year maintenance contract. Next stock in focus is Eicher Motors as Royal Enfield expand its Guerrilla 450 range. So the company has launched the Guerrilla 450 Apex, which is a sportier version of the motorcycle with sharper styling and also more aggressive riding posture. The new variant is priced between 2.5 and 2.6 lakhs. Next counter in focus is Dredging Corporation of India, which is laying out an aggressive growth roadmap. The company has said that it aims to triple the revenues from FY25 levels and also double the annual turnover to about 3,000 crore rupees over the next 5 to 10 years. And the strategy focuses on higher value dredging and reclamation work, expansion into the niche segments like inland waterways, overseas opportunities, and also a major fleet modernization push to lift the capacity and also productivity. Next counter in focus is RailTel. After it has received a letter of intent worth about 440 crores from the Center for E-Governance, the company is selected as a system integrator for Kisban 3.0, which is a Karnataka statewide area network project. And this project aims to modernize and also overhaul Karnataka's digital network and is also scheduled to be completed by March 2031. Next counter in focus is Gujarat Fluorochemicals. Its arm GFCL EV has raised about $80 million from a global marquee investor, taking the total funding to around $130 million. And this follows an earlier $50 million of investment from the IFC. So the company now plans to use the funds to scale up the battery materials manufacturing, and also has lined up a 6,000 crore of investment over the next 4 to 5 years to really support the growth in electric mobility. And US paint stocks are in focus as distributors flag another round of price hikes. Berger Paints announces its second price increase in a month, with prices set to rise by 5 to 10% from April 9. And now this follows the first phase of hikes that kicked in from March 25th. So Asian Paints is also hiking prices in 2 phases in April, while other paint makers, many they may follow amid higher raw material costs and also supply disruptions linked to the Middle East crisis. And there's a big push coming in for India's defense sector. The Defense Acquisition Council clears defense orders worth about 2.4 lakh crores, covering the Army, Air Force, and also Coast Guard. So the approvals include air defense systems, ammunition, artillery guns, communication equipment, and also surveillance drones. So the government also clears 2 smaller contracts, a missile system deal, and also an aircraft servicing with Boeing India Defense, as it steps up the efforts to strengthen capability and also cut the import dependence. And where sugar stocks are in a sweet spot as global supply tightens, Brazil, which is the world's largest sugar exporter, is set to cut shipments in the new season as mills divert more cane towards ethanol amid high energy prices. And this is pushing the global sugar prices higher and also turning the spotlight on companies. So stocks like Dwarke Sugar, Mavana Sugar and Sri Renuka Sugar see strong buying, while Balrampur Chini and Triveni Engineering also attracting interest. And viewers, aluminium stocks are rallying on fresh supply fears from the Middle East. So, 2 key Middle East producers are hit by Iranian attacks, raising concerns over the global supply disruptions. And Emirates Global Aluminium reports significant damage, while Aluminium Bahrain is assessing the impact. So, with the region accounting for nearly 9% of global aluminium supply, prices are firming up, lifting the stocks like Hindalco, Nalco and Vedanta, and also Rain Industries. In fact, KNR Construction is in focus after it secures a fresh order from NHAI. The company has received a letter of award worth about 1,700 crores for a 4-lane highway project spanning roughly about 80 kilometers. And the project has a construction period of around 2 years. And this is followed by a 15-year operation phase, adding long-term visibility to the revenues. So KNR's order book now remains healthy at nearly 8,900 crores as of December quarter. Next counter in focus is Urban Company, which is seeing breakout growth in its Insta Health vertical. So the platform now clocks over 1 million bookings a month, with daily orders touching around 50,000 in February, making it the fastest scaling segment. So Insta Health offers quick turnaround services like cleaning, dishwashing, laundry and cooking, with fulfillment in just 10 to 15 minutes. So Morgan Stanley says that growth remains strong, though near-term losses are rising even as the long-term path to break even stays intact. Next counter in focus is NTPC. After its board clears a major investment push, the company approves about 5,800 crores for a battery energy storage system with a total capacity of nearly 5 gigawatt hours. So NTPC also approves additional equity infusion into Meja Urja Nigam, which is its joint venture with Uttar Pradesh government. And for the next phase of the Meja thermal power project, with this, NTPC's total equity commitment to the JV touches around 5,000 crore rupees. Next counter in focus is Thermax, as its arm secures a large boiler package order worth about 1,600 crores from Anupur Power Project. So this order is for an 800 megawatt ultra super critical thermal power plant, and Thermax will handle manufacturing, supply and also oversee the installation and also commissioning. So management remains confident and reiterates that it is bullish on orders, highlighting strong demand momentum. Now, talking about FY26 viewers, Indian markets have delivered a choppy, stock-specific year. So benchmarks have slipped nearly 3%, dragged by IT, FMCG and realty, while metals, autos and defense have outperformed. Leadership has stayed narrow, as PSUs and commodities have surged. Meanwhile, broader markets have seen extreme dispersion. Commodity prices and also select global indices remain resilient overall. And the government is actively working to minimize the impact of rising aviation turbine fuel prices on airlines and also passengers from the next month. Now, top government sources have told NDTV Profit that higher crude oil prices will push up the ATF cost, and also the centre is in discussions with all the stakeholders to find solutions. So the Aviation Ministry will reach out to states urging them to reduce VAT on ATF, and Aviation Minister is likely to write to Chief Ministers, while the Ministry will also write to State Finance Departments. Special focus is on states like Maharashtra and also Delhi, where ATF prices at metro airports are already higher. So the government is also considering relief for passengers by lowering certain airport charges, and also will hold discussions with the airport operators to review the levies. And viewers, the Lok Sabha has passed the Insolvency and Bankruptcy Code Amendment Bill 2025. So the bill introduces 12 key changes to the IBC, including measures to speed up the admission of the insolvency resolution applications. Finance Minister Nirmala Sitharaman has credited the IBC for significantly strengthening the banking sector by improving the recovery of the non-performing assets. And she said that more than half of the NPAs have been recovered through the insolvency process, and companies coming out of the resolution are showing better performance and also governance. So this is the 7th amendment to the IBC since its enactment in 2016, and the bill is expected to make the resolution process faster and much more efficient. Because the government has allowed the distribution of superior kerosene oil under the public distribution system in 21 states and union territories. Now, these include Delhi, Uttar Pradesh, Gujarat and Rajasthan. So the decision, effective immediately, comes in view of the prevailing geopolitical situation affecting the global energy supplies. Now, kerosene had earlier been phased out in these areas under normal policy. So the Ministry of Petroleum and Natural Gas has permitted the designated fuel stations in these kerosene-free areas to store and sell, for household cooking and also lighting, needs. So up to 2 fuel stations per district can stock up to 5,000 litres, and this arrangement will remain valid for 60 days or until further orders. And the Ministry of Electronics and Information Technology has approved 75 applications under the Electronics Components Manufacturing Scheme, that is the ECMS. So the approved projects have a combined investment of over 61,671 crores, which is exceeding the scheme's target of 59,350 crores. So the key beneficiaries include Dixon Display with 1,100 crores for display module sub-assembly, and also Sirma Strategic Electronics with 588 crores for laminates and flexible PCBs. So other major players such as Loham Cleantech and also Indomim and Vishay Components have also received approvals, and the scheme also aims to build a strong domestic ecosystem for electronics components manufacturing and also reduce the import dependence. So this development is expected to boost the local production and also create jobs in the sector. And the Finance Ministry has flagged rising transaction failures in the UPI ecosystem and has asked the NPCI to step in and also review the performance of the banks. So the ministry is particularly concerned about the higher failure rates at smaller banks amid sharp surge in the UPI transaction volumes. So NPCI will now review the individual bank performance and also recommend corrective actions, including infrastructure upgrades and also better load management during peak hours. So the government views reducing the UPI failures as critical to maintain the user trust and also support wider adoption of digital payments, especially in semi-urban and rural areas. Now, banks have been asked to work closely with the NPCI to improve the success rates. And the National Stock Exchange has approached its existing shareholders to participate in the offer for sale as part of its upcoming IPO. Now, NSE, which has around 191,000 of shareholders, they've sent expression of interest forms seeking their willingness to sell the shares in the OFS. Now, the IPO will consist entirely of an offer for sale with no fresh issue component. Now, shareholders must have held shares continuously since June 15 of 2025 with fully paid up and also unencumbered shares to be eligible. Now, NSE will review the EOIs and also finalize the eligible participants. Now, the exchange plans to file its draft red herring prospectus with SEBI by the end of May or early June 2026, and participating shareholders will not be allowed to buy shares in the IPO, and also remaining pre-IPO shares will also face a 6-month lock-in period. And US Chinese AI company DeepSeek has experienced its longest outage since launch as its popular chatbot remained down for over 7 hours. And the major outage started in the early hours of Monday and also lasted 7 hours and 13 minutes. Users have reported repeated server busy messages and also complete unavailability of the service. And this marks the biggest disruption for DeepSeek, which gained massive popularity earlier this year as a low-cost alternative to Western AI models. Now let's look at some national news viewers. Bihar Chief Minister Nitish Kumar, the state's longest serving CM, has resigned from the Bihar Legislative Council, and he has submitted his resignation today along with another JDU member, Nitin Nabin. And this move comes after Kumar was elected to be Rajya Sabha, person on March 16. And under the constitution, a person elected to the parliament must resign from the state legislature within 14 days. Now, Nitish Kumar had filed his Rajya Sabha nomination earlier in the presence of Union Home Minister Amit Shah. So JDU leaders described the resignation as a constitutional requirement and also said that it will not lead to any sort of immediate change in Bihar's leadership. And a senior Maoist leader, Chelluri Narayan Rao, alias Suresh, has surrendered after spending 36 years underground. And he was a central committee member of the CPI Maoist and also secretary of the Andhra-Odisha Border Special Zonal Committee. So Rao has surrendered along with 8 other Maoist cadres in Vijayawada, Andhra Pradesh today. So the group laid down 19 weapons before the Andhra Pradesh DGP. Under the state's surrender policy, Rao will receive 25 lakh rupees, while the others will get between 1 to 5 lakh rupees each. And police has said that Maoist activity in Andhra Pradesh has now been reduced to 0. And an 854-page inquiry report on the Ghatkopar hoarding collapse in Mumbai that killed 17 people has held several officials responsible for the gross negligence, and the committee has primarily blamed then Railway Police Commissioner IPS officer Kesar Khalid and also retired BMC License Inspector Sunil Dalvi. Now, the report also holds the hoarding company owner Bhavesh Bhinde and also former Railway Police Commissioner Ravindra Shisve accountable. So according to the findings, the officials have acted in collusion and also illegally granted permission for the oversized hoarding in complete disregard of the safety rules. So the report has been tabled in the Maharashtra State Legislature. And as the Middle East conflict enters its day 30th, Iran has confirmed the death of senior Revolutionary Guards Naval Commander Ali Reza Tangsiri. So he succumbed to severe injuries from an Israeli airstrike days earlier in Bandar Abbas. So Tangsiri, who's a hardliner, responsible for operations near the Strait of Hormuz, was one of the highest-ranking Iranian officials killed in the conflict. And the US and Israel continue airstrikes on Iranian targets while Iran has carried out retaliatory attacks on Israel and Gulf states, and also the death toll now has crossed 3,000. So the Houthis have now entered the conflict by launching missiles at Israel, raising fears of renewed attacks on shipping in the Bab el-Mandeb Strait, which is a critical route for 12% of global trade. And Pakistan has offered to host talks between the United States and Iran to help end the ongoing month-long conflict. Foreign Minister Ishaq Dar has said that both the sides have expressed confidence in Pakistan to facilitate the meaningful dialogue in the coming days. The announcement follows a quiet diplomacy and also meetings with envoys from Turkey, Egypt and Saudi Arabia. So, however, Iran has issued strong warnings with its parliament, speaker saying that US ground troops would be set on fire if they enter the region. Iran has rejected a US 15-point ceasefire proposal and also prepared its own 5-point counter proposal. And US World Trade Organization talks at the 14th Ministerial Conference in Cameroon have ended without a deal to extend the long-standing moratorium, on customs duty on electronic transmissions and the e-commerce tariff ban in place since 1998 and also renewed every 2 years will now expire at the end of March 2026. So efforts by the United States and others to secure a longer or permanent extension has failed due to lack of consensus and also time constraints. Now, WTO Director General has said that unfinished business could be taken up in Geneva. Business groups have warned that the lapse, risks creating policy uncertainty and also new tariff barriers on digital services, which now account for a significant portion of global services exports. And India is tightening its security framework with new rules set to ban the sale of Chinese CCTV cameras in the country from next month. So the move is aimed at addressing surveillance and also data security concerns with stricter norms for sourcing and also deployment. Now, companies will now have to comply with revised standards, marking a significant shift for the surveillance equipment market. And thieves have stolen a truck carrying 12 tons of Kit Kat chocolate bars in Europe. Now, the shipment containing over 4,13,000 bars of Nestlé's new F1 line was en route from a factory in central Italy to Poland when it was stolen on March 26. So, this truck and its contents remain missing. Nestlé has confirmed that it is working closely with police and also supply chain partners to investigate the incident. And the company has said that consumer safety is not affected and supply remains stable for now. Those shortages are possible ahead of Easter. And viewers, let's look at some sports news now. Pakistan pacer Shaheen Afridi is facing tough questions after a ball tampering controversy with former cricketer Ramiz Raja openly criticizing the incident. So this episode has sparked debate over discipline and conduct on the field, putting the spotlight on player accountability. So Afridi's response and any further action will now be closely watched. He was penalized with 5 runs penalty. And Rohit Sharma is turning back the clock with a blazing half-century in the clash against KKR. The former India T20I captain, now a one-format international player after retiring from T20Is 2 years ago, carved out a sensational innings in Mumbai's season opener. Not only did he register the fastest IPL 50 of his career, but he also went past one of Virat Kohli's most elite records in the tournament. And viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Market feels the strain of Middle East war remains volatile in the month of March. Nifty falls more than 11% in March. Nifty closes in red for the fourth consecutive month. Worst monthly performance for Nifty since COVID in 2020. It's the worst performing fiscal year for Rupee in over a decade as the last day of trading ends for this financial year. Rupee hits a record low of 95 rupees 11 paise against the US dollar. Rupee continues to slide despite RBI's $100 million cap on banks' overnight dollar exposure. Middle East war sparks crude volatility. Brent surges above $115 a barrel. WTI crude crosses $100 per barrel as war enters fifth week. Lok Sabha passes the Insolvency and Bankruptcy Code Amendment Bill 2025. Finance Minister Nirmala Sitharaman credits code for strengthening banking sector, framework for group insolvency and cross-border cases proposed. In a sharp warning to India's electronics manufacturing industry, Union Minister Ashwini Vaishnav says that government may halt approvals for component PLI under ECMS as electronics industry falls short on design Six Sigma standards. Government weighs measures to cushion impact of rising jet fuel prices according to sources. The Civil Aviation Ministry is holding talks with key government stakeholders to prevent a significant increase in airfares. Amid war in Middle East, centers move to address LPG shortage concerns. Government gives nod for kerosene sale at select petrol pumps for 60 days in 21 states. Government cracks down on UPI transaction failures. According to Finance Ministry sources, NPCI told to step in and review banks' performance to reduce failures. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and straight away to the flashes on your screens. It's a big set of numbers when it showcases the macro data really coming in. So February IIP data is out. Industrial output rises 5.2% versus the estimate of a little over 4%. Industrial output rises 5.2% versus 4.8% that it had seen in the month of January. Now, electricity production, that rises 2.3% YOY. Mining production rises 3.1% on a YOY basis. So there is a substantial increase when we look at the mining sector increase when it comes to the industrial production. When we talk about the manufacturing sector, the output growth at 6% versus 2.8% YOY. So these are important increases that are seen in the manufacturing sector as well. Industrial output rises 5.2% versus the estimate of 4.2%. that was seen. So these are the numbers really flashing on your screens. Industrial output rises 5.2% versus 4.8% in the previous month. These are important figures. It showcases the industrial production as well as also the health of the economy. Let's take it straight across to some of the experts to put some insight into the numbers that are really flashing on our screens. Gaurav Sengupta, Chief Economist at IDFC First Bank, and Vivek Kumar, who's the economist at Quantico Research. They both join us here on NDTV Profit. Vivek and Gaurav, it's a pleasure speaking to you on NDTV Profit. Gaurav, first, your thoughts on the IIP data and the headline figures.
It's a good number. It's better than our expectation, and it's also quite it's spread broad base. It's across sectors. You've seen manufacturing, intermediate good production pick up. There was an expectation that electricity production should pick up. You're having a slightly warmer season, and also this particular month was not impacted by any of the supply side disruptions. But the data just shows that the Indian economy was on a very strong pick up in terms of domestic growth recovery, which was taking place since the second half of FY26, and it's aided by substantial support from the monetary policy side, with RBI policy easing, liquidity infusion, then the GST cuts, which has helped the consumer side. So, and the reflection on better production data is also visible. At least till the month of February, we had seen broad-based pickup, not just the IIP, but other indicators also, like freight movement, etc. Even the consumption indicators for the month of February were showing very strong pickup in urban-rural demand. So, better than expected. It showed that the growth momentum, at least till February, had held up. We'll have to now watch out for the month of March, where we could see some impact of the West Asia crisis, the higher input costs, some restrictions on the usage of supply of gas, especially for commercial utilization, and its potential impact on production activity for the month